Welcome, everybody. This is Wells Only. Currently by myself, finishing up the charts, but we will start talking right away, and I will share my screen in the meantime so you guys have something to look at. Please give me a moment. Long day for me. I am actually still suffering from the Fed wire outage, believe it or not. That actually affects my work directly. HEX.LIVE has joined us. What's going on, brother? Welcome aboard.
What's up, my brother?
Doing well, man. I was just telling the people that I'm actually still suffering from the actual Fed outage that we experienced yesterday. And we actually have a special guest today. He's a very low-key individual. You'll see him on Twitter. Let me get his.
Makes some YouTube videos too.
Yeah, he makes some videos too.
He makes some cool tools too.
Yeah, this guy is a very special guest. He's very low key, which is what's cool about him, because I followed him for a while, and one time he just threw some chart up, like just a random link, didn't say anything with it, and I was like, what the hell, who's this guy? His Twitter handle is Tanto Nomini. It's in the show notes. I'm pretty sure I'm pronouncing it wrong. His website is dipcatcher.com. Just as it sounds. Check him out, guys. Seems to be pretty smart. I'm pretty sure he is. And welcome aboard, dude. Glad to have you on.
Hey, thanks for having me on.
For sure, man. Thank you for making the time to join us tonight.
Yeah, man. Thanks for showing up, brother. This is gonna be cool. I've been waiting all day.
I love doing these things, so I'm so happy to hop on. I try to do my, get on my channel, every couple of weeks. Earlier in the summer, I was definitely doing a lot more, but yeah, I love just getting on and sharing what I've learned. It's funny that you say I'm low key. I never heard myself described it that. I like that.
Yeah, well, the thing about it is you kind of you don't really cause a lot of ruckus. I'll talk a lot of crap, but you kind of just post your work and you keep it moving, man. And it's pretty cool what you post. It's not like it's nonsense. It's actually useful information. Which I think the community needs to be aware of, because that's kind of the stuff people just we're just out here trying to share information that's useful and that's relevant and that helps people make the right decisions, and that's really what it's about. And that's kind of why me and Axis wanted to have you on the show. Hopefully we can just build something for the community to just constantly have something to at least latch onto in terms of what is actually going on with the data. What does the data say? What does it mean? Because it's cute to look at a chart, but what does a chart actually say? Right? Like, like to me, it's always straightforward, right? Because I made it, but everybody else looks at me like, what is it saying?
Yeah, that's right. You're the one that's
making it
right over in your head as you're like iterating through and like getting each step closer to something that you can share and actually make use of and use to help you make decisions. You went through the iteration, the reader on the first time, they didn't go through the mental math, that you did to go through.
Correct.
Right.
Just to make sure that it even makes sense, because you don't really know.
Yeah, man. So give me quick background, like what's your story, and just for my audience, because I'm going to be sharing this. Sure. Like a lot of people, this can be their first time. Just kind of give me the quick lowdown on, I'm familiar with your work and what you're about, but maybe for my audience that will be listening to this.
Sure, not a problem. And I would appreciate it after you could do the same for me, for my audience, which is really our audience, right? I mean, this is what's great, right? Like the Hexagon community is so deep that we talk about each other's work like if it's really separate when it's not. You know what I mean?
Yeah.
It's kind of like a weird reality that we live in, because the Hex community is so big, but that's because it's so good, right? Mm-hmm. Like, I mean, in order for everybody to be on everybody's show, like literal 1-to-1 rotation, it would probably take a whole year.
Yeah, there's so much content, and it's always like really relevant. They're like, you can't even view it all.
No. I used to try to keep up with it, and I really seriously had to quit because now I'm streaming, so now it's impossible for me to, realistically keep up with it because I have to work, I have to do all the regular life stuff that unfortunately doesn't stop.
Yeah. And also it's good that people are kind of, producing these ideas on their own, because like when you listen to just kind of the various people, like a lot of people come to the same conclusions in different ways.
Right.
And it's good to, to kind of, not be siloed, but like, just, you don't need to feel bad about not listening to everything, because the things that people are saying on their streams, you could produce that idea, if you just kind of, if you're creating, and you're, putting your ideas out there. And so there's never any hard feelings for anyone ever missing anyone else's streams. Cause like you just, and
right. No, I mean, and that's kind of like the funny thing, right? Like the first time.
I'm still trying to figure out how you pulled this off. Like, by the third video, you already were having like, I don't know, a decent sum of people showing up. I was like, dude, like, we've all been out here struggling for years. I've been trying to be on Twitch and stuff, and I'm like, what the?
Look,
how did you pull that off?
I don't know.
You like search engine optimization,
you know what it was?
master over there, or what?
You know what it was, dude? I spent a couple of days actually trying to stream. Like the first time I tried to stream, I think, I tried to stream on Twitch 2 times and it failed miserably. I don't know what it was. But it just didn't work, man, like at all. I tried like 2-3 days in a row. Yeah, it was very brutal. So I think
it reminds me of my first time skiing. I was probably like, I don't know, 4'2", 180 pounds.
I hope you didn't eat any branches, bro.
Couldn't figure it out the first day. Second day, it was like a gift from God. I just like stepped out there and it made sense. It was the weirdest thing.
That was funny. But here's the thing, right? Like, like it was weird because I was just trying to share these charts, and I was just trying to explain to people like what was going on, because people just, and I get it. Like now I get it more than then at that point in time, because I didn't really understand the crypto crowd of today. Right? Like I that's kind of the main reason that I'm making all this stuff, because I really thought
things have evolved. I feel like there's actual good energy here. I think
it's
HEX and HEX
it's a completely different dynamic. It's a completely different dynamic.
Well, and it might sound simplistic to say, but like just even the ease of all the added on ramps and all of the added infrastructure around the Bitcoin ecosystem has like allowed for information to flow easier and more simply to people, and so that makes people more receptive, and then price moves faster, and it's just like the network effect takes full steam, right? It's like an engine that gets going finally
100%.
Until it blows up, and then we have to go through the rebuilding process, which is like one of the reasons why I wanted to have our guest on today, was because he's so good at building cool ideas. He's able to take abstract mathematics and information and structure it in a way that anybody can just look at a chart and be like blown away. And you both actually have that ability, so I thought it was going to be cool to basically let you guys go at it and just kind of like tear each other's parts apart and just like talk about them, and I just kind of sit back and listen, because I think it's going to be pretty cool.
Yeah, I mean, it's going to be a good conversation. Yeah, it's definitely going to be a good conversation, because we're going to talk about like really basic stuff, right? But it's not basic, because at the level at which you have to understand, the most simplest things kind of are what make the way I view things a little more sophisticated than the average person, because I don't just view them. I sit there and I think about them, and I try to understand exactly what the picture is showing. Right? Because we all have the ability to look at a picture and kind of ascertain what it's saying. Right? And I guess this will be where I'll try to like start and go into like my background. And my background, I guess, is kind of unique, but I don't really know, because again, really like my main thing has always been like I've always hated school. I've never found any utility in it. I still do not, and I have a math degree. So that should say anything to anybody that's a parent out there. Be wary of what school you send your kids to and what they're actually learning, because they're really just wasting their kids' time is really just being wasted. There's a reason kids hate school. It's not, I mean, you were all kids, 20 years ago. You know what I mean? Like, and that's kind of like, that's also like another reason I've also stepped out into a quasi-public arena. My educational background is essentially moot. I didn't care about school when I was going to school. I'm from the inner city in New York. And in New York, or pretty much, I'm sure any inner city, I'm sure New York is not special in any which way. The education system is just trash. There's really no other way to put it. Public schools are trash, right? I mean, they've only gotten worse.
Why do you think that is? Like, why is the public school like what causes that to be, in your opinion?
Well, so the way I view it from my experience is that their intention is strictly to produce a specific type of individual. That's kind of why they amass you in a classroom with a person that isn't really a teacher, but a person that they deem qualified to teach, right? I mean, I'm pretty sure in 2021, we all know, and if you don't, you're about to learn this, that everybody learns differently. Everybody can't just sit in a room and learn by some person writing on a chalkboard talking. It just doesn't work. Like, that's just not realistic. So, it's like, for me personally, like, I had no interest in math, believe it or not. Like, I've always been good at it, right? Like, and here's the thing, most people are good at what they're good at, but they don't know it until they come across it.
That's right. Yeah.
And that's something that, it's hard to understand until you just sit there and think about it.
What got you into math?
So this actually goes to me when I started school. When I started school, I was already an adult. I was like out of the military already. I was trying to figure like life out and stuff. And for me, I've always wanted to be an engineer. My original intention was to be a mechanical engineer, because that's kind of like what I'm good at, just what I like, whatever. And it just did not work out that way, because the school I went to only had electrical engineering. So I started with that instead, and I just didn't have the quantitative background. Like, I didn't know. Like, I knew I was good at math, but I didn't know what I needed to know to do that. And interestingly enough, when I was in the military, I used to do power distribution, power transmission. Like, I was a generator mechanic. I was a wheel vehicle mechanic. I did a whole bunch of stuff. And when you're a mechanic, oddly enough, this is going to sound weird. Oddly enough, when you're in the military, at least at that point in time when I was in the military, and you were a mechanic, you weren't just a mechanic, because it was just a different time. You were whatever they needed you to be, because there weren't enough bodies. So not only was I also a mechanic, technician, and all of this crap while I was in the military, but I was also, I also had to do combat related stuff. So, I had to learn a lot of different ways of thinking very young. And so that's also led me to like try to understand what the hell we were doing in the desert. And that is what pushed me towards finance initially. But this was like after high school. Like, I joined the military straight after high school. So I was 18 in Iraq trying to figure out why I was there. You know what I mean? And it's, when you find yourself in that kind of situation at that age, I mean, it's going to be a wake up call to some degree. And I'm pretty sure I'm not the only person that probably felt that way at that point in time, but I'm the only person that really sat there and spent years thinking about it. And it's to the point where I know exactly what the federal government is doing at all times and why they're doing it. And it's because I've spent years connecting dots. It's like being in jail, right? When you have nothing else to do, what else are you going to do? You're going to sit there and figure shit out. So when I was in the military, I had nothing else to do. Because when I was in the military, it was during the time where they were sending people to all over the Middle East, year after year after year. I happen to be lucky enough to not get sent back out there back to back after 2003, because I was out there when Iraq first started. And there were a shit ton of people that got sent to Afghanistan right after Iraq. I mean, this, of course, is not going to be common knowledge, but these are just the facts. So this is what was happening back in 2003, 2004, 2005 that nobody's, going to be aware of because they weren't in the military. Why the hell would they know that? So I get that entirely. But, all of those things are what led me to literally where I'm at today, which is what's freaking crazy, because you wouldn't really think all of those occurrences would do that, but that's life, right? Like, it literally does the craziest things. And that's what's so cool, right? Because it's led me to sitting here on a YouTube, like, look, I'm not a public type of person. I'm an inner city guy from New York. I still consider myself like a Bronx person. Like, I'm just not, right? Like, it's one thing to sit out here and try to help people understand something, and it's another thing to just like, do something like this consistently, right? Mm-hmm. Like, people now expect me to come out here and educate them in some way, shape, or form, which is actually cool, right? Because I've always wanted to, like, that's what I would like to do, is like retire as a teacher or whatever, but not in this fashion. But then again, will there be any higher education systems, right, in the future? Because as the way I see it, no, I'm not sending my kids to no college. I have no intention. Mm-hmm. Like, to me, college was a complete waste of time.
Where'd you go to college?
I went to St. John's University, and then so let me start this over. So I went to the University of Scranton and St. John's University.
Scranton what?
Yes. Don't tell me you went there too.
No.
Okay.
You ever see The Office?
Yes, of course. It's a great show.
What? The Electric City.
Yeah.
The Electric City.
It's the show, yo. And look, dude, it's a great show. I watched it a million times. I will watch it every time. In fact, I just stopped watching it. I just watched it probably a couple months ago because I knew they were going to take it off on Netflix.
I know, probably, dude. I bet no one watches that anymore. Like, who? Like, I don't know. I mean, even though when that was on, like, that was just like almost like table stakes. Like, yeah. I never saw on TV, but the person I live with does, and right. And like literally, that's just like the default. Like that's like a screensaver for like Netflix, pretty much.
Yeah,
you know what I mean?
The Office is the bomb, man. The Office is the bomb. Who does?
So you studied math at Scranton?
No, this is funny. So I started doing electrical engineering at Scranton, and that's where I realized that I sucked at math. At least sucked to the point that I didn't have the ability to do what I wanted to at that point in time. So it put me in a precarious position in which adults happen to find themselves when they realize they're not prepared for the real world.
You figured you had to make it happen, and like,
yeah,
like this, because the school. I mean, like, kind of where what got me in, like, what thrust me into this whole world is like, so I got real into crypto because I was working on a startup a couple years ago that I started during college, and the start, it was like a 3D photography platform, because I went to University of Arizona. I studied optical engineering and math, and my focus was optoelectronics. So it was like an electrical engineering degree as well. And so my like background and I started as a business major. I went in going into business, but when I got there, I was like, okay, I should probably switch to engineering because, like, I don't know what I'm going to do in business. And so I switched into optical engineering, which, like, they said when I went in, they're like, when I went to go and do the switch, they thought that I, like, when you go in and like fill out the paperwork of like, okay, what major you're switching from and to,
right?
Like, they thought I made an accident on my application. They thought I was trying to switch from optics to business because, like, nobody switched from business to optics. It was always the people that couldn't do the math in optics. They were switching to business. And so I was like, no, I'm going to do optics because Arizona has one of the best optical engineering programs in the world. It's like world class for for optical sciences and engineering. Part of it,
Isn't Texas Instruments down there, something like that?
Yeah, they have they have a lot of proving grounds in Arizona, but I didn't know.
No, well, here's the reason why. So one, just for whatever reason, University of Arizona, they're the ones that produce all of the telescopes that go in. Like the Hubble telescope was manufactured, was like fabricated. Like the optics in the Hubble telescope were fabricated at the University of Arizona. Underneath the basketball stadium, they have a giant mirror and lens fabrication facility for like space grade optics.
Wow.
Like U of A is just like, it's like mainly a party school. Like when I was in high school, I didn't know, like I was always smart. Like I've always been, able to just like do, understand, I credit to my sister. She taught me how to read when she was like 4. I was like 2.5, like 3, like reading.
Wow.
And that's because my sister was learning how to read and she would always teach me. Right. So like she just kind of got me, and she's learning math. She was teaching me the math. And so like I'm very lucky to have, such an awesome sister who really just like taught me all these things. And, just growing up, and so I was always like, really smart, but I was like never like in high school, I was not like, no one would have said I was like a great student. Like I did okay, but like, I was not like, I wasn't in AP classes. I was in regular classes, getting, getting A's, getting B's, that whole thing. And then I went to Arizona because like, I got into some other schools, but, Arizona, I was getting paid to go there.
Right.
I got like a great scholarship. And so I was like, you know what, I'll go to U of A. Didn't really know what I was going to do. Had no idea with, where I wanted to be or what I wanted to do. And so I just kind of, went with it and just kind of saw, tried to figure out what was going on. And so I ended up in optics, and it was really cool because like one, it was just like a really awesome field of study.
Right. It is. It really is.
Like, when you're thinking about light and, it's more interesting than like
it sounds.
Yeah, because like, you can kind of like visualize it, and like there's these really like, awesome like effects that come from it. Whereas like when you're doing other types of engineering, like there are things that are cool, but it's not like something so like, I don't know, there's something very tangible about light, which is funny because light, you
can't touch it. Yeah. No, it's so cool. Dude,
understanding like the physics.
I sit here, I live in a corner apartment, and I'm sorry for cutting you off because it's so interesting because I just have to say this because I live in a corner apartment. I live facing northeast, right by a river in the Bronx. The sun rises in the east. I have all kind of light hit me first thing in the morning. So this is literally like the first topic I think of every day. It's insane. No normal person does this, right?
Yeah,
like, we're some weirdos.
Light is energy. Like, light is like, and so it's like it's very fundamental in everything.
Oh yeah.
Like, life, like without light, there would not be life. And so like, and so, I was always just like, very kind of intrigued with this, like this field of studies, it's a science of light.
And it's not even easy. It's not even easy. It's kind of
really just like the science of waves. And I was able to, stick around it because like, I was able to, I figured out a good way to learn the math. Like in this case, it was like very difficult, like calculus, complex equations, because everything's in the frequency domain.
Trades, baby.
You use things like Fourier transforms to go from like the spatial domain where you're measuring in, millimeters. You go to the frequency domain where you're measuring in 1/, millimeters, like periods per millimeter.
Right.
And so like, you have to, understand like how to like, really what it is you're flipping your perspective. Like rather than
hold on, is it kind of like measuring time in
millimeters? What'd you say?
Is there like a time element to that? Like you're measuring like
yeah,
rather like literally, you know what I'm trying to say?
Yeah, rather than measuring, like rather than like
the space between like the length of a wave. If you're looking at the side of a wave, like a sine wave, it's like you're measuring like the amplitude of the wave, right?
Yeah, exactly. Like it's amplitude, it's the period of the wave, it's the wavelength, and so like that was like the core premise that I like behind optical engineering, which I studied in school, is that like to understand, like to actually perform the math and to like really like understand what's going on, you had to go from the spatial domain or the temporal domain where you're thinking in millimeters or in seconds. And you need to flip your perspective and think in 1/2 seconds, which is like temporal frequency, like how many beats per second, or how many, wave cycles per millimeter. And so you have to like, like for the field of study that I did, that I was like really into, and I was doing some really awesome like optics related products that I was working on just as part of this, just what I was doing, through the school and through like internships. But like optics was this like awesome field of math that, in order to understand it, it requires you to flip your perspective in a way that it's not like your natural like way of perceiving the world, because we think in space and time. We don't think in one space. Like we measure. I'm 6'2". I'm not 1 over. Like it's like our natural observation is in like the spatial. Like we live 100 years. 24 hours. In a day. Like we live in this like temporal and like spatial space. But like in order to understand optics, you have to go into it's called the frequency domain. Right. And so like it's all about like just changing your perspective. And I don't work in that stuff anymore. Like right now, like what like all the optics stuff led me to like I left the University of Arizona during my 5th year. I was working on a virtual reality photography product, because one of my internships I was working on 3D camera systems, like these aerial 3D cameras. And
yeah, it reminds me of like LiDAR or something. Every time I hear that.
Like similar techniques. And
right.
I was starting to get into like image science, like 3D imaging systems.
Right.
Like, I thought I was going to go work at like Apple on their camera. Like, right. I was kind of going down that path. And but during my senior year, I was doing this entrepreneurship program that the business school offered. So I literally like, it was so funny, because there were like 2 different capstones. There's like the optics capstone, and there was the business school like entrepreneurship capstone. So what I did was I combined them into one. So I was in like 25 units during my like senior year, and I combined these 2 programs where I had some business students helping me like come up with like business ideas around like 3D cameras and like virtual reality content sharing. And then I had an engineering team that was helping me build this 3D camera. Wow. And so I was doing this, like that was my senior capstone, was this like 3D camera thing. Yeah. And when I finished school, I like withdrew from my senior year because I was like getting some like prize money. And then after school ended, I started raising money, and I was able to raise, a couple $100,000, and one of the groups that financed it was a 3D virtual reality video and photo sharing app. It was fucking awesome. Like literally, it was like world class. It was like a world class VR app.
Yeah, it sounds pretty crazy, dude. I haven't seen anything like that.
Yeah, it's awesome. Like, we're gonna bring it back one day. But while I was raising money for that, a big problem we had was we were trying to get people to create content on our platform. We like fully launched this app. We like raised money. I was building this VR app. We had these 3D cameras, partnered with this company in Taiwan with the cameras, and like we had we raised like 90,000 from angel investors, and then an additional like 50,000 from it was a crypto company called OST, and so they had launched an ICO that was for like they were building a platform for people to issue currencies through like a consumer app. And so since we were building like a content sharing app, we were trying to figure out how people could monetize. And so like, because we had this like awesome like 3D virtual reality photo and video app, because like that was what I was doing in optics, was like, stereoscopic imaging, like, like depth sensing. And so like I built this like mobile virtual reality app. You download it on your iPhone, you put your phone in these VR viewers, and you can just like experience this awesome 3D content, which the app, we took the app down a couple years ago, but this thing was awesome. And once Apple rolls out some augmented reality glasses, like, I've got like loads of, like, aside from the crypto stuff, like I've got loads of products around like 3D imaging, like 3D photography, like.
Yeah, is that something that you want to pursue as the Mad Hex gains will start rolling in?
Not really. Like, honestly, so my startup got funded by a crypto company. And so I was,
I could see where this is going.
like it was called SimpleToken, and so I was getting paid for like my startup was getting, like, our only source of income was every month we got a grant from SimpleToken, and it was a lot of money because SimpleToken, like it ran from like 6 cents to like $1.40, and it just like crashed to death. Like literally, it like was just it was because it launched in 2018. or no, it launched in the end of 2017. So it was like right at the peak of ICO mania.
Caught that last wave, yeah.
Yeah, and like
YOLO.
yeah,
Oh,
like the price is simple. And so I was getting paid every month in this coin while I was like building this virtual reality app. So I was trying to I was getting paid in this like wildly volatile, like obscure, altcoin, and then trying to like fund my VR app.
He's so ready for this.
And through that, I was, if I would have just held all the, because like they just gave me the only thing that I built for Simple Token was I built like a Python wrapper around their API, which was awesome. Like it was an awesome way to interact with the blockchain, but it was just like kind of, it was just too hard to integrate. And so like that never really went anywhere, but like had I just held that, like traded that Simple Token for just like Bitcoin, like all the Simple Token that I spent on my VR app, like, it'd be a whole different story, because it turned into a significant amount of money that, that I'd spent. And so what that really made me realize is that like with these cryptocurrencies, because they have like order of magnitude price appreciation potential, like spending it on something else, like that's a big risk, like, I fully experienced that, because it was early 2019 and I was literally dead broke. I had to sell my truck. Literally, I had no money because I went all in on this startup idea that I'd started when I was studying optics in college.
Right.
So but what came out of that was that, I was thrust in a position where I was literally, like everyone talks about like Michael Saylor, like with crypto on the balance sheet, like enterprise, people holding their cash in crypto. Like I was doing that all 2018, 2019, like my startup, the only source of it, because you're selling 3D cameras.
OG.
Yeah, I mean, no one was buying. Like, I mean, some people were buying them. People loved like this 3D camera, like this VR app we had was fucking awesome. Right. Like we're gonna bring a bag and it's gonna be a hit. Once it's
so let me ask you before you keep on going. Let me ask you because I'm curious. It like back in that time, it really seemed like that industry was ready to take off, and then all of a sudden, it's like they put the brakes on it. Do you have any idea what happened?
Yeah. Oh my God. Yeah. So main problem was just like customers didn't want it. People weren't adopting VR. And because I mean, for instance, like what we were building, we were trying to make like short form, like virtual reality content you could view on mobile. And during that time, people weren't demanding like super like visually impressive, like 3D virtual reality content.
Yeah.
They wanted TikTok. They wanted like story. They wanted like short form, like endless feed. And like, whereas like the VR content, that's like more engaged experience, like for creating the content, there's a whole, like it requires much higher production effort.
Right.
To do it, you have to wear these VR glasses. I mean, they're pretty seamless, but like still you had to like figure out how to learn. And, it's just like a form of entertainment that's competing with forms of entertainment that just have better distribution, like tweets, Instagram, TikTok, like, YouTube, like, so many more people can watch that. It's so much more accessible. And so like, the VR stuff is more for like, like gaming and it's starting to kind of, but but like at the time, that was before the 2017 crypto hype cycle.
Right.
So VR was kind of that thing that was like the future thing that everyone thought they were going to get rich on. And so in many ways, the crypto hype cycle, definitely sucked a lot of energy out of the VR space.
That makes sense.
Like maybe in a different world, had like VR taken off, like maybe I wouldn't even be part, like contributing, to like things like Hex, contributing with like building products that support it, and I would be building VR stuff. But so crypto definitely had like it was like a big brain drain where like the investors that are, trying to be like on the next thing, like they're kind of now have something else to focus on, which, is like legit, where the VR stuff now, when I look back at like some of the wonky shit people were talking about, like, and so, and I was part of that,
Yeah. I mean, this is why this is topical, right? This is why we're talking about it. This is relevant.
The crypto stuff, the reason why, crypto wasn't just like a fad and like a quick like flash in the pan like fundraising event, like crypto, like this thing's here to stay,
Yes.
you know? And the reason why is because when you're watching VR shit, you're not getting rich. You're not making money. You're spending money. Whereas, you know, and like the dopamine hit has to be like the content that you see. Whereas crypto has like serious, one, you can get rich. Two, it has serious like dopamine effects where like anyone who start, like as soon as you start holding crypto, you're always thinking about it. And so like crypto, just like as kind of like a future tech thing, it just commanded all the like mental space that was going to things like VR and, you know, like the AI stuff, you know, that, and, you know, that's always, you know, evolving and improving. But like, you know, the big exciting, you know, mega trend that's going on, it's definitely in this space. And I'm pretty glad that, you know, by doing the you know, like the VR startup that I was a part of, you know, that I founded, you know, literally my best friend quit his job. Everyone that I would show my app to, because I always had something to show, always had a prototype, and that's, you know, that's like, you know, I think relevant to just like anything, like if you're building stuff and you want people to like take it seriously, like,
yeah, you gotta have something to show.
And I was all like, before anyone had ever heard of VR, I was showing up with this like crazy thing, like this cardboard box. You'd put your phone in and look at this like 3D content that I, you know, made. And so like my
you were doing it though. That's the whole point.
Yeah, and so like, you know, like that helped a lot. But like, you know, what working on that really did was, you know, it just like put me in at like the right place at the right time to just like start understanding this world. Right. And in this world, I think there's like serious like generational opportunities here. And
oh yes,
there's serious like, you know, there's broader implications to this. Like if everyone adopted VR, everyone would just get fat, really.
Right.
But like if everyone on Earth, like, you know, entered this like new financial ecosystem, like
it's a different ballgame.
The whole power structure of the world changes. And I think we see a lot more peaceful and a lot more prosperous and a lot more relaxed world, you know?
So that's cool that you mentioned that, because it kind of ties into my background directly, because again, I'm from the inner city, right? Mm-hmm. So I am directly aware of where violence and thievery and robbery comes from. And it comes directly from economic need. It like people don't want to be like, okay, yes, there are people that want to be bad just to be bad, but like if we look at this as far as a percentage breakout, right? Mm-hmm. The number of people that actually want to be bad is essentially maybe 1%. Maybe. It's probably less, realistically speaking, right? And this is the thing that makes me just lose my whole, you know, bearing when these politicians do what they do, because it's like, well, where on earth does this make any sense? Because when I look around, I don't see all this crazy shit that requires, you know, a 5,000-page law for one thing that happened on a Tuesday, you know, 20 years ago, one time, right? Yeah. But that's exactly how it works, you know, and it's kind of crazy. But, you know, again, like you got to be very astute, right?
Yeah. You just gotta be looking out for what's next. Like,
right.
Like you just gotta be, you know, and just like bouncing from one thing to the next. Cause like, like I went dead broke working on my startup, and then, you know, that was my own thing. And then just from that, like literally like shut that down, you know, like took like 2 months to just like, literally I wanted to learn a new skill. So I learned like web development. Cause like the thing that like really drained my like budget was having to outsource development. Like I was like really good at math, and I could do some programming, but like having to outsource the development, like that's really what drained all my, literally I spent all my crypto from 2018 and 2019 on my VR app. And so I was like, okay, like if I could, you know, like I already know I can like build shit. So why don't I just like learn the skill? And so I learned this tool called Anvil, which is what I used to build all my Hex apps, like everything I put out. Like, so there's Hex.Cash, which is, you know, it's just got some like different, it's like a trading terminal that I use.
Actually, let's go into that now, since you brought it up. Why not? Let me pull it up. Because I have it open already.
Perfect. So this is what I built this for myself, and so it's got like tools to help you trade. It literally just links to like HEX.VISION. It links to the staking app. I just use this for myself. I always I keep in mind, like I recommend that people always go directly to the source. Like in this app, I just like pull in these these sites, but like somebody could try to get you to go to the wrong site by pulling in the sites in the way that I am. Like this is my site that this is like my own personal utility. So like use at your own risk.
Right.
Like usually like go to the Uniswap contract, like exactly, like go to app, go directly to the source for feel free to use it. That's what I use, but feel free to, just always go to the source. But like some of the things that, I'm trying to produce some more information, and like this calculate break even shares, which you're showing.
Yep. Oh, hold on guys. Let me put my pointer on. Sorry.
Yeah.
I promise you guys I would get one, and here it is.
Oh, nice. Yeah. So, so this is a pretty I
mean, this is interesting, right? Because what this is saying is if you have 100 million HEX, this is your break even quantity of T shares to out earn the constant 3.69.
Exactly. Yeah. It's like it's the people that are, they're not experiencing inflation and they're not experiencing deflation.
Right.
And so the higher above that line you get, like the more T shares you have per HEX principal, the more that you are earning. So like the people higher up, like, if you have 100 million HEX and you have 15 pet P shares up at the top.
So hold on. You know what? I think what we should do before we even continue talking about T shares is, because here's something that confused me for a long time, and maybe we can clear this up.
Yeah.
We need to outline the fact that when we say T shares, we mean trillion shares, and that we literally mean trillions of shares. And that guy, because again, it was confusing to me for a long time.
Yeah.
And that when we mean M and then B shares, those are million and billion shares respectively.
So
and that the system is comprised of just shares. Literally.
Yeah. So the B shares should actually it's like, mega shares, like megabytes, giga share. I think on the apps they use B for billion because people understand that, and T for trillion, but it's really mega, giga, tera, peta. And so
it is tera shares, you're right.
Yeah. And so like I thought it was tera shares from the start, but then I was like, oh, trillion shares. But yeah, that's what it is. So T shares are like so far, because like HEX, the price per T share was low enough at the start. Like for the first year, the price per T share was low enough where a lot of people had T shares. Like it's that was like the most useful denomination to think about it in. Right. But over time, as they get more expensive, maybe it'll be B shares.
Right.
But like as of now, and even one of the charts that another chart that I think you talked about on one of the streams was the one that showed the like really big stakes. Like it showed all the P share stakes. Because like there's a lot of people that have T shares. Because right now, it's like 17,000 HEX per T share.
Expiring shares, yeah, I got that chart actually.
Yeah. So like everyone's got T shares, but like how many people? Like I think it's pretty much the Dolphins. So what is that, like 500 or like 500 people? I don't know how many Dolphins there are, but like so there's a lot of people with over 1,000 T shares, but there's really not that many people that have single stakes that are P shares, 1,000 share stakes. Like that's actually pretty rare. Like there's and so like that like those people, especially like
Curtis quantifying the value over time, it's pretty amazing.
Right.
Yeah, and the people that are.
Hold on, can I ask you this? Is it like thinking about rise over run ahead of time? Because that's kind of like what's popping in my head.
Well,
because you're like trying to get ahead of inflation, and really the only way to do that is by owning a ton of T shares, right?
Yeah, exactly. So,
relative to the principal, right? That's what it's saying.
Yeah. So like it's how much like principal you have. So
Right.
like you start, yeah.
So let me explain what I mean when I say what I said, because I know it maybe didn't make sense to you. So like I think of T-shares kind of like a tall building, right? Like the more T-shares you have, the higher you are in terms of floors. And by that, you are able to kind of stave the inflation monster away, which is that elevator that reaches the top floor as long as possible, because the inflation has to travel right through all of those floors to get to the top.
Well, it's more that you're the one that's getting the inflation. Like there's people that pay the inflation and there's people that get the inflation.
You know, this
like
is a great point.
Yeah, in like the US dollar, so the people that pay the inflation are other countries that hold US dollars as their reserve asset, and that they base their currency off the dollar. That's why you see so many people trying to get over the borders, because they're not escaping like the drug wars. They're not, I mean, you know, maybe they are. I can't speak for anybody. What they're really escaping is inflation. They're escaping credit expansion that they don't benefit from. Like the rest of the world expands their credit, expands their monetary base, and they don't benefit from it. They pay that cost because they're whatever currency they use is backed, like by law, backed by the dollar.
Right.
And so, like those are the people that are paying for the inflation in the dollar, and the people receiving it are the central banks and the financial institutions that work with the central bank and own equity in the central bank.
Right. So let's talk about that, because that's a great topic.
You know, it's like the poorest people of the world that are paying the inflation.
Yes,
to the
that's
richest
exactly right.
people. Whereas
exactly right.
in HEX, it's really just the liquid holders of HEX are paying via inflation to the staked members of HEX. And the way you get more of the inflation is by staking longer. Like per HEX that you have, like, you know, you could be someone that has 1 million HEX, and by staking up to 3 times longer, you could be having as much, or by staking, you know, by 15 years, you know, 10 years minimum, and now you have 3 times as many shares per HEX.
Right.
Like,
I mean,
you know,
because it maxes out at 3641.
Yeah, and so that means that you can have as much shares as somebody that has 3 times as much HEX as you to start.
Correct.
So by staking longer, you're earning, like the people that are not staked, they're paying you the most. And so that's what this shows, is that, like, you know, like the way I think about it is that, like, you know, if you're like, if you have just, you know, 5,000 T shares, and you have 100, like just looking at the chart that you have on your screen now, you have 100 million. So you have 100 million HEX. And from that, you have 5,000 T shares. You have as many T shares as somebody who's earning as much of the interest as you are, as somebody that has, you know, 300 million.
Right.
And so like you're earning inflation, they're keeping pace with it. And so like over time, you are squeezing the gap between how much you have relative to the people that are starting with more than you. In other assets, there's no catching up. Like there's truly no catching up. Like in Bitcoin, like don't get me wrong, literally I love Bitcoin. Bitcoin is a serious force.
So let's talk about that. Let's talk about that, because, you know, people have to understand, nobody in crypto can hate Bitcoin, but it is what it is.
I know. And here's the thing. HEX actually is the only thing that can so Bitcoin's like by far like in the lead. Part of that is because the one thing that HEX will never be is older than Bitcoin.
Yeah.
Like that's truly the only thing Bitcoin has over HEX.
Yep.
And if anything, like HEX is the only thing that can outcompete Bitcoin for the most lucrative use case, which is the long-term hold.
Yep.
Like that's the absolute best use case of any currency, is the long-term hold. And Bitcoin so far has been the primary leader in that space, because all the competitors go after other things. The competitors, they go after fast transactions. They go after smart contract platform. They go after fucking dentistry, like dentistry, like really
medical stuff, whatever.
Yeah, so like all these other, you know, these other currencies, like these other cryptos, they try to compete on the game that doesn't matter. Like the game that matters is the long-term hold. And HEX is the only thing that actually, like, that seriously gives Bitcoin a run for its money in the long-term hold category. Which
I mean,
that's the big innovation of what they did. Is you went after that use case. No one else has. Like name something else that's meant to be long-term hold.
nothing.
Literally, like, and so that's the best use case. And so you know, and the way that and so but so like Hex definitely outcompetes, but Bitcoin is still awesome because like in Bitcoin, everybody pays inflation to the miners, and it applies to everyone equally. And so that's and you can sell it at any time. So like when the price pumps, maybe the percent gain from the price appreciation could be over that period of time could be greater than what it would be earning some amount of interest on it. So there is use cases for things that aren't meant to be time locked.
Well, here's the thing.
Yeah, and
Bitcoin's the OG, so it's always going to be at the forefront, no matter what, right? So, people know it as digital gold now. People are understanding that it's never going to be what a peer-to-peer cash like it was intended.
So it's the risk-free thing. And so what that means is that like a lot of the upside's already out, like because there's so much less risk. Like the people, like everyone's like, oh yeah, if I would have known about Bitcoin, I would have bought in 2012. Like, no, you wouldn't have. You would have sold in 2013 when it went down. Like, and so
you would have sold at 1,000.
Yeah, and so it's like Bitcoin, that like million X move has already happened, and so because of that, it's like the least risky. So it's like people view dollars or like treasury notes or like whatever as like the risk-free asset. Like Bitcoin really is, it's the risk-free asset. Like Hex still has. Like that's the benefit. Like that's like truly like the beauty of Hex and where it's at right now is that.
So let's compare Hex to treasuries when you're done.
Yeah. Well, so like Hex, it's got a lot of risk involved, but only because of its age.
Hex, I disagree entirely. Hex has zero risk involved because it works every day.
Yeah, but all that risk is energy to the upside. Like as soon as Hex is like,
so that's upside volatility. That's not risk.
Yeah, exactly. Like if you think about it, like Hex has been around for like a year and a half. Bitcoin's around for 12. So like Hex is only 10% as old as Bitcoin. So Bitcoin has had 10% or 10 times more time to like prove its worth. Hex has only had a year and a half to prove its worth. And so like all the like risk of just something being new, like that's just potential energy to the upside. And so like that's why like the only coin I'm truly comfortable recommending outside of Bitcoin and Ethereum at this point too, and Hex honestly helped evolve Ethereum. The only thing I'm comfortable recommending is Hex because there's not like just like with Bitcoin, there's not any type of like performance risk. Like there's like Hex works as built, as advertised, like fully transparent, like it just works, and there's no room for issue. Like
it's so boring.
Like yeah, in a way, and like other things, like all these exploits we see in DeFi, like that's because like they have to rely on a price oracle. They have to, they're leaving themselves open to flash loan attacks. Like literally, like Hex's flash loan exploit proof.
Free.
It's like one of the only yield producers. It's the only yield.
The only one. It's the only one
that flash loan is not a part of. And so
because of like its security, dude, and like what you're showing here with like that truly rewards like longer pays better. It really does. There really only is one of it out there.
Yeah, like what could go wrong? All the things that could have gone wrong are already done. Like adoption empire could have gone wrong.
Bitcoin like a shoe in, bro. Hex under a penny is like the easiest trade in crypto. I keep saying it over and over.
Yeah, but I mean,
we get so long to trade it.
It's like during the time, like so. Here's where I see it. Like go to the on the Hex.cash site. Just go to the homepage. Just go to Hex.cash.
Give me a
second. Like and then go to like the the Hex V1 like monthly chart. So like go to the Hex V1 monthly chart.
Go to the ticker and go to the ticker and like erase the erase part of it.
Got it.
Yeah. So Hex.
There you go.
Yep. Click V1.
All right, here we go.
Yeah. So like, you go to log. Yeah. So all of the.
It's funny how different it looks.
Yeah. So go to the weekly chart so you can see that time period.
Boom.
So like, and draw a line from the start until November 19th.
Like where at the start?
Like the start of the candles, like day 0. And then,
Okay.
or no. So a vertical line, like what I'm showing here is like from like the time that HEX started in December to the time that the launch phase ended, you know, like November 19th. So like,
yeah, I think this was,
yeah, like right there.
Yeah, right.
Right there. So like halfway, like if you look at just like where the halfway point is, like in the halfway point before, you know, like just the midway point of the launch phase. So like day 175 about,
Yeah, that's around here.
like,
So like right around here.
the price was an order of magnitude lower because there was an order of magnitude more risk. Like, you know, because we hadn't seen how, like, literally the adoption amplifier could have had some bug in it with it, like caused it to fail. You know, the free claim could have had some bug in it. And so before then there was like an order of magnitude more risk. And then every day that went on, it showed that like it was more and more reliable. And then, you know, so like when it was about halfway through, you know, a little bit before halfway through, you know, something like whoever that, like the Genesis, the ETH Genesis whale was that like really pumped our price in like March or April, like that, like at that point in time, that person had assessed from the data that they had that like enough risk, like serious, like existential risk had been alleviated that it was worth putting whatever, like they put in like $1 million, like however much they put in, like hundreds of thousands of dollars at that time. And like, that's what helped break it out into that next level of, you know, of like risk where, you know, at that time, like, you know, you're pretty certain that, you know, AA was working, free claim was working, the staking worked, you know, everything was working as expected. And then like leading up to the big, you know, big payday, the thing that we were fighting as like, you know, the bear market, like our first big, like long bear market we had was, you know, like from June, like, you know, May, like, you know, through like September or October, like during that time.
Yeah, May through August and August.
It's like remeasuring the risk. Where, you know, like at that time, like the thing that was, you know, like really hurting the price was the inflation. Because when we go to like it's a chart that I published on one of my streams, and it's on my Twitter somewhere. It shows like just how high the inflation was during that time. And so like when the price was like, you know, dumping for like months throughout the summer, you know, it was just like, you know, because there was so much inflation. Then, like then there's that big run up in you know, in preparation for a big payday. People thought they were going to like quickly double their stack or more. And then, you know, the central bank of HEX squeezed out the short-term stakers. And then we, you know, like the price corrected. But then, you know, so like during that whole first year, like, you know, because big payday could have failed. Like big payday could have had like something could have gone wrong. And then now, you know, every day, like, you know, that's why like after big payday, the price on the chart just like corrected for the new supply. It was like in Ample when they would have the rebases and like suddenly there was like, you know, more supply, the price just like adjusted. And so like, you know, but then after like the price kind of found its floor, like these people who bought up here and then, you know, sold down here because they thought they were gonna like triple their money, but then they, you know, maybe were down like I think 30%, whatever it was. You know, like then as soon as those people sold, then like the market like quickly priced in, you know, like the new price reality. Like, you know, there's no more
like when you sell Bitcoin and you know you shouldn't, and you have like that seller's guilt. Well, it's like magnified by 10 every time with this.
Yeah, I mean, you know, because that's what like that.
But I've seen YouTube videos of these guys coming out and like basically crying on stream that they sold their HEX.
Yeah, I mean, it's like, you don't want to like. I don't know why you would want to sell anything in this environment. Like, you know,
dude, like I always put it this way. It's like a no coiner would gets the system faster like 5 out of 10 times, or probably more than that. It's a lot, very often. I can onboard a no coiner like with very little. I only have to say 40% interest, and like, is that real?
I'm trying to think of a no coiner that I haven't onboarded, to be honest with you, because I usually onboard no coiners. Like, it's not even hard.
Yeah, no, that part's easy. It's the crypto people that are.
It's the crypto people that.
Because this is like the all-in-one like Swiss Army knife of crypto, and then it blows their mind so much they can't even accept the truth.
No, and maybe this is a good time to touch on the. I think I saw it in the note in like the show notes, but
yeah, hold on.
Like why there's so much hate and why there's so much gatekeeping.
Yeah, definitely. I mean, the gatekeeping topic's a big one.
Yeah, we'll
Yeah,
get to
I mean,
that.
Yeah, I mean that's kind of
just a quick
It's
glance
all
over it. I
related.
mean, you got to
It's
think of it.
all
There's
related.
there's levels to the manipulation and like
no,
gatekeeping on
so
Hex.
the chart that I was talking about here. Let me pull up my Twitter.
You got it?
Yeah. Here, do you want me to
This
share
is
my?
an interesting one though, because we have come
Yeah,
down
this
and
is-
tested
this
that
is a good
007 level.
Yeah,
for
we're
sure.
back there
The
again.
double bottom.
Wait. Let's circle back to the chart we were talking about. I think that's I was just looking at the chat. It looks like people were asking for that. The calculate break even shares. Let's let's just go back to that one because I know people that's like the new one that no one's seen, and we so just click calculate break even.
Break even shares there on the left.
Yeah. Let's refresh it. Yeah.
I forgot to pay the bill. Sorry.
No, I have it time out after like 30 or 50 out.
API.
Yeah, just
Makes sense, bro. Forget about it. It's your personal site.
you write Python? Do you know Python?
No, man. I'm actually
crash the
just
site.
learning now.
All these new Hexicans jumping on here now.
Oh, did I just tune in or something?
All right.
I mean,
So, like the big takeaway from this chart is that the people below the line, they pay the people above the line.
Right.
Like, because and what it means is that like there's serious risk in being a massive whale in Hex because the larger that you are, like you're paying more of that inflation because like, someone who only has 10,000 Hex, if you're losing 3.69% per year, then say you have 10, or say you have 100,000 Hex, and then you're losing 3.69. You're only paying 3,690 Hex, and so 3,690 times 0.0, even at the price of 0.01, like you're only paying $3.69. Wrong. You're only paying $36 of inflation over that year. You as the little guy. But if you're somebody that has, not 100,000, but say 1 million, 10 million, 100 million, like you're paying $36,000 of inflation. And to you, like maybe that's like getting in fuck you money territory, but like 36K, like you're paying inflation, like you're paying, like by you not earning the inflation, like you're paying the people that are, and you're paying, the bulk of it. And so like, that's like this like kind of self-corrective property that Hex has is that the most valuable and the most lucrative person in the Hex ecosystem is somebody who's holding a massive bag of liquid Hex, because the further you are under the line, the more of the inflation that you're paying to the people that are further above the line. So the further you can get, like the further above the line you get, the more inflation you're earning. And the further that you get below, the more inflation you're paying. And so like the people that make the APY so high are the big liquid holders. And like, that's something that like in Bitcoin, the biggest liquid holder is what, like Satoshi. And he's holding the price up because he's probably dead. And like, that like, and so like, but those coins, like literally if like someone could in astronomical feat of nature could guess the private key to the coins, like it's like if you're blindfolded and you have chopsticks and there's a grain of rice somewhere in the universe and you have to be blindfolded and with your chopsticks reach out and grasp that grain of rice, the single grain of rice somewhere in the universe. Like that's how likely you are to like guess the Satoshi private key. But like, like on your lucky day, you could reach out and get that rice with the chopstick.
Probably not even then.
Yeah, but so like that like those liquid holders, like a massive liquid holder is holding the price up the same way that a massive staker is.
Yeah.
And so
same
like
thing because of the proof of work versus proof of weight.
Well, yeah. I mean, even in Hex, like someone who's a massive Hex bag holder who's not staked, like although it, like that is liquid hex, and like the liquid hex.
Oh no, it's still not on the market. Yeah, for sure.
Yeah, well, but it could be like, they could instantly.
Yeah, they could, but
And-
that
and-
doesn't mean that it is.
I know, but they also don't need to first send it to Coinbase to sell. So
Right.
like all liquid hex, like that could sell, like they could mine their own block, submit the transaction for the trade, and nobody could front run them. And so like, and so the liquid hex holders, I think that honestly, more honorable than the max length staker, I think, is the person who would hold liquid hex to death. Like, because that's the person that is supporting the price in the same way that a
Right.
staker is,
But
they're also paying inflation.
Yeah.
So not only are they holding the exchange rate up, they're also amplifying the APY.
Yeah,
and so
what's funny? I don't actually look as a liquid hex holder as a person that pays inflation, even though they do.
But they're
merely for the fact that they're going to benefit from the system given the T-shirt. Like the fact that you hold hex by itself, and given that the fact that it has a value proposition, actually puts you ahead of the game, even if you don't stake.
Yeah, definitely, because
that's the odd thing. That's an odd thing, right? Like I think,
and there are benefits to holding liquid hex because
for sure.
Because like hex, like something that I want to show it. It is a chart that I've tweeted. I think if it's a chart on the like what the big pay, like so that's like, so in Bitcoin it has volatility built in.
Right.
Like the halvening, every year the inflation rate cuts in half abruptly.
That's why I track that T-shirt rate.
Yeah. And the instance of big payday, it introduced all this volatility that will echo into the future. Like because, like, for one, the inflation rate. So let me find the chart on my Twitter.
Yeah, go ahead, look. I was looking myself, but you will probably find it quicker than me.
Yeah. I had to search tenthening. So here, can I share my screen?
Sure. Yeah. Go ahead.
That. Let me here.
Not a problem at all. Share away.
Yeah.
And I'll just plug it into the display. Let me just. Is it ready?
Yeah.
All right. Boom.
So like,
I remember this one.
One of the things that introduced volatility to Hex was the tenthening, where during the AA, the inflation rate was like 1 billion hex per day. Whereas now the inflation rate is what? Like
way reduced.
Yeah. So like over big payday, like, there was a massive supply shock. Like Bitcoin got to 1/10 of its time over like, okay, say first halvening, second halvening, third halvening, fourth halvening. Really like, and so like it took a number of halvenings for Bitcoin to get to 10% of its initial inflation rate. Right. Whereas in Hex, that happened abruptly. And like the halvenings are like the thing that introduced like the boom and bust cycle. And that's like how Bitcoin's been able to like bootstrap itself into reality, was like, these like big runs up, big runs down. Then the difference between how low it was from one low to the next is like the reduction of risk. So like Bitcoin had that built in, and like Hex has that in a couple ways. One is just like that initial tenthening, but then the other way is that all the big payday payouts are distributed, like they actually become liquid, like they actually become minted into existence between between November 19th of 2020 all the way through November 19th, 2020 plus 5,555 days. When like the max length staker on the last day of AA, like those people are getting additional hex on top of their interest. And so what that means is that the inflation rate I don't know, maybe a financial, like, if you're a financial professional, you may have a better description of what this number is, but like it's like the effective inflation rate, because like, the big payday payouts that are being paid out every day that a stake comes undone, that is receiving a big payday payout, that one only enters the supply at that time,
as the stakes are and staked.
Yeah. So like the effective inflation rate is like higher than the 3.69 target, because like those coins weren't liquid, so it's like as if they're brand new. So they those coins that are hitting the supply, like, over time, so like this chart was published on November 1st. It drastically changed between November 1st and November 19th. I never regenerated the chart, but if you just reduced everything by half, that's kind of what it turned into. And so because the short-term stake, there's a lot of short-term staking, and then so the long-term stakers were getting 150%. The short-term stakers were getting just 30%.
Right.
And so but when you see the different, so a lot of the big payday was actually being paid out in 2020 and 2021. And then next year, the amount of big payday coins is going to be a lot less. And there's additional reductions, where the Bitcoin, the halvening, that's a supply shock on the circulating supply. And so when that reduction, so at this time so these numbers would be different, but the order of the percent change is probably similar.
Yeah, it's a factor of one.
Yeah, between 2021 and 2022, there's a big reduction in new circulating supply. And so Hex, still for the first 15 years has these big changes in circulating supply that introduce volatility. And so because Hex has volatility built in, with the first big tenthening, and then every year for the first 15 years, the yearly circulating supply change is very drastic, because when you look at the HEX.VISION of all the expiring stakes, all those people are their stakes are ending, so those coins are becoming liquid. And so there's some months there's a lot of circulating supply that just hit the market. Other months there's not so much, and so there's built-in volatility. And because there's that volatility, holding liquid Hex is fine, because that means that you can sell high and then maybe buy low. And so the volatility built in, I know kind of part of the Hex ethos is about not trading, but trading is actually a really important part of pumping the price, because in order for your long-term stake to be really lucrative, you're hoping that your long-term stake ends at a time when there's a lot of traders who are just buying up the price, and with short time frames. So the built-in volatility that Hex has, I think, will always create what we see on the chart, which is if we just go to the price chart, we look at these, okay, so let's see, and we just look at at just the ranges that price forms. Hex is it's an amazing coin to hold for 15 years, but it's also an amazing coin to swing trade.
Yeah, he designed it like that, I think. I don't think that's my mistake.
Yeah, because it has these so here, let's go to the Uniswap. I don't know why the iframe isn't loading, but so these price ranges that we see in Hex, even just only looking at this, this is amazing. If this type of price action continues forever, that would be amazing for the staking class, because what it gives you is an opportunity
every time.
There's always opportunity for for price runs, because then as soon as the new all the price runs, when people buy a lot of Hex, they take the Hex out of the liquidity pool and they put it in a stake. And then the price runs up, and then over time, the people ending their stakes around that time, they're minting, increasing the circulating supply, selling into the liquidity pool, and that's what kind of turns the price. And so these ranges are really important, because that's what gives the stakers that opportunity, because say you had say price does something, say the year is 2036, you have a stake that ends on a day that looks like this. Then right after your max length stake ends, what if the price just ran 500%? Right. And then all the gains you had from your long-term compound interest from when you minted them just ran in value. That's what can really make those long-term stakes lucrative, is the price runs that happen after those stakes end. And so the volatility is really important, and that's where Hex, much like Bitcoin, has volatility built in. Like other coins don't necessarily have volatility built in, like the Ethereum emission schedule, like that doesn't have like abrupt supply shocks, whereas Bitcoin has a very abrupt supply shock. And Hex has, even though it's not like the halvening, just like the echo of like the first, like period of time, like the echo of the adoption amplifier, and then the big payday, like the echo of those like those events will continue on into the future. Where it's like pretty, like these are abrupt changes here. And then if you think about like all the stakes that
so when we get to that, let me interrupt real quick, because when we get to that expiring share chart, it's gonna highlight all of that, right? Like that's why I track it. Yeah. I mean, it's a dynamic thing. Like just like you were talking about the inflation chart, the tentening chart, and how it's probably half by now. Like that's the cool thing about the Hex system, right? Like it's dynamic, it's always changing. So like even if you come out with something that's forecasting price, it's not gonna be right in a week. Yeah, like it's gonna be off. All you can do is try to be exact with it. That's it.
And the price chart doesn't even really make sense, because like this is why the T-share chart is actually better to actually look at, because like it actually factors in the drastic increase in the supply. So like the T-share chart. So here, let's like this is actually the price chart, because it's like, if there's a stock split, like Tesla does a stock split. Now everyone who had one Tesla share now has two. The price cut in half, but everyone's value remained the same. And so similarly on big payday, when like the circulating supply abruptly increased, and every day that goes by, the supply is increasing. So it's kind of like a stock split. It's only getting paid to the stakers.
Right.
Like the price chart is actually the T-share chart, because that it's like the T-share, even like if you get rid of the USD price, and you, oh shit, how did I?
Well, the USD price.
Right, you get rid of the USD price, and then what you have is like it's close to like a market cap of Hex, and like, so it's like a more accurate proxy of like where the supply and the demand is, because it factors in the inflation.
Right.
And it's because inflation is like a daily stock split that gets paid to certain people.
Correct.
Like applied to everyone in aggregate.
That's what happens every time a stake ends, basically.
Yeah. So it ratchets up the share price, and so the supply is now greater, and so now like, because in a perfect world, every cryptocurrency would have a supply of one, and everyone would own 1% of that one. And so Bitcoin, everyone knows one, and then you're losing a little bit, because every day between now and the 32nd halvening, you're paying, like right now you're paying like 1.8% per year. And so like your percent of the pie just by holding is getting a little bit smaller, because you're paying the miners. Whereas in Hex, like, the people below the line, like they're paying the stakers, the people above the line are getting paid. And so like if the Hex total supply was 1, and everyone just had their little fraction of the pie, then like that's what gives Hex like this like long-term economic energy, is that there's always a chance to become a whale, because you can just hold your Hex in a 15-year stake, and then at the end of the 15 years, all of the people that had more Hex than you to start were paying you every day. And by the end of the time, like, you have increased by, whatever percent more than the inflation rate, and then they paid the inflation. Like, that's a very serious equalizing force of wealth across the world, is that it, the people holding liquid are the people paying the stakers. And so like, if the total supply of Hex was 1, the longest of term stakers are the ones that are like growing their slice of the pie the greatest. And so regardless of the USD price, like, they're gaining more of the system. And so the, like that's like what really makes Hex a serious competitor in the, like the long-term holdings and potentially the long-term collateral, is that the act of holding and the act of supporting the price, you're increasing your slice of the pie, at a greater rate than, you know, people that may just have more money than you to start. And so like, you know, whereas like in Bitcoin, like, you know what, like you're never catching up to Trace Mayer. No one is. No one's going to catch up to Trace Mayer. You know, like no one's going to catch up to the Winklevi. And you know, that's just the reality. Whereas like, you know, OA and like OA related address and like, you know, the first, you know, ETH Genesis whale that, you know, really put Hex into outer space, like you're probably never going to have more Hex than them. But what you can do is you can, like you as the person starting smaller, you can start eating away at that without putting any more money in. Like you don't have to like now suddenly buy more to earn, you know, to start getting closer to the holdings that a massive whale might have. Like you can just wait it out. And if you wait it out in the stake, you're earning the inflation that a potentially liquid holder is paying. And so, you know, and that's different, you know, like, so, you know, like say that, you know, like the OA and all the OA related addresses staked all of their Hex. So like, you know, say, I don't know how many million or billion that is, but like for someone who has a billion Hex, like per billion Hex that someone might have, they have to have 17,000 T-shares. And so what's the price of 17,000 T-shares right now? So $135 times 175, was that what I said? Or no, 17,000. So somebody would need $2.3 million of Hex. So someone that has a billion Hex needs to stake $2.362 million of money
just to get that quantity of T-shares.
So that's for a short-term stake. That's like the minimum.
Right.
But, you know, say that they do like a 10-year stake. So that person with a billion Hex, you know, they rather than doing that, so a person with a billion Hex can get to this number. So like a billion Hex principal holder needs to have 17,000 T-shares. And so they can, okay, so it's, so they need $787,000 worth of Hex. So now we need to divide that by the price right now, which is 0.079. So this person, like who's like a billion Hex holder, they only need, like in order to keep pace with inflation, they need to stake almost 10 million Hex for at least the 10-year stake. So like the 30.
Yeah, the minimum max.
Yeah, so like that person who holds that, like they have to commit, you know, $700,000 to 15 years. Like that's a lot of money. Like even if you're that rich, like that's a lot of money. But like you as the person who, you know, is only starting with, you know, 10 million Hex, you know, like you're risking like the same amount of Hex, but for you, like as the person that's holding 10 million Hex, like for, you know, to start with, like, you know, and if you are able to stake for the 15-year period, so you have 10 million Hex and you're, you know, staking for what's how many Hex per T-share? 16,938 is it? So 16,000.
Yeah, it's 16,938 right now.
Yeah. So like you get 590 T-shares. So like you as the person starting with 10 million Hex, you get the 500 T-shares. So that's like, right. Okay. So you have 10 million Hex and you have, here, let's zoom in here. You have 10 million Hex and you have 500, no, that's 100 million. Okay. So we need to zoom in even further. So you have 10 million Hex and you have, so this line is 172 and you have, what did we say?
10 million.
So you have 590 T-shirts. So somebody with 10 million Hex right now can get Oh yeah, no. So at times 3. So 3.
Oh, right, times 3.
Yeah, by staking for at least the minimum for like the max, longer pays better. So this a person who's starting with 10 million hex can get 1,000. They can get like 1,700 T shares, and that puts them 10 times higher than like what their minimum threshold would be to keep pace with inflation.
Right.
So like they're
Wow.
earning like a massive amount of inflation, and a lot of that inflation is being paid by the person who holding a billion hex, who requires 17,000 T shares to keep pace with inflation. And so like for the same number of hex locked, it's almost like a benefit to the smaller person, because it's like a much bigger like commitment to be a billion hex holder. Like that's a bigger commitment, and than the person who doesn't have much. They don't have much to lose, so they're willing to go all in. Like the person with a billion hex has a lot to lose, and so like going all in for that person is probably a little different mental calculation than someone who has not as much to lose. And so like that's really the power of this, like why I love just like thinking about hex. Like the whole hex economy is captured in this line, is that because the more hex you have to in order to keep pace with inflation, in order to like not pay the people up here, you have to commit to longer. And by committing to longer, you're increasing the ROI for all the people that are committed for shorter. And so like, the whales and like, I think whales only is like actually a pretty good like name for a hex channel.
That's exactly why I picked it. Actually.
Like the whales and hex are massively important. And like I
picked whales only because every hexagon has the ability to become one.
Yeah, you just wait it out. And like, literally. Yeah, maybe if you're an older, like, so the hex grandma, the one who was on Prince, like, she has
grandma, I think is the name. Shout out to her.
Yeah, she's awesome. Literally, that was one of the most inspiring talks I've ever heard. Like, she gets it. Like, she really.
You want to know what's funny? She's a person that really made me realize I was wrong. She's like, you young punks don't know what the hell you're doing.
When did you get into hex?
End of October.
I want someone to correct me on this, but I actually think that other than Richard, I was the first person to ever tweet an endorsement of hex, like a true endorsement. Like if you go to it's my pinned tweet, November 19th of 2019. So like 2 weeks before hex launched, I said, because at this time I was like a Bitcoin maximalist. Like I'd gone through the thing where I was like part of that ICO. Like literally, I was part of an ICO. So like that was my intro to crypto. Like I was getting paid by an ICO.
Oh wow, that's.
And so like I went through the whole altcoin thing, and then like everything died. Bitcoin died the least. So then like 2018 through 2019, like my whole like where I rode the pump up and rode the dump down, like on that altcoin. From then, like my perspective was that like really Bitcoin was the important one. And so it was like I would dismiss everything. So I missed Link, I missed BNB, I missed some awesome performers because I was like, no, Bitcoin only. But then I learned so much about Bitcoin from Richard while I was trying to figure out how to manage the crypto that I was getting from this from Simple Token. They're paying my startup I was managing that. I was learning a lot from Richard, and then I was like, okay, Bitcoin only. Everything else is stupid. And that helped me, avoid some losses, but it also kept me out of certain gains. Mm-hmm. But then when Hex came around, I was like, because I was following Hex from when it was Richard's original idea, which was the computational fluid dynamics coin. It was like supposed to be like a new type of mining that would run like mathematical models instead of just like doing SHA-256 hashing.
Meaningful proof of work, I think he called it.
Yeah. It was like useful proof of work. And so like that was the idea. And I was like, oh, that's kind of cool. I didn't know anything at the time. So I was like, yeah, that's cool. Like, I'll stick around. But then as it evolved into Hex and like as it evolved into like a long-term hold, which like I really like Trace Mayer really taught me a lot about like the value of like the hodler of last resort. And so like I was like already tuned into like, you know, the you want to buy the coin that people are willing to die with, not even pass to their kids. Like you want to hold that coin. And so like Bitcoin was that. And then as I started to understand like, you know, the value of this like long-term staking, you know, before it even launched. And I was like, okay, like maybe this is a coin that I can like recommend. And so literally I like in November 2019, I was like, a rare addition to the cryptocurrencies I endorse is the upcoming HEX crypto and ERC20 certificate of deposit coin. And so like I've been tracking along with HEX since before it existed. And I think I'm the first person to ever tweet an endorsement. Someone I want someone to correct me on that because like maybe there's someone else. But yeah, so like, you know, I've kind of been really thinking hard about this stuff for you know, like a long time. And that's been my biggest takeaway throughout my whole HEX experience. And it showed me what the rest of the world means, is that like all money is finite. There's just the people that are paying the inflation and there are people that are getting the inflation. In dollars, the people that are paying the inflation are the poor people and the foreign people whose local currency is backed by dollars. They're paying the central bankers and financial institutions. And the people that can have access to credit. So like they're paying the inflation to them. In Bitcoin, the holders are paying inflation to the miners. In HEX, the holders of non-staked HEX, so the people that have the option to sell, the people that can sell into a pump, like the people that, you know, if you're staked, you can't sell this pump. But when you're liquid, you can. You know, so like in HEX, like rather than mining, like, you know, rather than bearing the electrical cost in HEX, you're bearing the opportunity cost. And like the people that have more HEX are bearing more of an opportunity cost. Because when the price runs, like, you know, because like, especially because we're traded on the decentralized exchanges, the liquidity is the highest when the price is the highest. So when price pumps, like in other coins, like if you're a massive holder, you know, when price pumps, it's usually just because like there's not much liquidity. But like, you know, when price is running, the like buy side, like the ETH side liquidity is like at the high. So like holding liquid HEX can be very profitable because there are these massive runs that go on because of like the supply shocks that we've had. And, you know, and so like in HEX, it's the people they're paying inflation to the stakers. And the agreement they're making is that the stakers are like, all right, I won't front run you, like sell. Like every coin that's liquid can sell. Like as far as I'm concerned, the OA can sell every coin they have. Like literally, that's their coins to sell. Like I can't tell them to do shit. I don't have the keys, not my coins. Someone else has those keys. They can sell. Like they can run the contract, and I have no say in that. And so, like, you know, but because they're liquid, you know, I'm promising not to front run those sellers. And the way that those sellers are paying me is by being inflated. And so the largest liquid holders are paying the most inflation because they have to, you know, have that many more T-shares to keep up. The further you are below this line, the more of the inflation you're paying. So like a billion HEX holder who's fully liquid, which maybe we'll have to find one of these on HEX.VISION. If you're a fully, you know, like you're paying the most inflation, whereas somebody who has like, you know, a little bit of HEX but like a ton of T-shares per HEX, they're getting the most of the inflation. Right. So like that's just like a really important like just way to view the world is that like, you know, like compound interest. I think who is it? Like Einstein that said that compound interest you either earn it or you pay it.
It's wonder of the world, baby.
Yeah, and it's you know, and that's what makes HEX like a serious force in like the global financial ecosystem is that it's actually, you know, very like it's like an analog to a lot of like existing financial products, you know, kind of like a bond. It's like a 30-year bond.
Yep.
But you know, it's different. In some ways, it's kind of
like it. Like the entire thought process behind using it is completely inversed from any kind of legacy institution because there's no upfront costs that come with, you know, running a code with a button. Mm-hmm. It's amazing that they can pay you back, and like it's like where's a lot of regular like legacy thinkers are going to think, well, where's where is the value coming from?
Correct.
And where it's coming from is the truth that the system enforces. And then that's where like the core of the value in the system is both the security. And the interesting thing to note too is that the inflation, it's an inflationary system that's actually goes up in value because it's at the root, it's deflationary.
Yep.
Because it is an extension of Bitcoin, and in and of itself, the production of the asset is deflationary because less of the equipment, being the T-shares, is available to you, the users, over time because they just get so expensive. Theoretically, because the hex price is directly tied to, it's a function of also, it's tied and in tandem with T-share price, because really that's the only price. It's a very deep system that like completely just blows my mind every day, and like the way that the incentive structure is set up, it could completely wipe out and change the way that people use instruments of this nature. This could be like that big of a thing. Like literally, it's just a matter of how long until like it really gets out there.
Yeah,
people are using it in the real world, and there's enough like front ends, and like imagine just like you log on to Coinbase, buy Hex, and hit stake. You know, you put your time or whatever, and you just bam, done.
Mm-hmm.
Like, I think for a lot of people that could be like a genuine, like what would push us into like max virality, even though as much as we don't want that sort of thing.
Yeah, I mean, you know, once you get to like, you know, like if you want to keep buying Hex, like you want the price to dump. You know, if you're, you know, like if you're at the point where like, you know, say you work at a job and you make $100K a year, and so you're, you know, say like $2,000 a week you're earning, and you're paying half that for like life stuff, and then you have $1,000 to invest. Like, you know, as soon as that like $1,000 that you have to invest is like no longer like a serious percentage increase of what you have, then maybe at that time you want the price to pump. But like as a time where like, you know, each additional paycheck that you're able to put into Hex is like increasing your Hex or increasing your shares by like, you know, 1%, 10%, whatever it is based on your situation. Like, you know, you want the price to be dumping, but like where I think that like the staking mechanism and the yield producing mechanism, I actually think that makes Hex the only competitor to Bitcoin for a reserve asset. Is that it is Hex, because like literally, like if any of y'all watched the Richard Hart stream the other day with that like whatever guy who was like just bearish on everything,
Harry Dent.
Yeah, and Richard asked him, he's like, what would you recommend people hold? He's like, the 30-year treasury note, like whatever he said. And I'm like, wow, he's literally talking about a double max length stake where you stake for 15 years when that.
Yeah, but the reason he said it wasn't the reason everybody caught it. Yeah, like he's talking about capital appreciation. That's the reason why he said that, because he understands, or he assumes, let me rephrase. He assumes that because he expects everything to go to shit, right? Like he expects everything to go to zero. So with that, the normal default thought for the average, legacy finance person is that interest rates are going to go down. So let me explain how bond prices work, because this is also related to Hex, and it's also going to tie into a topic that we're going to touch on later. So bond prices work like this. Number go up, yield go down. That's it. Okay. So when the value in dollar terms of Hex goes up, or any fiat currency you want to use, it literally does not matter. The yield that the instrument gives will be lower because the system naturally balances out, because that is how the system works. That's how the math works out. The number go up, the yield goes down. That's just what it is. So when you're looking at this graphic that I'm sharing now on my screen, is it showing? Yeah, it's showing. Yeah. What you're seeing on the left-hand side is a U.S. Treasury yield curve, and what you're seeing are the different tenors and what they're yielding as of 2/12/21. And as you guys can see, I annotate the source below on the lower left-hand side. And the yields run from 1 month yields of 3 basis points, which is 0.003%, for those that don't know what a basis point is, a 1 year yield runs to 0.006%. Now, I want to highlight that a 1 year yield, which is equivalent in Hexagon terms to a 1 year APY, you're getting like 13% for that with Hex. I just want to highlight that. I'm just going to keep going, but I'm just going to highlight that. 2 year yield, 11 basis points, aka 0.11%. I mean, this is insane. This is insane. Go ahead. I'm sorry.
No, I literally quoting Zoolander. What are those gains for ants?
Oh, yes, those are gains for ants. Yes.
Gains for ants.
I mean, I think ants carry more gains than these on their back.
Yeah, I'm pretty sure they do. They're pretty
So
strong
maybe
little
not.
critters.
Yeah,
maybe not.
they got strong hands. Ants got strong hands.
Yeah, they do. But we do have some good news for those that do think saving in yields is good, or in U.S. Treasuries is good. The 10-year yield is currently at 1.6%. So it is no longer. I will update this soon because yields are going to start going up. But what that means then is that prices are going down. So, it's not really working out in Mr. Dent's favor with that recommendation, unfortunately, because he's not understanding how the system actually works.
Yeah, because he's measuring performance in dollars. And
right.
That's what he just wouldn't. Yeah.
Here's the thing: the most important thing that
he admitted it himself early on in the interview that he couldn't get a wrap on that.
Right.
On like the volatility of the dollar itself.
I'm gonna tell you guys why, because I must be one of the few people. I really don't know if anybody else even knows this, because I'm gonna be honest, I've yet to hear anybody talk about it. I'm the only person that thinks about it.
Here we go.
But yeah, you guys are about to get some brand new shit. Yeah, because here's the thing. It's not something that people normally think about, because they think that they know they think they know economics, they think they understand finance, but they don't, because they accept everything at face value, right? And when you accept things at face value, what you're doing is that you're playing yourself, because you're not looking at you're not looking at all aspects of the situation, and you're not taking everything into consideration. So that's a no-go. Right,
I think people just think that people are good. They don't really think that things could be so
but
complex.
That's just not the way it works, right? Like,
things are complex, and it's just.
Oh yeah.
You got to put in the work, though.
I get it, yeah, but that's the whole thing, right? And that's the interesting thing about it. Like, Hex makes you do the work. You like, look at this graphic,
right? To a point, right? Because like, once you get the crypto thing figured out, which
there's
take
nothing
a couple
to figure
years.
out in crypto. You just press buy.
Well.
Right. I mean, you
know,
look
a lot of people that have no economic background. There's a lot to figure out for crypto.
Oh well.
See, and here's the thing. Like, so when going back to the people below the line pay the people above the line. The people that pay the people below the line are the people that aren't even on the chart. So like all the
exactly,
people,
which gets into the next point, which should be just the simple fact that there are so many trillions and trillions of dollars in this world, but there are so few billions and billions of crypto. And it doesn't matter what crypto you're in, top 200.
You're gonna make money.
You're gonna make money.
You're gonna make money. But here's the catch: you're not gonna make Hex money.
So, you're already in a winning game, but to like take it to another level, right? That's kind of like we're here, is like to show you the one shining gem.
The only one. Yeah. Literally. I don't own any other crypto in any kind of respectable size that's even worth discussing. I really do not. Period. It's pointless. Why would you? You're a moron.
I did. I was just like you, man. I was a BTC maxi and an ETH, and I mined ETH, and I mined Bitcoin. But I still think those two are the most, they're the foundation of this whole space.
I'll tell you why. I'll tell you why it's good to hold, at least as of now, it's good to hold other things. But so it's good to have dry powder, because on a day where, like a mega fucking staker ends and the price dips down to a shocking price, like
Yes.
like a way to make up for
like
getting
asteroids falling in from space randomly that you can't predict almost.
Yeah,
like
you know, just like a massive whale just sells. Like someone who bought early and they're ready to take profit. Like you
neutron star level shit, bro. Like the fucking shit goes down 99%.
Yeah,
and
literally,
just
like
picks back up.
like who's
literally.
gonna be
I don't
there?
think we've seen the type of inflation in the chart that could be there. You know, if we didn't have some angels
Yeah,
in the
well,
background.
and in the event that happens, like you want to be a buyer in that case because that's a way to make up for getting cheaper T-shares. Like, you know, you like when you look at the T-share chart, you know, before like so, you know, back before April when the T-shares were cheap because they were Genesis shares, and it was before the massive like Ethereum God wheel came in, you know, you're getting T-shares for $5. Right now, T-shares are like $135. And so like if you want to get T-shares at that price, like you can't go back in time, but what you can at least do is be there like ready to potentially catch a dip. And so like, you know, like the only way to get cheaper T-shares is to really catch dips. And so like I think it's good to like not be all into any one thing for that reason. And also, at least as of now, like there's nowhere to post your HEX as collateral and extend credit. Because a way that you can, because like what that does, like
applies to every crypto except Bitcoin, brother. So
well, no. Also like so Bitcoin and ETH, but like Nexo has a lot of stuff, and you know you can also use.
Oh, you mean in crypto? Yeah, I mean in the real world.
So like
Fuck
you know
crypto.
you can post things as collateral.
Look, I'm very anti-crypto because a lot of it is bullshit. It's just
Yeah,
shiny
it is,
shit that people think it's cute, but it's not. It's
I
not
know,
cute
but-
at all.
but-
So that's why I don't agree with that point of view.
Well,
Because
the only
you
good
can
use
easily
case
get
is-
rug pulled and exit scam when you're not paying attention.
Yeah, literally like that's the risk, and so like
Yeah.
you
So
can't
that's
go
why I
all
don't
in on
agree
the
with
lending
that.
thing
For
either,
that,
you know? Yeah.
For that, go fucking buy some SPY and go to sleep because you know that central banks are gonna pump the fuck out of that bullshit too.
Yeah,
You know what I mean?
yeah,
So
and you can borrow against it
from
too.
that perspective,
Like that's,
yeah, and that's another thing. You can also borrow from that too. But you know,
yeah,
from that
and I think that's like the most like so the best use case of cryptocurrency is buying and holding until you're dead. The
yeah.
second best use of crypto is money markets. It's borrowing and lending because the reason why it's like
You know what's funny? I think you're the only other person I've heard explain stable coins like that because that's what they are. They're the money markets for
yeah,
crypto.
or I mean even like borrowing against Bitcoin or borrowing against ETH. Like this year, it's been an awesome year to borrow against like very low risk coins like Bitcoin and
all
ETH.
of
Like,
that is really isn't all of that really swapping out your like your Bitcoin for stable coins anyway?
well, you're not selling. That's the key difference.
No,
is
no,
that-
I don't mean selling. I mean swapping, like swapping ownership or whatever. The
Well,
term
so you post your Bitcoin as collateral on a site like Nexo. Like you go to Nexo and you
to give you
can
some funky coin for it or something.
well you post your collateral with them. They hold it with one of the custodians, and you can borrow against it. And so you take out the loan in stablecoin, or you can take it out in dollar direct deposit to your bank. So like rather than selling your Bitcoin or selling your ETH or selling whatever, like they have like a bunch of coins you can hold on here.
I don't know exactly how it works for crypto, so that's why.
Yeah. Well, so like rather than selling any one of these coins, you can borrow against it and free up cash. And the benefit of that is that you're not paying tax on the borrowed money as you would if you were selling, and you get the benefit from the increase in the valuation of your collateral. Because when you borrow against, like, so you borrow against, when Bitcoin's 10K, you're like, okay, I'm going to take out I'm going to take out $1,000 loan. And so you have to post $2,000 of Bitcoin. So you post 0.2 Bitcoin and you can withdraw $1,000 US. Say you do that in February or in January of 2020, you take out a $1,000 loan on your Bitcoin, on $2,000 of Bitcoin. So you have 0.2 Bitcoin, you post it as collateral. You take out $1,000 loan and you buy HEX. And so then you wait until, like New Year's Eve, Bitcoin price was, had gone up from, at that time, I think the price was like, so say 10K. Now the Bitcoin price on New Year's Eve was like around 30K. And so you like the value of your collateral went up 3 times. And then the value of the thing that you swapped the loan for went up,
I don't even know.
200, 300 times.
Oh, okay.
So
yeah.
now you still owe only $1,000. And so like the increase of your collateral, the increase of the value of your collateral could cover that. So it's like you got all this free money because, you're able to extend credit against, something like Bitcoin, where like, like you're probably not going to go 10x, or I mean, maybe 10x, but you're probably not going to go 100 or 1,000x on Bitcoin anytime soon.
No.
In HEX, you can. Like HEX, we still have a couple thousand left in us.
Let's do the math. Let's do the math. We can both do the math. Everybody thinks the max on Bitcoin is going to be what, 1 million or whatever, and right now it's at 50, right?
Bitcoin, yeah.
Yeah, so that's what 20 times left, I think.
Mm-hmm.
Yeah, that's it.
Yeah, so like Bitcoin's probably got like tens of X left. HEX probably has thousands of X left.
But that's what I'm saying. Like people talk about Bitcoin like it's going to the moon. It's literally not. It's
Bitcoin's staying stable and it's increasing in value, and so that means that like things like Bitcoin are really good forms of collateral. And and right now, like you can't say that for HEX.
No, of course not, because people, number one, HEX is brand new. It's only 14 months old. Let's not forget that.
Yeah.
Number two, people don't know it exists. Number three, once people do know it exists, which isn't going to take long, my point is it's going to be a form of high quality collateral, way before Bitcoin even knew it was going to be one. It's going to happen half the time, just like HEX is doing everything else in half the time.
Yeah, and that's why literally the reason why I bought the HEX.catch domain, and maybe this is where to announce it, but something that I've been starting to figure out how to do would be to enable people to extend credit from a HEX stake like you would posting Bitcoin collateral on Nexo or posting Ethereum collateral on Aave. Like imagine you could, you buy some HEX and you want to, like with the HEX, like, you don't want to like you have your own, like I think Kareem's words, like your own like dream stake, you got your dream wallet, and you're self-custodying your own stakes that are far outperforming the inflation rate. And so like that gives you more wiggle room to take other types of risk. And so you can take some of your liquid HEX, post it as collateral, and take out a loan against it. And then because the person that you would be posting it with collateral, which could be HEX.catch, that's literally why I bought this domain, was because I want to make a HEX money market where you can borrow against it. You post your HEX as collateral, the lender can give you a better rate than Nexo does, because by holding the HEX collateral, the lender can stake it and can kind of like on their own database kind of wrap these stakes and like be earning long-term interest, also have like short-term staking ladders that are earning yield. And so what that translates into is that you as the borrower, like you as the person that posted liquid HEX as collateral and took out a USDC loan, you are able to benefit from your HEX that you're posted as collateral earning yield. You're benefiting through a lower interest rate. Right. And so like HEX is like Bitcoin is amazing for for collateral because it's so liquid and because it's like the least risky, like it has the least like rug pull risk. Like who's going to pull the rug on Bitcoin? Like, maybe like really.
Right. You're the only one that can. Right?
Yeah. So like, there's no rug pull risk in Bitcoin, and HEX is getting there. Like literally HEX is there already. Like the OA could.
Yeah, but what happens if you want to collateralize like a 15-year stake and like it's year 3 and you need to call the loan back and they can't? There's neither you nor them has access to those funds for another.
Yeah. Well. So what that means is that like so that means the lender has to take that additional risk. But like if the lender already has that like long-term perspective where like the lender is valuing the T-shares, like and so that may be like how the lender
so like when that stake matures, like I suppose like let's say the loan never gets paid and then the stake matures, and is there some automated code that just like as the stakes ended it sends the funds off the 2 trajectories down to 2 different wallets? Or and you're getting into some stuff that would be cool and nice to have, but it's like that stuff still needs to be built.
Yeah,
There's
exactly.
so many cool tools that can be built around Hex that like I have a new idea every day. It feels like.
Yeah, like and the guys at STAKER.APP, they're making some big work. They're making big progress, like how they're using the Gnosis Safe as a way to like issue these smart wallets to people. Like that. That's how something like this would work.
It's like we're gonna make no middleman tools for a no middleman financial instrument, and then it's gonna get rid of all of the legacy finance system, and all the whole thing's gonna get vaporized by no middleman.
Even the steps to get there, like that could include middlemen. There very well could be like a centralized lending service around Hex, and people would probably use it. But then a decentralized one could emerge that could disrupt the centralized one. But like the role of like the centralized party is like the onboarding, and then like once they kind of like get their wheels, then they're kind of on their own. But then also like some people don't even want to have that, and then they will pay for that burden to be offloaded from them. Then they pay with like a fee, like a usage fee, and they also pay with the risk. Like they're paying like by not self-custodying your Hex stakes, like you're sacrificing, you're bearing performance risk, but like you're also not bearing any like mental energy. And so like everyone has their own trade-off to make.
It's crazy, man, how that all plays out. It's just it's like all abstracted nonsense to me. Like everything about like if you're, let's just say like you had a portfolio manager with like a Coinbase, they were just using like a Coinbase like basically balance sheet. There's nothing touched the on chain at all. It was just like you could say, oh, here was my entry point, here is blah blah blah, but nothing really happened. You just say you made a decision on a certain. It's nuts, man. Like until it's all engraved into the blockchain, and it's meaningless to me. And I think that's kind of like where this all has to go, is everything has to be on chain in some way, shape, or form.
Yeah, because it has to be confirmable, otherwise it won't work. Right.
I just feel like these, like each one of these tools, one by one, started with Bitcoin, Hex. Let's see, what's a couple other important ones? Ether's pretty important.
Yeah.
I'm sure there's others I'm not thinking of right now. They each had their role, but it's just like little by little, they're just like little black holes that are gonna just consume the world.
Yeah, little portions of capital in the market for sure. I mean, it's kind of cool because Hex kind of covers some coins out there that aren't really competitors for Hex, but they kind of dabble a little bit in that space. And the one coin that comes to mind, correct me if I'm wrong, Dibcatcher, I'm not sure if you're familiar with this coin. I think it's called Bond Bridge. I can't remember the name of it, but it's like a coin that comes with tranches, and you can buy the specific tranche instead of like just a general coin. It's a whole bunch of nonsense, really. But
yeah, I didn't know what that one is. I mean, there are definitely other coins that that I track that like, because the thing that I really love, and this is why I really love Hex, is I really love monetary policy that is like that makes it competitive on price. Like in Bitcoin, the halvening cycle, that's a monetary policy. Like that's a form of monetary policy that drastically impacts the price. That's why you have that 4-year boom and bust cycle.
It's a form of controlled inflation, right?
Yeah. And it was a choice that, I don't know I actually don't know if Satoshi made the choice for the halvening or if it was one of the other people that was early on.
Sure, it was Satoshi.
Was it?
Okay, pretty sure it was arbitrary too.
Yeah, and it wasn't in the white paper. I know that.
Well, 21 is a Fibonacci number. I doubt it was
not the supply, the halvening.
The halvenings are every 210,000 blocks.
Yeah, every 210,000 blocks.
Fibonacci number. 21. All these numbers are significant. They're important for a reason.
So there are 32 halvening cycles. I think that's not a Fibonacci number, is it?
It's 134, I think, if I remember correctly.
So 1, 1, 2, 3, 5, 8.
Yeah, no, that one there is 144. So it's just
4.
It's 89 then 140. I know them by heart. It's 89 then 144.
Yeah.
So yeah, I don't think I don't know about that one. I think it's 140. I think it's 140 total.
Mm-hmm.
I'm sorry, no, it's not 140 total. It's from 2009 to the year 2140. So that's 131 years. So thereabouts. There you go. Shout out to my boy Bala.
Oh yeah, what's going on in chat?
The
Anyone?
chat is lit, bro. We got 88 people on the stream. Shout out to everybody
I think we should get into the charts.
Thank you guys for coming out. I know you guys are waiting.
They want to know.
Oh my God, they're saying Tonto kind of flexing right. No, I'm not flexing. I'm literally giving context for like
What? Who's saying you're flexing, dude?
Parlay from far away says you're flexing.
Dude,
Look a flex man, dude. Dude, I'm not fucking dude. I don't have shit, bro. I'm broke as fuck. What are you talking about?
Nobody here is flexing.
Bro,
That's why we're all hype about Hex, because we know we're gonna be fucking flexing for real in the near future. That's a fact.
OG, that's funny.
That's a fact. Shout out to the U.S. Coast Guard vet. He says that the stake would have to have been originated inside this lending platform in order to safely borrow against a stake, meaning not exposing your keys and whatnot.
Yeah, you couldn't like no one would lend you against a stake that isn't in control of the lender. So like, just how because what I learned yesterday, I was on Clubhouse, it was like a DeFi roundup, and we were talking about Nexo, and then someone's like, yeah, Nexo, the reason why you can earn interest on Nexo is because Nexo just takes your money and then lends it out on MakerDAO.
Right. So they're giving you kind of that spread.
Yeah, exactly. And so that's already kind of happening, but the interest rate that they're earning there is probably maybe 11%.
Yeah, they're just giving you some. They're not giving you a piece.
Yeah, but the interest on a hex, because you're earning more of the hex, and it's the hex that is collateralized.
Yes.
That gives a lot of room for the lender, and especially if you can stretch the loan out.
So check this out. I was playing around with some hex data yesterday, and I was doing the numbers, and I was like, all right, I don't remember what yield it was I was trying to calculate. I don't remember. I was trying to do a dollar yield number. And it turned out that whatever that number was, it ended up being the T-share rate. So I was like, I just deleted this shit and I just stopped because it just confused the fuck out of me.
Really?
And it's like, all right, this number, because it was dollar values, and I don't remember exactly which ones they were, but it had to be either the T-share dollar value or maybe it was a T-share. I don't remember what it was, but I have to go through the motions again to remember exactly. But it just freaked me out because I didn't expect that result. At all. So it's and it kind of ties into what we wanted to talk about. But let's get into these charts first, just to get through it, because everybody really wants to see that, and of course they're very important. So like you were talking about, this chart here is the chart that details the first 437 days of Hex. And what I'm doing in this chart is I'm comparing the first 400 or whatever number of days you end up seeing in the title of Ethereum, Bitcoin, Hex, and the T-share. So I'm tracking them in terms of age so we can get an apples to apples comparison with regards to the return streams and how they're actually working and operating and moving and whatever have you. So the thing that I've been thinking about lately that I kind of want to discuss in regards to this chart, now that we're getting ever so closer, we're about 130 days away from the first actual live transaction on the Bitcoin network, which was the pizza transaction. And what I'm wondering is, because I'm putting together a Bitcoin chart that has the data that no exchange has. I don't know why they don't go through the process. I mean, I just haven't been able to finish it because I'm really busy or whatever with personal life crap. But I'm gonna finish this chart. I have the tabs open. I don't play when I say I'm gonna do something. I'm gonna do it.
What's the chart you're trying to make exactly?
So I'm piecing together an original BTC chart with pre-2011 data. It doesn't exist anywhere.
It's not on the Brave New Coin Liquid Index.
Yeah, but it's not the same thing. And that's the only place you can't really find it anywhere else, right? And you can't extract that. I can't extract that data.
That's tough. I don't even know how you would. I have no idea how you'd even go about getting that.
Right, and my whole thing is I want access to data. I don't want to look at other people's charts. I like to make my own charts. That's why I'm here in the first place, because we didn't have any charts in Hex. I don't know why, but whatever. So that's my thing.
I have a question. Where do you pull your data from? How are you making these?
So for this one, I'm using GRAPHHEX.ROCKS for the Hex data.
So can you download it from GRAPHHEX?
Yeah. Let me show you how I do it. Yeah, I just go to. Let me show you how I do it exactly. I mean, it's not like it's a secret what I'm doing here. I go to GRAPHHEX.ROCKS and I click on this little menu tab here on the thing, and I download the CSV, and that's pretty much it. I don't really do more than that, and then I just take the data and I play with it. But the only thing that I've noticed lately that I don't really know what the deal is, and I just don't have the time to figure it out. Like the T-share prices are kind of funky because they like stop tracking for periods of time. I don't know what it is, but I don't remember doing that before. So my T-share rate chart it looks a little weird now relative to what it used to look like. So I'm gonna sit down and look at that, but nonetheless, we kind of know where the party's going, so it doesn't really matter. It's really just good to track it because the data is live, right? And I think that's the most important thing of what I'm showing is the fact that it's not some static information and that it's live, even if it is delayed, because eventually I'm going to get a website up with all this data running, because it's a pain in the ass. Like Bala asked me today at some point early in my morning, if I did this manually, and yes, I actually do update this manually every day. So yes, it is a major pain in my ass, but I enjoy doing it because, what was that?
Come on, man, you like doing this stuff every day.
Yeah, well, that's exactly what I was going to. I actually like doing it. So
have you looked at Firebund's APIs?
I haven't. I just haven't. I haven't been able to.
Yeah, so on all my sites, when I'm pulling like the share data, supply data, like price data, let me share with you. I'm gonna share with you these links. This is what I pull from. Okay. And this is like
I intend to get like, some Python charts going or whatever kind of charts I can get going that are easy to get updated, at least once an hour or something.
Here, am I sharing my screen right now?
Hold on, let me pull your screen in. Give me a second.
So like this is where I like everything that I do. Like here, I can even show you all the code on like right now for the break-even shares. This is the code. Like I'm pulling the total supply from this link, which is one of the ones listed in the Firebund APIs. So like all these, I have that, and then I get the total shares, and I just have this wrapped in this thing. So like if it fails, it tries again.
Right.
So all I use it like that's why like I think that like that is like that one like where it shows who's paying who, like who's experiencing inflation and who's experiencing deflation.
Right.
Like in its entirety, like so like this whole block is just like
that.
Like yeah, that's like all of these are just like that's like the same thing. So like in its entirety, it's like takes like 7 lines of code to like produce that, where it's really just like you're calculating the slope of like the total T shares divided by the total supply. Like that's like what that slope of that line is.
Right. And that's kind of funny because that's what made me think of rise over run.
Yeah, that's exactly what it is. Because like with every additional hex you have to have how many extra T shares to counteract the inflation that you're experiencing.
Right.
And
because
so, like, yeah.
Go ahead.
And that's where all like everything that and this is probably going to be a good resource for you to pull data from, because what you can have here is like they're even like these ones like you can export the circulating and loss.
It's gonna make my life a whole lot easier.
Yeah, so you can like get the like supply data. You can get, that was like how many Bitcoin or hex were minted early on. You get Uniswap data, like so everything like probably that's where GRAPHHEX gets it from is from here. So
yeah, probably.
Like that's and that's what I use.
So go ahead.
Yeah, I mean that's what I use for like all of like in here, like for instance on this one, like what I'm let me see what yeah, let's start on let's see where so let's find where it starts.
Yeah, man, we really touch on a little bit of everything in here: coding, markets.
Oh yeah, I didn't expect to touch this at all tonight.
Gross.
Yeah, I
'Cause
mean,
look, let me give you, while you're looking stuff up, let me give you
Politics.
a little bit of my background, a little bit further. So I'm really an Excel monkey.
mhm.
Like when I was in college, I didn't really make the effort to learn how to code because I didn't felt I needed to learn it at the time, because I was trading, I was making money. I didn't have the need or desire. It was, 10 years ago, it was a different world, man. Everything wasn't getting automated. Like humans weren't getting automated out like they are today. Like I really didn't care. I really wasn't thinking long. You get what I mean? Like I wasn't thinking a long game. So I didn't see the importance because I was trading, I was making money, I was doing good at the time. I was going to college. Like, life was good to a certain extent, even though it was rough. But I just never put in that effort. Like I learned some stuff, but not enough to be able to say I'm really learning how to program now. Like I'm learning Git now. I'm learning Bash, Git Bash.
Bro, forget all that shit. You need to get on anvil.works. I swear to God, like this
Really?
is the key takeaway. Like the single thing, like aside from all the hex stuff, like so anvil.works changed my life. It's where you can build full stack web apps with nothing but Python. Like Python is like the easiest thing to just get into. And so everything that I build, like literally all of my apps are all Anvil apps, like where it's just so easy, like to just like get started. Like, so
Are these where those charts come from? Because I hate their charts. Like that little funky chart that you have to like zoom in on. I hate it.
So
I really do not like it. I don't know if that's where it comes from, but I don't like their charting at all.
which charting?
Like that chart that you have on the, and not to say anything about your chart specifically.
Oh yeah. So like
It's the formatting of the chart, like how it moves. I don't like it at all. Like how you can zoom in on it.
Oh yeah, like so that means I just need to improve like the settings that I put on, like because that chart right
It's
there.
it's not just yours. That's the thing. That it's that type of chart that I'm talking about. Like GRAPHHEX has the same type of chart. Like it's that type of chart. That look in the Bitcoin site.
It's like a common
Yeah,
web
I don't like that type of charting. That's what I mean.
Well,
I'm not a fan. I don't know if it comes from there though. I don't know.
Like so, like doing like Python for like market analysis, like that will really step up your like analysis game.
Oh yeah, I'm ready to jump into that head first, bro.
Yeah, bro. Literally, like just learning and like learning Python by building apps on Anvil.
I mean, look what I can do with Excel. Imagine once I get a hang.
Yeah, literally, like
Python.
like you know, because like just for instance, like in this like little app that I just pulled up here, like the thing, and this kind of touches on what we talked about or what we said we were going to talk about, which is like the whole boundary conditions scenario. Yeah. And so like what I'm using here is just like using the API endpoints that Firebun had, where you can get all that data, and then like just like literally like in Python, so this number I think is really important also, like aside from like that, like the minimum T shares per hex.
Let's talk about that. Let's talk about the maximum quantity of T shares possible, and let's relate that to the maximum possible of hex, because people don't understand the system. They don't get how hex really just revolves around the T shares, and that the T shares, or let me rephrase, the shares are really the system itself. So let's go a little bit into that. Let me write the timestamp down because I think this is going to be good for Hex Clip.
Great. So the maximum possible T shares, that is the number of shares that would exist if every single circulating hex, every single liquid hex right now, like today, before the T share price ratcheted up with the next expiring stake, if every single one of these 569 billion liquid hex suddenly staked for at least 10 years, how many T shares would there be? Right. So right now there's 10.8 million T shares. And so if every single liquid hex was to suddenly stake for 10 years where they get the longer pays better bonus, I didn't factor in bigger pays better because like you don't know how many hex would be in each one of these stakes, but like so maybe add additional 10% of this. But the maximum number of T shares that could exist is 111 million T-shares. So right now, if so there's 111 over 10.8. So the number of T-shares could suddenly increase by 10.2x. And so what that would mean is that when we look at, like, right now, the daily payout per T-share is 5.78 hex per T-share.
Round.
At 5.78 hex per T-share daily payout could go down to half a hex per T-share. And so that's like so if all of the hex stake, like, so think about that. Like, if right now,
well, it was there before at one point, right?
It was close to it on big payday. It was close to it. But, like, you know, and that's why when you look at the GRAPHHEX, the GRAPHHEX.ROCKS site, you know, like on big payday, you see let's go to the daily payout per T-share. Where is it? Yeah, right here. So you see how like it went down so much?
Yep.
That's because around that time, the total hex, like the circulating supply, went to almost zero, and like there were a ton of T-shares, and then they were only active for a couple of days, and then they went back to like the normal range. But like in this case, like this is like where I'm talking about, like the true boundary condition, like how, like this answers the question: how low could the APY go, and how high the total number of hex stakes? So like how high the price could, like, you know, could go if, like, you know, the like all the supply went away because everyone staked for 10 plus years. And so like the APY could go down by a factor of 10, but if the, you know, amount of liquid hex also reduced by 10, then the price would just run. And so, like, you know, like, so that's like the boundary is, like, if everyone was max length stake always, and then like on top of that, like, you know, at like every day that goes by, because like what we're experiencing now, you know, if we go to the HEX.VISION site, like, you know, every day Genesis shares are coming unstaked and becoming liquid. And like, what happens to those coins that are, like, you know, where the Genesis principal plus the Genesis T-share interest plus the big payday bonus, like, what happens to those shares? Like, if, like, in perpetuity, if every single person that had hex unstaking staked for the max length, then like it would approach where like the APY would be tiny, but it, you know, because the APY would be so small, the value of the payout that you do get would be so high. And so like that maximum number of T-shares is like it's like the upper bound, you know, of like, and so like what's like the rule of thumb when like the liquidity, like say, so on like Uniswap, when liquidity doubles, price goes 4x because it squares it. So like 2 times the liquidity. So meaning like a buyer comes in with 2 times as much, you know, money than the liquidity pool has, they 4x the price because 2 squared is 4. You know, someone comes in with 3 times as much the liquidity, you know, then they 9x the price because 3 squared is 9. Right. And so say, you know, like, so in this case, you know, the total, you know, because like the total liquidity would go down by 10, but like the amount that goes to the, like, you know, and say like the total amount, like what's the total amount of liquidity? If we go to uniswap.info and we try to find how much hex liquidity exists, like that amount that's increasing at an even higher rate. And so like say you know, like suddenly the amount of hex on the liquidity, like across all liquidity in hex, I think it's mostly on the USDC pair now. So like, let's look at this. So if these 179, you know, like, so everything just like increases by 10. So that means that the total pooled hex decreases by an order of 10. So suddenly, instead of 179 million hex for sale, there's 17.9 hex per sale. So like in that instance alone, like the price would okay, what's 10 squared? 100x. Like a 10x reduction in that supply would increase the value by 100x because of the bonding curve. Because that's how the automated market maker works. Because it's squarely where change in liquidity is like squared in both directions. And so like that's really like if every single coin was staked and there was like not even one hex for sale, like the price would be infinite.
Yep.
Right. And so that's why, you know, like, so that tells you how low the payout could be. Like, so we determined that the payout, like the minimum APY is going to be half a hex per T share about. And so, you know, but on the other hand, like consider the situation where every day that goes by, these stakes come unlocked, they get unstaked. They don't just get good accounted, they get unstaked, but they stay liquid, and they stay liquid forever. Every single person who has a stake ending never stakes again. And, you know, that's just liquid. So in that boundary condition where like every liquid hex stays liquid and every newly liquid piece of hex continues to stay liquid, then, you know, like what would the payout be in that circumstance? And so like here, like the max, like currently there's 10 million, 10.8 million T shares, you know, right now. And then if we look at this on like let's see if we can pull this up. I want to look in like the month. Okay. So say cumulative. Okay. It's cumulative shares expiring. So say like over the next, like 2021 through 2022, say like this time 2023. So like in between now and the next 2 years, if every single stake that existed right now was to expire, then so it says 3. Okay, so what I know here is that you what is it? You multiply by 10,000, and that's the T shares, or you divide by 10,000. Let's see. So here, okay, so no, so 3 million T shares are expiring over this time. So the total number of T shares, like say no one ever, like from now on over the next 3 years, nobody restakes and everyone stays liquid. So the number of T shares now is going down to 7 million T shares. But at that time, like in that 3 years from now, the inflation is always increasing because it's always 3.69% of the total
of an ever increasing total.
You know, circulating by that time, like in that scenario, you know, the daily payout per T share, or like, okay, so you know, so like the number of new coins in that year is going to be, okay, 6.2. So 6.2 times 1.0369 times 1.0369 times 1.0369. And so like this, like, what is that? Like 62 million new coins printed per day is now going to be like 69 million new coins printed per day. And those 69 million new coins minted per day would now be being distributed amongst 7 million T shares. Then in that case, the daily payout per T share would be 9.857 per T share. You know, and so that would mean, so like if from now on everyone stayed liquid, like for people who are already in stakes, like it could potentially get as high as that 9.8. So like the daily payout could double, you know, per T share. And so, you know, amplified by longer pays better, like, you know, so that's like the other, you know, if like everyone stayed liquid and we saw the APY, you know, increasing a lot, you know, it could reach a bound of around 10, like over the next couple of years. Or say, you know, we extend this same,
depends
like
on how bullish we are, dude. If it gets super bullish and the price goes to insane highs, then yeah, you're gonna see a lot of less stakes coming through.
Because, you know, when price pumps 40% in a day, you don't need to wait.
People that survive the first mega super cycle in Hex and go through a bear market of Hex, if there is such a thing, are going to be the ones that win this game for sure.
Yeah, yeah. I mean,
for sure, because this instrument's so volatile. It just look at the price chart.
Yeah, and it does make, you know, that's what makes it even a good liquid hold too. Like, you know, the staking, like you guarantee, like if you're an
interplay there,
like if you're an average like staker right now, you know, so that's like 5 years. Your APY is like 38% applied to 5 years, but then it compounds, which, you know, I think we can probably talk about in a little bit about like the valuation of future earnings. But with the like, you know, but you know, other than getting, you know, 40% per year, like sometimes the price pumps 40% in a week. And in that case, like the person who bought the day before the pump kept liquid and sold the day after the pump, you know, they sold into that 40% pump. Like they had that 40% gain in a week, whereas the person that, you know, they experienced the 40% gain, but that was over the course of, you know, like in the first year, but like, but you know, it's unrealized until they can end their stake. And so like, you know, it like when price has a lot of volatility, that like makes people like not need to stake. And then that ratchets up, you know, and that's like, you know, like on Twitter a couple weeks ago, I posed the question. I was like, hexagons, would you rather have price up or yield up? And everyone said price, or, you know, at least 72, you know, so like about 75 people said price, you know, or 80 people said price up, and, you know, 40 people said yield up. And like, you know, you kind of want both, right? Like you want to be earning a lot. And that's like, you know, probably the power of the staking ladder. And that's
tells me that the people that are voting have a lot of coin.
Yeah. Well, what it means is that they have a lot of coin that they might want to sell soon. You know,
exactly. Like with, I'm taking into account all the end stakes and all of the big payday and everything. Like right now there's a lot of supply in few hands when you're talking like global user, a bit like potential user base. So that's like why you're getting this, like why that's why we're going sideways and dumping, is because there's just so much overflow of supply right now.
Yep.
Yeah,
and
it's just a redistribution. It's just
that's exactly why it's a nice main topic is markets, liquidity, and how they interact and how they function. Because people have a very incorrect view of what liquidity is. They have a very incorrect view of how markets are supposed to work. So I'm here to actually set that, you know, straight.
Yeah, dude. So let's talk about that a little bit, because Richard likes to talk about that a lot, about the liquidity and how that plays into price movement and how that plays into Hex.
Right. So
you want to add?
Go ahead.
I want to hear your guys' take on it.
What were you going to touch on?
Like the liquidity. So you mean like the liquidity that shows up here on the chart, like
just liquidity in general, just market liquidity in general. Because that's the same thing, right? I mean, we're talking about so I'm talking about liquidity, period, right? Mm-hmm. When I'm talking about liquidity, I'm talking about it from a financial perspective, not just what's on the market, but also what's people are holding, right? Because that's what liquidity actually is, right? So what people have to understand is that what's on the market is different from what's just in somebody's wallet. They're not the same.
Yeah. I mean, they're
not the same because
because
if it was the same, then why is Bitcoin at 50,000? Because you cannot stake Bitcoin, right?
Yeah, well, and every single Bitcoin could be sold. Like, you know, Satoshi.
That's my point. But that's exactly my point. Hex clips. Let me write this timestamp down because it's exactly my point, right? That's exactly why I'm making that point. Precisely why I made that point. Mm-hmm. You cannot, right, pretend that something that's just sitting out, not staked, means that it's ready to be sold. That's not how it works. Mm-hmm. Because if that was the case, then why the hell is Bitcoin or any other coin off the ground? Because they cannot be staked. So
yeah, that's part of the risk, you know, like that's the.
But what I'm trying to highlight here is how stupid that notion is, so everybody can shut up with it now. You're welcome. I just gave every hexagon their retort. Moving right along. Because that's something I'm tired of seeing, and I just don't understand why nobody has that reply. Like it's obvious.
What is it exactly? What'd you say?
So the common claim is that, oh, but if the coin isn't staked, it's liquid. So, you know, you have 568 billion coins that are just sitting out there in the market, and that's not how markets work.
Oh yeah, like a lot of holders they'll never sell.
Right, because and that's my point.
And they're good.
My point is, if that was the case, then why the hell is Bitcoin at 50,000? Because Bitcoin shouldn't be at 50,000. Nobody can stake anything in Bitcoin.
Yeah, literally, like those people, like down here, like like billion hex holders, fully liquid, like that's what it holds the price up, and it increases the yield. So that's like those people are like they're literally paying the stakers. It's like they're just like donating money. It's like literally it's like a form of charity.
Correct.
Like literally, like you have a billion hex and you're holding it liquid.
So let's go into a tweet because it's related to the topic, markets, liquidity, and all that. It's a tweet that Richard posted. I'll share my screen as soon as I pull it up. Give me 1 second.
Yeah, what was I've got Twitter open. What was the tweet about? Like,
it was about. I actually have it up already. I just need to get to it. Give me a second. I just gotta share my screen. It's this one. It was a 7. Let me share the link with you guys in the chat. It basically, and it's pretty crazy, and it made me think of something immediately as soon as I saw it. And the tweet goes, "This is so actually he was replying to the tweet from Hex Wellbot, where this stake ended and went into good accounting instead of actually ending." Right. So what that means is that the computation for the T-share rate was not done. What this means is that those hex are just sitting on the sideline doing nothing. They're just not in the market. They're not being put on the market to be sold. So what this means is that if this stake never ends, right, which is interesting because the thing that prompted me to pretty much segregate this tweet for later, set it aside for later, was what Richard wrote was this address got its hex from the origin address. From what I've seen clicking around Etherscan, similar addresses have just sat on other coins, leaving them unstaked.
Oh wow.
This would make the APR higher and the market cap higher. Now,
he tweeted that 4 hours ago.
Yes, sir.
That's so funny. That's literally exactly what like the people in the bottom quadrant of that like break even T-shares per hex. Like that's literally him. That's that address. Like that's a liquid holder who's paying massive inflation to all the stakers, increasing the APR, and it's increasing the market cap. Like literally, like that's like that's why I think that Hex truly is like a competitor to like it's the only true competitor to Bitcoin because it has that property where like Trace Mayer, hodler of last resort, they can only provide price support. Like the only thing that like Satoshi is providing if he's dead and can't sell is price support. He's not increasing everybody's Bitcoin balance,
Right,
but like in this case, say the OA or any address related to the OA, say whomever owns it, I won't make any assumptions about who owns it, whomever it is. What if they died and didn't have any descendants to pass it to and just died with it, all liquid? Or even if it was staked and then someone just ran good, like literally, like at some point, because of the end stake penalty and the good accounting, like all of the roosters come back to roost. All the coins come back to roost and they all become liquid. And so once they're liquid, they're paying stakers. And so like in this scenario, someone could die, like the OA and all the addresses related to the OA could die with the coins. And they're perpetually paying the stakers and even the liquid holder. They're paying the liquid holders in price support. Correct. And they're paying the stakers in price support and yield. Correct. And so it's
a party every day in Hexland.
Satoshi is only providing price support. Trace Mayer only providing price support. Michael Saylor providing price support now, maybe providing sell pressure later. But He claims
Well,
there's 100-year.
Plenty of people were selling their Bitcoin last week or
Yeah,
the other day.
Yeah,
So, yeah.
and they're their coins to sell. You know, much like that address
Correct.
you tweeted. Like, if that address wanted to dump on it, like nobody could even complain.
No.
Like, because
it's their perfect right to do so.
not your keys, not your cheese. And so, like, you know, that person could sell 100%. Like, literally, like like there's, and then that's the risk, right? Like, there's like, because what would so like right now, like there's, when we looked at the Uniswap, like let's just take for example, like, you know, another boundary condition, like if that person, like that billion hex stake that just ended,
yeah,
like what if they dumped on the market? So right now there's like 179 million hex in the liquidity pair on USDC, and there's probably, so there's 179 million on USDC pair, and there is 65 million on the ETH pair. So in total, we have like what, like 230 million, like 230 million hex on the, these are on the liquidity pool. So say like that, you know, that address that you're just showing there, say now it goes from, you know, what like 220 million
to 1 billion.
Now, you know, 1, 2, 3, 1, 2, 3, 1, 2, 3. Now there's 1.22 billion on that, you know, on the chart, and so the price would, or like the liquidity would have increased by
5-fold.
Yep, by like 5.5 times. So you square that, so 5.5 squared, price would go down. Price would go down 96.7%. Like literally, if that address sold right now, wipe the liquidity, but it might go down more. I may even.
I wouldn't mind.
Yeah, literally, like
please go ahead.
This thing, like, this money printer is always going to have a bias.
By, you know, but by that amount. And so, like, what's the price? So that would bring us back.
Send it away. Send it.
Yo, like, all day.
And that's only one. That's only 1 billion. Say there's like
exactly
how many more of those addresses are there? But like,
so like this gives so much credence to what you said earlier, though, about how over time, like, you're gonna have these random like whale sell-offs. It'll be like hard to predict them, but it'll be something that you can always have some dry powder on the side for.
What's funny is that if that happens, so say it goes down 96.69%.
I mean, that would be great if the system ended up doing that. I mean, my God.
You know what that would mean? We would still have higher lows.
Yeah.
Like,
yeah. The system is designed. Look, I did the math.
That staker could dump their hex,
designed to do that.
send us this fucking shit, make us all feel bad, but we would still, like, just that person alone sold, we would still have higher highs or higher lows, and we'd still be in an uptrend. Like literally, like that's.
I mean, there's a very good reason for that, right? And I want to get into it right now because it's related directly to the question Limon Ortega asked, which is what affects the daily payout per T share, and what increases the payout rate. So let's get into that real quick because it's kind of straightforward, but you have to understand how the system works in order to get it. And the thing about the system is that it works inverse to what we're used to, because the T-share rate is a defining factor here, right? And the thing about that is that the T-share rate is...
Pull my screen out. I've got some numbers up on this while you're talking through this. I've got some.
Sure.
Cool.
Because we're talking about the same thing. It's not like...
Yeah. Hex, like the hex per T-share. How many hex per T-share?
Right.
For a one-day stake. That's for a one-day stake.
Right. So baseline. Here's the thing. So as I did the math in one of the most recent streams about the worst case scenario, somebody pointed out. Let me see exactly what the comment was. I have it here, and it was Crypto Goose. Shout out to them. Not familiar with them. I'll check. I'm guessing they have a channel because they have like a avatar or whatever. And he was just pointing out that it wasn't totally correct because I'm assuming that the staker pool will remain constant at today's 10%. And of course, right, obviously that was an assumption. But here's the thing. While it might not be a fair assumption, I think that my assumption is still correct based on the fact of bond math and how it works. And I went over on it earlier, given that, more stakers implies a lower yield, which by default implies a higher price. So what that essentially means is that it balances out and you're still getting paid the same amount anyway at the end of the day. So I hope that answers your question, Crypto Goose, or your critique on my assessment. I understand it's very bland and very base, but you have to understand bond math to get what I'm trying to say, because again, it doesn't change the mathematical fact. Price is going to be whatever price is. It doesn't matter because you're still getting that interest, and the system is going to be the system is dynamic enough to reflect that change in demand and supply, because that's how bond math works. So it's a balancing scale, it's a balancing act, and it's always balancing itself. And the T-share rate works in such a way that it's always going up regardless of what you see on my charts. What you're seeing on my charts is a live valuation of T-shares in real time, right? So what does that mean? What that means is that a lot of the time, like these returns you're seeing on, oh, well, you're not seeing them right now, but you'll see them in a minute. On my usual chart that shows the first however many days, that rate of return is for the T-shares is derived from the GRAPHHEX.ROCKS site, and which Dipcatcher has on right now. And that's literally a snapshot in time. And, those numbers apparently change over time going so far back. At least that's what I gather from what I see. And the thing about it is like, it's a parabolic line, like literally. It's going to be an S curve. We're literally at the first, like it's just getting off the ground. Like when we look at this 10 years from now, we're not going to see this portion on the map, on the chart at all. Like it's not going to be visible, and people don't understand that. And I try to show it to you guys, but you guys got to put in the work to think about it, because me telling you is just one thing. Again, like I always tell you guys, I'm just here to share the facts and figures, and I'm not here to pump you up. I'm here to show you what the truth is. It's on you to understand it yourself, because I get it. So it's easy to me, right? And I'm going to say it however I say it, along with whoever else comes on. But you guys got to put in the work to understand it, because I can show you every chart I want. If you don't understand it, it's not going to matter. So, in order for the daily payout to go up, right, there has to be a higher T-share rate, because that is essentially what gives us the higher payout over time, because a T-share rate mimics the compounding function because of the way it works. And the way that it works is that every time a stake is ended, it reprices the share price. And that is merely a function of the system and how it works. And that's how we're able to maintain higher lows over time, because people understand how the system works, and they understand that the system is never going to allow, right, for the T-share value to go down so far. The system just won't allow it, because there's a certain and this isn't really advanced, but it's advanced in terms of the normal person's understanding of math. And there's this concept in math called the fundamental theorem of calculus, and all this states is that there's a rate of change of things, and within that rate of change there is a limit at which things can no longer surpass that rate of change. So what that means is that everything has a terminal point when it comes to acceleration and deceleration. And that's kind of what I wanted to kind of hit on earlier, but it didn't fit into place, so I'll hit on it now. When Mr. Dent was talking about the dollar and how he couldn't reconcile the fact that, yeah, treasuries make sense, but he doesn't know why they really don't. So I'm going to tell him why, and I hope he watches this stream at some point in the future. And the reason being is because you can only devalue a currency but so far and expect the instruments denominated in that currency to continue to function how they functioned in the past. For example, when Richard was having the live stream with the gentleman, he couldn't remember a stock market that reflected that. And the one I always like to think of is the Venezuela stock market. And at some point in the future, I will show you a picture of that, guys, because right now it's really not important. But what's important about it is that it's literally a line that goes straight up. I mean, I don't know if you can pull it up, Dipcatcher, a Venezuelan stock market chart. You can go to tradingeconomics.com. I know they have it there. Tradingeconomics.com. And what I'm going to show is basically what happens when a currency goes so off the rails that there's just nothing that you can do. Not the Fed, not anybody, not Yellen, nobody. And we're entering that point in time now, right? So if you go to Venezuela, and shout out to any Venezuelans that might be watching. I hope you guys are doing
market right here.
Yeah, click on that. Shout out to any Venezuelans if they are watching. I salute you guys. I hope you guys make it through and can figure it out and beat them down because it's ugly out there. So if you look at this chart, this is a great example of what it is I'm talking about. If you do not understand currencies and how they matter in markets, you're about to learn something today. So right now, the question is this a Bolivar denominated chart or is it a dollar denominated chart? Because they're going to look different, right? And the reason they're going to look different is because, again, we have to understand how ratios work and how they affect the overall value of things, because that's ultimately what we care about. We care about how liquid something is and how that liquidity works, right? Because we all want liquidity. Everybody talks about liquidity, but nobody understands it. Tonight, you will learn about liquidity. Don't worry. But the important thing to understand about liquidity is that liquidity is something that is really, it's there when it needs to be there, but not when it needs to be there. Yeah, do that. I don't know if you're gonna find it here. I've never looked for it on here, so I'm not sure you're gonna find it here because, again, right, they're like a communist country, they're like China on steroids. So I don't know if you're gonna find. Maybe macrotrends.net, I think, is another site that I like to use.
Because what I wanted to pull up was dividing it, because
yeah, I know what you're trying to do, divided by whatever else. Yeah, but that's the thing. Everybody isn't. Oh, hold on. Delete the CAS. Oh no, never mind. Oh, BVC. Type in BVC. BVC.
There we go.
There you go. Bolsa de Valor. Yep.
Is that it?
Yes, sir. Boom.
Let's go to the exchange agreement. What?
Yeah, I don't know. Just X that out and make it daily. Not sure what. Oh, it's not gonna let you see it. Just make it daily first. Maybe it's not gonna let you see it just for the hell of it. Let me see.
BVC.
Fill out an agreement. Wow, yeah, it really is forcing you to fill out an agreement.
Number one, easiest way to get your keys stolen, folks, is start clicking random shit on TradingView.
Yeah,
it's crazy.
I'm not pressing.
Watch out.
Yeah, they want like I'm.
They can steal anything on this device. This isn't the one that's.
It's giving you shit, bro.
Yeah. But okay, I mean, literally, like the speaks for itself. Let's look at the 25-year.
I mean, this is the point, right? Point is that
when a market's small, you want low liquidity. When a market's big, you want high liquidity.
Right. That's one of the points. But here's the thing, because this just ties into that, right? And the thing I want to show in this chart is that what Mr. Dent doesn't understand is that the stock market isn't going to collapse, right? And the reason is
M2 money supply.
Right. That's the reason why. The reason why is because capital flows to where it needs to go. Always has, always will. I mean, maybe one day I'll go over this, but even back in the Great Depression, all the capital that was in the U.S., right, all the capital that caused the roaring 20s started leaving before 1929, before the crash, going back overseas. Like you can see this in the data. Like none. Like I promise you guys, nothing that I know is a secret. It's all out there. I'm really not any genius. Like it's really all out there. You just gotta look for it. And maybe it's because I have nothing better to do than think about this stuff, but I find it. And it's out there to be found. It's not really hidden. So it's important to understand that when you're allocating any currency, any fiat currency, any item of inflating value, right? Because the problem with economies that people don't understand is that every economy is one pie. We all live in the global economy, and that's one pie. That's why China has all the money and the US has none now, right? They sent all the production overseas in the 60s and 50s, and now they have all the money. And now they're at the point where we were at back in the 80s, 90s, where they're trying to get a domestic economy going. So now they don't really care about global shit anymore. Now it doesn't matter. So now it's okay for the US to be completely out of the economic picture. So this is why all of the things that we're seeing now, like the Great Reset, for example. Now this channel might get banned for saying that, but whatever. Now
whoa.
What happens? That ties into that. That's the thing. Everything that I'm talking about ties into everything. Like nothing. Like, and this is a crazy thing because for me, Bitcoin, right, was that seminal thing back in 2010 when I found out about it. I was like, holy shit, because it was obvious to me what that was. And that was the main reason why I didn't buy it. And here we are 12 years later, right? And that's the thing. So when you're allocating assets, you have to understand relative valuation. You have to understand that dollars don't actually mean anything because dollars are just now. Dollars aren't going to be here in the future because of what's happening right now. And what's happening right now is that they're literally trying to crash the economic system. And that's a fact. They came out and said it at the end of October. It's not my opinion. You can go on the World Economic Forum and look it up. They have a website. Not making it up. They came out and said, this is what we're going to do. Good luck to you because we're rich. That's dead ass what they said. I'm not making it up. So if you don't believe me, you can go look it up. World Economic Forum. They basically did it. I think it was October 31st. It was funny. It was literally like on a Friday. They came out. They said all this stuff. And they're not playing. Like they're really going to do it. And I think them removing liquidity from the legacy markets and letting rates shoot higher, which is what we've been seeing lately, interest rates in the U.S. markets, U.S. yield curve. When that happens, that means it's more expensive to borrow money. Now, how does the real economy work? By real economy, I mean legacy finance. And I learned this because when I first got into finance back in the day in 2008, when the crash first happened, a lot of people might not know this, but a big portion of that was a function of the money market and how short-term focus it is. So money markets in the U.S. operate typically on a 1 to 7 day basis, depending on the entity and what they're borrowing or how much they're borrowing and what they're borrowing for. And it gets very complicated. But long story short, that is what primarily started the crash. The cost of borrowing skyrocketed, kind of like what happened in September 2020.
With the repo rate?
Yeah, the repo rate, correct.
Mm-hmm.
The repo rate. So, okay, let me tell you guys what that is. So the repurchase agreement is similar to what you guys see in crypto, like we were just talking about earlier. It's basically the cost to borrow, right? And so what happens here is instead of taking a stable coin, what you're doing here is you're taking something that legacy market calls high quality collateral, also known as a treasury bond or any asset that the repo counterparty, the person taking the asset off of your books, is willing to take, right? It can run anything from a U.S. Treasury to a municipal bond to a mortgage, right? Like it could be a myriad of things. It just depends the lender and what they're willing to take and accept as collateral. So that's how that works. So let me relate that to crypto. in crypto, instead of taking a treasury or a municipal bond or what was the other thing that I said? A municipal bond or what is that? What the hell is that? Huh?
You say stablecoin?
No. That's what I'm talking about next. Anyways, instead of taking a municipal bond or Jesus, why I can't remember what the hell I said, or a U.S. Treasury bond, what you're doing in the crypto market is you're taking your actual crypto, swapping them out for stable coins, and they're taking your crypto and loaning them out to the market. That's what's happening here. So whether it be the person's borrowing to go short or long, who knows, because margin trading works how margin trading works. Long story short is that that's the plumbing for crypto versus the plumbing for finance. So where people are taking treasuries, municipal bonds, and things of that nature to borrow against to earn extra yield in the active market or in the market in an active capacity, right? Because here's the thing, repos run from 1 day all the way out to 90 days and even further, depending on the lender and what they're willing to do. So
sometimes they're called overnight loans. That's like the purpose, because the reason they're lending is so that each other can make their collateral requirements that are specified by law. And so the reason why this spike, and this is why, like, there are a couple things that I think are like part of like a massive collapse in like the global financial system. This is one of them where like when that repo rate goes up, like these are typically for like overnight loans.
Correct.
What that means is that the banks don't think that their counterparties, which are the other banks, they don't want to lend to them because they think that they're insolvent. So it's almost like they're projecting their own insecurities on each other because they're like, okay, well, that's like
precisely what it is.
So
because they lend to each other.
We must be fucked.
They don't lend to us.
Yeah, so like that's why that rate went up so high when they ideally want to keep it near like the 2%, like under the 2% rate. And so like that like instantaneous spike, that's like, like that's when I knew something was going on. Like that was like right before COVID kind of hit the scene. And like, I was like, hey, something's going on here. Like the seams are starting to burst. And that was, so like the other incident that I thought was like part of it, there's like Jeffrey Epstein dying, I think is like another like seam bursting and like this like whole like web of just like free money and like oil wars and like sex blackmail that was like holding the fiat legacy system together. Like it's literally held together through like rehypothecation of assets. It's held together by wars over oil and fucking sex blackmail. Right. And then like Epstein's gone, repo rate starting to show signs of weakness. And, like not really like wars for oil anymore, like the oil price went below zero. Like in like right here where like that's fun. Like in March of this year, that was like right when the oil price was like going really down. Yep. And raging Bitcoin bull market confirmed, priced in barrels of oil per Bitcoin approaching all-time high. New world order, leave it in the dirt. Like the market didn't demand oil, and since the market didn't demand the oil that much, you don't really need to go for war. That's why there hasn't really been wars around oil lately. And so like the things that gave the fiat like monetary cartel energy, like they're losing that energy because people are demanding a different asset. People are reappraising what is the risk-free asset, and they're starting to see that it is things like Bitcoin. Like it's like the risk-free. Like because it's not like politically controlled, it has, like I think there can only be one thing that has fixed supply. I think Bitcoin's the thing with fixed supply. Like so Hex doesn't have fixed supply, but like there's room for that in a portfolio, in an economy, because there's like the thing that has that fixed supply, and that's like an effective like measuring stick. But because it has fixed supply, and you can't stake it, like it has its own set of properties. And since Hex like has its other set of properties that are beneficial, then it's like there's room for all of them. And the things that have like Richard's words, product market fit. You know, like Bitcoin can be like the reserve asset that like dollars are. And that's a lot of overhead. And that can sometimes hurt the price, because if countries have to hold Bitcoin on reserve, that means that, you know, yeah, they may be trying to lend it, but also they could dump their big old bag of you know, reserve.
So do you know how commodity markets work in like the US and the futures, and like what they do with gold and silver and why the price doesn't go up? I can go into that a little bit.
Yeah. So like, are you talking about the
leasing market and whatnot?
Yeah, where they sell the naked shorts, and there's like the gold, and there's like the gold. Like I know, like Trace Mayer was a part of the legal efforts to fight back against it. He was part of it's called GATA, the Gold Antitrust Action Committee. And yeah, like what they're doing is there's more gold, there's more paper gold than there is physical gold that could exist on Earth. Like, and so
a lot of people don't even know that.
Yeah, and so they're selling the paper gold to push the price of the physical gold down. And the reason why they're doing that, because even like central banks have a fuck ton of gold.
Yes,
like, to them, the value of being able to issue and like give to themselves what is
they control the currency is more important than the actual gold, because people don't value the gold. That's
way more valuable than gold as a portfolio asset. And so you know, they suppress the price of gold to fight it off from being like the reserve asset that like people kind of cling to, you know, because they benefit from being able to issue the money and pay themselves first. Whereas like, that's why like, you know, like Bitcoin as like an alternative to gold in that setting is powerful, because it's in higher demand. You know, it's in higher demand than gold, maybe not by market cap, but by like new aggregate demand. It's like people are demanding Bitcoin in higher rates than they are gold. And the people that use because they're the ones that control the current gold, like they use that as leverage to be able to suppress the price. They don't have Bitcoin in the same quantities. And so they have a harder time suppressing the price. The only thing they can do is make the price go up. And so like, that's why like, you know, like I think Bitcoin is like, you know, and it's a form of overhead. Like that hurts the price of Bitcoin, because Bitcoin is that thing that is like a competitor to like the reserve.
A double-edged sword for Bitcoin. It's also one of its greatest strengths.
Yeah,
but I will say with HEX though, the user is the first person to touch the inflation, and that's also a consequence of good decision making that benefits the majority of users. So it's like your rewarding is your end stake, and you're also paying all your friends too at the same time in some indirect way. And I think that the fact that the inflation touches the user's hand first is so powerful.
Yeah, exactly. Because it's called the Max Kaiser always talks about like the Cantillon effect, and that what that means is like the people that are closest to the source of inflation get the benefit from it the first, because they can front run everyone in selling that new inflation. And so like in HEX, because like, you know, and HEX, you know, that like maybe HEX is going to be like the bedrock of some like future type of nation, because it has the growth built into it. Like part of why, you know, people are tolerant of central banks that assert monetary policy that like aims to grow the supply by, they say it's 2%, but it's really like 20%, but they like try to act like it's 2%. Like, you know, people are tolerant of inflation because usually that means growth. And so like
because they don't understand it. It's not really because they're tolerant of it. It's because they don't understand inflation. If they did, they would not tolerate it.
Yeah,
that's why I explain it all the time, because I know people don't understand it.
And maybe that means that, like HEX can be the, you know, like maybe some type of like new nation that, you know, can form where like HEX is like a reserve asset where, you know, it's kind of like where a nation, like, you know, in order to join the nation, you pay your tax. Yeah, like this. This is what I propose, that there's a flat income tax paid in HEX. Every new taxpayer tax their HEX onto the end of the national stake ladder. The national budget is 50% of the end stake principal plus the interest. So you split your stake with the government that you elect, that you agree to.
How would I do that? I would never elect.
Like this would be like, well, because it's voluntary. Like, you know, for like what is going to be the first nation that's like, would use like this is like a way that you could use Hex as a like to fund the services that you don't want to like personally pay for.
Right,
Like
your
maybe
roads, your utilities, your
Yeah,
public
yeah.
service
crowdsource
stuff, your
utilities,
parks, all
crowdsource
that
like
stuff.
physical protection, crowdsource internet. Like it's like just how you would
Yeah,
like.
no, you're. This is an interesting topic. I don't know if Peter Thiel or somebody was talking about this. How it's eventually, or maybe Chamath was talking about how the world is going to move away from nation states, and the nations are going to have to compete for citizens because the quality of life will be so much better across the globe that, and the freedom of movement combined
Mhm.
will just allow, in crypto, it'll all just like open up this new opportunity zone for. Basically, it's gonna decentralize life on Earth as we know it. Really, but this might take 100 years. I don't know.
Yeah,
We'll
I mean,
see.
it'll probably take 3 times 5,555. I think we need to like, or less. Like who knows? Like we could do this tomorrow. Because like you said, the like nations will have to compete because we're moving to an age where the assets are by default self custody. Like in U.S. dollars, like the assets are by default. You give them up to a custodian, so they can siphon from it, they can print it, and so they can take it from you. And so, like now that we're entering a reality where people are holding self-custody monetary assets, the nations that are able to collect this tax, because like you can't print this tax, you have to collect it. Like people have to consensually give you the tax in order to join your nation and in order to benefit from it. And so, like because Hex has this growth baked into it, and if like in this case, like the hex that you pay as tax to join that, like New Mexico, we'll call it New Mexico. You can join New Mexico as a citizen.
Hold on, where is it at? I just had it. I'm ready to move to Mexico. Shout out to Trustless.
Yeah, literally, we're moving to New Mexico, and what and in order to join you have to pay this this membership fee, sometimes called a tax, and but then the government that you hire to use that to make the life of you and your New Mexican citizenry better, like what they have as the budget would be half of the print of the end stake principal and half of the interest. Right. So it's almost like rather than getting a tax return, you get your half of it better. So it's almost like you're putting up money, the government's putting up money, you're both waiting for the coins to come liquid from the staking ladder, and then you get half of it back, and the nation gets that half as the budget, and that's what they have to work with. Like they wouldn't want to go fight a war because that would be
the ecosystem is going to look a lot different before that happens as far as
I mean this is like of course but like this is like a way that like that inflation that's paid to the stakers could be utilized by a nation.
Yeah, I think you have a higher chance of like this happening for Bitcoin, like in the next decade.
Well, yeah, I mean, well, so Bitcoin right along there, because like in Bitcoin, you can't earn the yield on it in this mechanism, but like there are other ways to put the Bitcoin to use. And there's sometimes the year it'll be better to sell the Bitcoin to cover national budget things, and other times it may be better to sell the Hex that came unstaked. And so but because Hex has that like built-in growth into it, where by having stakes you can exceed inflation, that could be a way for like new nations to grow, because like because it has that growth built in, which is why people are like, tolerant of like, what's marketed as 2% inflation, like people are tolerant to that because there's like some growth associated with it, where like things generally get a little bit better. And, but in this case, like rather than that being only like paid for by this, like the inflation is paid for by all the citizens. In this case, it's not your citizens that are paying for it. It's other Hex holders who aren't part of this group. Like, because like, that growth that like the New Mexican nation gets to experience, it's paid for by liquid Hexicans, whether they're part of this like tax paying base or not. And so like, I think that like, Hex is very unique in the sense where it could be a very valuable asset for, nations, like this old style of nation, they fought with their military to protect physical assets like gold, oil, and land. Now that there's like another type of digital asset where like physical force doesn't really protect it for you, and the best way to get it is for someone to voluntarily give it to you in exchange for something else. Like with that being the new reality that nations have to compete within, like for a nation to choose the right type of asset that they're going to collect tax in and hold national reserves in, that's going to be a really important decision for the policymakers of any new nation to make, because like there's real profit and loss involved. Like in the current world we live in, like, the people with the military can like guarantee profit and the people without it can guarantee loss. Whereas
man, you're speeding up the timeline a lot when you're talking that way, because when you start talking incentive structures and then that it's enforced by unbiased code, you force a process on the earth to change, and it's not something that it's on a different timeline then. And I honestly, I'm right there with you, man. I think this is coming like sooner rather than later. I think most people are going to get they're going to have
maybe it's up to us, like who are going to like the enterprising people to organize,
right?
Yeah,
to a point, right? The power law will get to work, and then it's just kind of up to us to just make that little bit of a move, add a little bit to it. And I think that has compounding effects. If each person onboarded 6 people, that'd be a lot. 22.
Oh yeah,
that'd get us to our 100,000 person target by the end of the year. Her accounts stake
real quick.
So do you want to? We should talk about onboarding, because there are different ways. Like I've thought a lot about this recently. Like there's kind of like the grassroots like Twitter onboarding, which like I like to be active in. Just like chilling.
Like talking no coiners about 40% interest. That works for me pretty good.
Yeah.
I don't really waste my
there's
time
like kind of like the real life onboarding where you're like onboarding people that you like know and like. But an alternative way that I haven't heard too many people talk about for onboarding new people, I think comes in the form of investment trusts. So like, for a lot of people, like most people, like
you mean like grayscale type setup?
Yeah, or even like at like smaller scales. So like for instance, like you could set up it only costs about like $17,000 to set up a hedge fund where you have the general partner and you have a limited partner, and you can file. It's called Reg 106D, or no, is it Reg 506?
I think it's a 506D.
Yeah, Reg 506D, and so like you can take in like per offering that you file with the SEC, you can take in 35 non-accredited investors, and you can have up to 100
million
accredited. And so like right there. So
there's a dollar number associated with that too. I can't remember what it is. I think it's 100 or 75 million. I can't remember what the number.
Well, so or you can take in 100 individual accredited investors, and accredited investors are people that make over 200,000 a year, or they have over 1 million in assets, not including their main residence. So like there's like so like per one of these filings, like where you could set like anyone on this call could set up a hedge fund where like you can, rather than like telling like people individually like, okay, like now download Coinbase, link your bank account to Coinbase.
Yeah, you just take the capital.
Your MetaMask. Yeah, and so like another like an alternative for like onboarding capital into Hex, that I'll share more later. Can't talk more now, but what I have found is that is a completely valid alternative way to onboard capital into Hex, is by, rather than like for the rich people that in your life, like rather than trying to get them to spend all your time like, okay, download MetaMask, back your seed phrase up, go to
going through the motions.
Sometimes the fees go up when there's lots of trading. Like, okay, you got a stake, and then now you wait. Like, rather than doing that, like for someone who maybe like doesn't want to self-custody, like there's a whole other layer of onboarding that I think comes in the form of like just like pooled investment. And so like that, either that comes through like, you holding your mom's Hex, just like personal favor, for people that you trust, where they trust you, you can hold it for them. for people that are kind of maybe outside your own like little personal network, they may want to have some other type of like recourse, like establishing some type of like, like a limited partnership that people can, just contribute money to. And then with that, like you as the fund manager, you can buy HEX with that. And you can, and just by being the one that's like working on that, you can negotiate like, a management fee, like like the standard is like 2 and 20, like a 2% management fee, 20% performance fee. So like you can get paid on the gains that you just get by sitting on the HEX. And you're, so like there's other alternatives just to like onboarding individual people. And I think that like people that have had exceptional performance with HEX, because there's a lot of like literally there's some people that made a lot of money. Like just look at anyone who bought HEX from, January, February, March. Like people that bought HEX in that range, like have had massive performance. And like that's track record that you as, a potential fund manager can point to. And so you can, raise money for, you like, it's like a point of credibility where like, people are going to want to like, of all the ways that they could hold crypto, maybe they're like afraid or like not knowledgeable enough to like take the first step. You can like onboard them through that where like, you don't need to get them set up on Coinbase. You're like, okay, well, here's this investment trust. I'm the manager. The performance fee is this, the management fee is this, minimum investment is this. And like, you can onboard pools of money where, you can go through it like channels that they may be already comfortable going through, like people invest in funds, like, big money people invest in funds all the time, but maybe like buying and like self-custodying like a crypto coin, maybe they aren't so comfortable with that. But, and so like there's like a whole pool of capital that, I like, when Richard talks about like a Grayscale competitor that holds HEX stakes, that's like one avenue. This is like a step down from that where, because the people that hold the Grayscale, like Bitcoin Trust, like those are people that can't, it's like that can't self-custody it because like, maybe by like their like charter or like they have like some reason why they can't because, they're paying a premium for it. But
it's conflict of interest.
For these other, for like a step below that, where it's like not like public market money, but it's like the large pools of like investable money where people would otherwise be investing in like real estate syndicates or even like angel investors who invest in startups on like AngelList. Like there's all these other pools of money that are outside of retail and they're not in the public markets. And that's like huge. There's huge amounts of money there that could be onboarded to HEX. And I think that like, more Hexicans that are like, really that feel really capable in like managing funds and have like a track record of good performance, like, good performance in HEX, good performance out of HEX. Like those people I think are going to be really critical for like the mass onboard, because like, I'm not talking about onboarding of individuals. I'm talking about onboarding of new dollars coming in. And like, I think that's where like the lion's share of new dollars are going to be coming in is going to be through other investment vehicles, where it's not people necessarily, even though like, the crypto is made to get rid of middlemen, there still is demand for people to not have to custody their coins.
100%.
And so like that's market opportunity for fund managers, and HEX is a strong one to hold. Like if you're a fund manager, because it's something that, there's like you're earning yield, like there's whole
like a cheat code, man.
Yeah, I mean, there's and also like say you're a hedge fund manager and you buy a bunch of HEX and you stake it for 15 years. Now you have however much HEX you have times the number of T shares times 3 because you get the longer pays better times 10%. Add another 10% for bigger pays better, and now the value of your T shares. So say you had like $1 million of HEX. And then you can instantly convert that into $3 million worth of T shares. And like, depending on how tolerant your investors are, like, you could have some serious markup.
I would think that if you were going to collateralize something like that, you would actually not get the bonuses and the collateralization of it. You'd only be able to collateralize the 1 million, even if you had $3 million in valuation.
Or something in between, because it's like, and there are different ways to, kind of, chop it up where there's, the value of your HEX T shares, that's like one thing, but then there's also, you know, like the projected value of those, you know, like your future,
100%, dude.
you know,
Yeah,
and
that's
so like, you know,
what
and that's greater than the principal, but maybe it's not the full value of the T shares. And so, you know, like maybe you can, you know, where you have future earnings and they're discounted to the present. And so like, you know, like the HEX kind of, because it guarantees additional HEX, it doesn't guarantee future price, but it does guarantee, you know, some number of HEX in the future. And then there's like, you know, some uncertainty to it. So like, there's like a range for like what it could be in. Like, you know, I think HEX can be a really strong asset to hold as like part
It
of.
is, man.
Like
It's not that it can be. It is, dude.
Yeah.
We all know it is, because you don't know why. Because there's a guy that's staking $1 million of coins for 60 days and raking out $30,000 in interest at less than a penny. And so there are real returns here, and the system has value, and it's operating, and it's going. So like, the fact that the price of the coin is directly tied to the price of the shares, which is directly tied to the share rate, like all that being tied together, it's just this propulsion mechanism that just
Correct.
has mass, and it's moving forward and upward. And
so let's harp on this a little bit. And Dip, I'm gonna go back to my screen to just go through these charts.
Okay.
Let's harp on that a little bit, because people are like not understanding, right? HEX is brand new, and people are literally printing money every day, all day, non-stop. What's confusing about this? I don't know. But just pay attention to the ending stakes in the Staker app. And if you don't have a Staker app and you're new to HEX, then just go to income.watch, download the app, and check it out, because you're missing out if you're not seeing what people are doing in real time.
The thing to keep in mind is that the yield generating mechanism has an expiration date, and when it goes out, instead of when like, if you have a piece of equipment that makes a yield for you, like you own a company or something, and you're getting a return on it, and then the machine dies, you have to go out and buy a new machine. The difference is when your T shares expire, they don't die. Like, you're printing more coins, which is making the supply go bigger for everybody. And they're essentially, when you end your stake, you're raising the price of the value of the system higher, because the T-share price goes up, which in effect raises the price of everything else and the payouts and everything else.
I mean, look at this chart.
It's like a domino effect. It's what you're seeing right here, right in front of you, right here. This kind of up and to the right thing that you got going on.
Yeah, it's crazy.
That's kind of what we're talking about.
And you know what today is? Today is getting very close to the party. Now look at the T-shares, right? I want you guys to notice how the T-shares are just not that close to the bottom or to the previous low as HEX is. Just I want you guys to just notice that, right? Like the delta, the difference between the previous low here and this current low is a whole lot bigger here. Like, it's kind of crazy. It's just not really trying to get close.
Well, because it has that, like, whatever, like on the first day of big pay, like the day after big payday. So day like I think it was like 353.
353, correct. That's right here.
Like they're like whatever that gap will never touch again, because like if you go to GRAPHHEX.ROCKS and you look at the share rate abruptly jump from, it was like 1.1 to 1.6. So like 1.607 and then 1.117. So if you go 1.607 divided by 1.117.
You have the chart up right now, brother?
Yeah, I do. Like that
went from 1.1 to basically 1.6 in one day.
Yeah, exactly. So like that's like a 43% difference. And so like that and it will, I think the gap will actually continue to grow, because like every day that goes on, and like, you know, I mean, so every stake that ends ratchets up the T-share rate. But the like another way to think about it is that like every day it's always ratcheted up to like the maximum that it could be ratcheted up to. And that's always set, like the person who ratchets up the T-share price the most every day is a person from day one whose stakes end that day. You know, like people from day one stake between day 2 and day 5. So like, you know, and not every day has stakes. So maybe sometimes it's day 2, but like it's always like the longest stake that had been active up until that point in time is the one that ratchets up. It's like the maximum ratchet up that the stake price or the share price can experience. And so like as the, you know, like day one stakers end, then that share rate is going to continue to ratchet up at and I think this is going to like by default, the share rate is going to ratchet up at a minimum of 3.69%. Like the share rate matches the supply inflation.
Yeah.
But because there's longer pays better, and then there's big payday, and then there's like the people that staked on day one who like every day up until day 5, a day one staker is ending. And so that like really ratchets it up. So like the T share rate, like that different, like, so the price will never it mathematically can't even approach it, because like the share rate is always going to be increasing at a faster rate than like what is constant, which is like, so like, you know, it has a 3.69% baked in, and then like the additional increases as a result of longer pays better and big payday. And so like the share rate is always going to be like increasing, like at least over this first fit. Like, so like, that's why like there's a chart that I like to point at, which is I made it like off the cuff, like on one of my streams, and it's actually like really, you know, like a really important concept to understand is that like there's kind of like these 3 different phases of inflation in HEX. And so if you go back to my screen, the like, you know, first year we had the adoption amplifier inflation plus the constant 3.69%. And so the inflation is really high. It went down, but like there's these like little like big payday kind of peaks in the inflation. But now it's at like a medium level. It's like at like I think like 5 or 6%, like including the big payday payout. And then after like, so like during this whole time, the share rate is going to be ratcheting up like faster than 3.69%, because it includes the, you know, the just like the baseline 3.69%. So like a person, like right now, a person who is staking for one day, like their little baby stake, their little stake for ants is going to ratchet the price up at like just about what the inflation rate is increasing over that time. Whereas somebody like, so right now, what day is it? Like day like 500, 600 something? I don't even know. So like,
I thought it was 4 something.
Yeah. So okay, say it's like day 450 right now. There's also somebody who's ending a 450 day long stake, and they're ratcheting up the share price by a higher amount than like a 1 day staker who started yesterday and ended today is, because like in order to maintain that person could not have earned more HEX by staking for like that 450 days and then like another like, you know, that 450 days and then do a 1 day stake, in order to make sure that a single 451 day stake would be more profitable than like a 450 day stake from day one plus this additional day, the share rate has to increase by that incremental amount. And so like during this time, the share rate is actually increasing by 3.69% plus like, you know, like these like effects from the big payday. And then only after day 5,907, the total supply is always going to be increasing at 3.69%. And then also the share rate is going to be increasing at 3.69% plus up to like whatever percent increase is a result of, you know, the like, because then from there, like, you know, the like every day there's like someone who's pushing the share price up the most. And so like after, you know, after we get through day 5,907, there's no longer people from the launch phase pushing the share rate up. There's now early max length stakers starting at like day 352. And so like then from day 5,908, like the person who is pushing the share rate up the most would be a max length staker from day 352. And so like, you know, the share rate I think is always going to be increasing by the baseline of 3.69% plus the effect that the longest stake that ends every day, like every day that goes by, there's a stake that has lasted the longest that is ending that day. Whatever that does to the share rate is like what the like long-term share rate inflation or what the share rate price increase is going to be. Because I think that was something else we wanted to talk about on this stream was that they're like, you know, what is the future share price? It's very hard to estimate because you don't know because like future stakes impact it. But like, you know, you can at least guarantee like what the maximum share rate would be starting like, you know, like on day like 5,555 from now, because a max length stake starting today is going to be it's going to be able to ratchet up the share rate higher than any share or any stake that happens in between now and then. And so like, it's hard to estimate what the future value is going to be, but like, you do know that it's at least growing by 3.69%, you know, compounded with like the, you know, how much the longer pays better ratchets it up. So I'll have to do some more rigorous math on this topic, but like, that's like what gives Hex like long-term financial energy is that there's always like meat on the bone for future growth because, you know, it's like everyone's always chasing after the share rate that is increasing at a faster rate than everybody but one person. Like somebody who staked on day one for the max length stake, like they got the most shares that they ever possibly would have. Like, and then that person who staked on day one through day 5555, if they roll into another max length stake, then like they will always be outpacing the share rate increase. And so like the staking ladder composed of max length stakes, they are the ones that are really driving the share rate. And so like, you know, and that's what amplifies the like the compounding interest that can take effect. And it gives future stakers like energy to like sustain them into the future. Like, you know, it like leaves, like, I think Richard, the way Richard said it was, it like leaves like something on the bone for like the future stakers.
Always leave some meat on the bone, bro.
Yeah.
Come on. That's why you'll want to keep using the system in 10 plus, 15 plus years, is because there will be so much gravity, so much weight behind the system that it'll still be producing returns either on the coin appreciation side of the equation or on the APY side. So it'll actually benefit you to have liquid coin on one hand and some staked coin on the other in the end game. Early on, I feel like the T-share is the play. But
yeah, I mean, the T-share is definitely the play. But then, like, if you think about it, like, if you have part of your hex bag that's staked for a long time.
If we have a 300x run up this year, then maybe the staking wasn't the play. You know, it's like
but
like, you know,
what it does is like, you know, if you have a lot of T-shares, like, so meaning you have some of your hex staked for a long time, it increases the amount of liquid hex that you can hold where you're not experiencing inflation. Like you could have part of your portfolio, you know, helping make up for the inflation that, like, you know, so say, okay, you can increase your shares by up to 3x by going longer pays better. So like just off, you know, back of the envelope, that means that you can hold, like you can keep a third of your hex staked for a long time and then keep the remaining 2/3 liquid, you know,
right,
to potentially sell into pumps. And like you are maintaining pace with inflation because your long stakes from a third of your portfolio are earning enough yield to make up for the yield that you're paying from your liquid stakes.
So dude, if you take a loan on that, then effectively you're 6x leverage or 6x because you're getting 3 times the shares on one end, and then you're getting to collateralize, let's say 100% of it on a loan, let's say, just for the fuck of it. You're 6x leverage.
Yeah, with not 6 times the risk, which is interesting.
Exactly. That's the key. That's the key. Is you're not 6 times the risk. Man, we're just freaking out here turning and burning. ladies and gentlemen.
Yeah. What? Anyone in chat saying anything cool?
Yeah, I've been keeping an eye on it. We've been.
Somebody asked because this
Yo, Wales, you're quiet, man.
is
You got your mic went really quiet on us.
Yeah, sorry about that. Let me address this question that was asked in the chat just because people ask these funny questions. Where is it? The ADA question, which is a good one to go over so people can understand the difference. Knowing Hex and ADA are two completely different realms, what gives Cardano their momentum? And Parlay continues, out of respect, we gotta see what we're competing with, which is fair. And it's very simple. And you give him the appropriate answer. And just to clarify this, Hex has infinite value. Cardano's protocol does not. Just so we make that clear, because what does Cardano's protocol print exactly? What does it do?
You're with Cardano also just on a very simple level. You're relying on future future projects being built on it and expectations. Whereas with Hex, you're not. You're just, like he was saying, you're just printing. It's a financial instrument versus a protocol. Big difference.
Right.
Both have value. One has infinite value.
Correct.
Because it's a whole complete system. That's like the key with Hex, is like it's a whole complete immutable contract. Like never before existed. So like that's the key.
Yeah, I think you answered it right. Like where it's a financial instrument, like it's a financial like where these other things like Ethereum, like yeah, there's like Ethereum the token, but then there's like Ethereum the blockchain, and Ethereum the blockchain is the like financial rails, and I think that's what Cardano's probably trying to compete with Ethereum in that case, and that like because if you think about it, like the thing that makes the price go up is the like people buying and holding until death and not even passing it to their children. They just die with it. And, like, so things that you buy for the sole purpose of holding, like those things have a high likelihood of going up on a sustainable basis. Whereas things like, like Ethereum, like if you look at the Ethereum price chart, the price goes up when there's a lot of business activity happening on top of it, because people need to buy the ETH to buy the other thing, like they needed to buy the ETH to buy the HEX. That pushed the price of ETH up.
Yep.
And so like, the price of the tokens related to these blockchain networks is highly driven by the business cycles of the things that are built on top of them, because we're like, like in 2017, there was ICO boom. So like Ethereum was running because in order to buy into the ICO, you had to buy Ethereum and invest in these promise coins. And then the people behind the promise coins, they held the Ethereum for a little bit, but then over time they would just start dumping it. So like that's why Ethereum ran all the way up and then ran all the way down, because like all the Ethereum that was bought for the purpose of investing in DentaCoin, that all got sold after a while. And so like, that business cycle is like what like, the boom and bust cycle of Ethereum is like highly driven by people investing in other things where the onboarding ramp to the investment is through Ethereum. And so Cardano, like if Cardano succeeds, it's probably going to, have something similar to that, where like, there are going to be times where the price is running because a lot of people are issuing, coins on, or, they're in like maybe yield producing opportunities where you need to buy Cardano in order to participate. And so like, the price can run up when that demand is high, but then when the markets kind of turn and like there's less tolerance for that type of risk, then the people that raised the Cardano are now going to be selling it, and that'll run the price down. And then like in aggregate, like like when you pay the gas fee for Ethereum to enter a hex stake or to make a swap or to buy anything else, like you're just taking Ethereum that you bought and you're sending it to a miner where the miner has upfront expenses that it had to bear. The miner had to, get the facility running, and it had to power the equipment, and then it got paid after the fact. Right. And so they are like that's like active selling. So like having an active, like it kind of like, is downward pressure on like the token price of the blockchain protocol, is that, you're paying people who are net sellers because like, they're not like people that are mining, they're not buying with new money coming in and then hoarding. they're paying for something else. Like with their new money coming in, they're paying for electricity. With that electricity, they're earning Ethereum, and then they have to sell some of it. So it's like people that are mining, like they're like, yeah, like they provide like the network support, which has its own kind of value. It's not related to the price, but like, they're providing something, so they're getting paid for it.
Mhm.
But like they're a net seller. They're not a hoarder. Like, maybe some people are mining with the intention of hoarding till death, but like the Ethereum miner is providing price resistance, whereas the Ethereum hoarder is providing price support. And so like, by like, so that's why I think that like the thing that like makes the blockchain protocols go up in prices is like if there's a lot of business activity that's happening on top of it. And that's why I think things like Cardano are going to have a hard time, is because like financial network effects are very real and it's hard to overcome them. And so since like Ethereum is like the leading like blockchain like protocol for financial instruments, like people who are launching financial instruments on Cardano aren't going to have access to those liquidity pools. And so like, I think that like, the Cardano coin is probably pumping just in like, just speculation. So it's like not like a result of like business activity, like, cause like who's raising money for an ICO in Cardano, right? Like, so like there's not a lot of Cardano being bought for the purpose of investing in something else. And, but there is that for Ethereum. And so like, I think it's going to be really hard for things like Cardano to outcompete, like like Ethereum. Like it's like a tough thing,
So let's talk about the staking in Cardano. What exactly does it function like? Because I know it's not similar to Hex.
I have no idea.
You don't? Okay, well I do a little bit. So let's go into it. So it's going to be staking pools. That's how Cardano staking works. So it's not like you have free access to, like, you share what you earn. You don't just keep it. So yeah.
So is the purpose of the staking in Cardano to provide network security?
I believe
Yeah.
so.
Okay, so it's part of like some like consensus layer.
Correct.
Okay, so I actually think that like.
But you have to be a part of a pool. That's the catch. You don't
Okay, so it's
just get
kind of like
to do it yourself. You have to be part of
it's
a
the same as
network.
Bitcoin mining. That's how you have to combine resources to get
Okay, so
decent
it
yield.
sounds like the Cardano staking is part of like it's not, is Cardano not proof of work? Is that the whole point?
It's proof of stake.
Proof of stake.
Okay, yeah. So like the staking is part of like preventing counterfeits. That's what it's for. Like the Bitcoin mining, that's to prevent counterfeit. The staking in these proof of stake, it's to prevent counterfeit. So like they're providing some value. They're bearing opportunity cost, and the staked coins can't be sold, so they are providing price support. But like,
yeah, but what's the
like
value?
there's risk in holding the proof of stake coins and like staking to provide that, because like
what's the value proposition? There is none.
I mean, like maybe if like they can get the billions of dollars of active financial activity that's happening on Ethereum to move over, then yeah. But like like the only benefit is low fees, and the low fees only impact.
Well, low fees are merely a function of the network effect, right? So
because like the people that have a ton of money who are like like 90% of all the activity on Ethereum is probably from wallets that have a balance of over $10 million. So they don't even fuck about the fee. But the person buying $100 of Hex,
it's gonna kill them.
Thinking like, like that's gonna eat into like more than their principal. And so like and so maybe some of like the smaller dollar use cases move over, but those smaller dollar use cases moving over
don't matter.
Yeah, that doesn't like, that's not what can like unroot the financial network effects that like Ethereum has in this case.
Right.
So like,
yeah. So there's the answer to that question.
So if I can add just a little more,
ahead,
I'm checking out this Cardano staking stuff, and like, so you can delegate a set amount of data, and there's two sliders here that basically determine your yield. The first slider is what percent of eligible token supply, which would be the circulating supply, is being staked at a given time. So as more coins are staked, there's less reward.
Pretty much.
And then the other slider, so that's not unlike Hex. And the other slider is the how many transaction fees are being spent on the network within a day.
Yeah,
I mean, like if the network's actually being used, then yeah, your rates go up. But like if 84% of eligible coins are staked right now, which is what the default was at, so let's just say it is, and you were getting, I think the transaction fees were at like, I think it was saying that you were going to get like 2% because the network's not being used right now, basically. But when it is, that'll go up. But
Right.
you'd be getting 2% for staking for 1,200 days.
I
Like
mean,
that
hey,
doesn't
look,
even compare
it's not
to.
impossible that it's not going to be, valuable.
No,
in
it's
the
like
future, but right
let's
now,
say
I mean, it's a
50%
long
even.
shot. It's literally a long shot.
Yeah, and also anything can pump. Like literally everything.
Yeah, I mean, ADA pumped and it dumped, so whatever.
Yeah, like
Well,
and
yeah,
things
but
can pump
my
even
whole
for
point is that your reward in ADA is a function of network usage, but Hex
Right.
it's not. It's
It's
like
not.
you're not relying on anybody else to really use it because the whole point is not to have to use it. You lock them away and you don't have to use
It
them.
exists. Yep. I mean, look at this chart, right? So in this chart, we have T-shares are currently at 6,600 and basically 39%. Hex index is at 3,671%. Ethereum is down to 1,221%. Bitcoin still yet to wake up. Now, what I want to highlight is how interesting it is that, I mean, this is just crazy, right? Hex is just redonkulous. Like it's just outpacing things in such a way that it doesn't even make any sense. I mean, it can't even make a real low. Like it can't even get sold off properly, right? Like how crazy is that? Like who could say that?
A92 on ETH there. It's sold. I think it made a new low.
You serious?
Look at
Wow.
there on your orange line. It was like day 92 or something like that, roughly.
Oh, that was yesterday. That was yesterday. Yeah, this was or the day before yesterday. Right.
On ETH.
Yeah, yeah.
Not for whatever. I said 92 because if you go back, I'm just saying that was like a last decent low. I mean, you were on the right chart. I was just
Sorry,
never
no, I moved by mistake.
moving
I wasn't
on.
trying to move it. I wasn't trying to move it. Sorry about that. There you go. I was
But yeah,
just
no, I mean, Hex doesn't ever go lower. It just always goes. It just always goes up, dude.
This is
We're
okay.
bitching about sideways. We're
Yeah, that's crazy, right?
we're making money and interest, bitching about sideways. It's like,
Yep.
God,
It's kind of funny. It's kind of funny.
yeah, it is funny. It's like, but you're like itching your neck because it's like it's gonna pump. It's just like when do you want? Is it gonna be in 2 months or 3 months? It's not even a question of is it gonna pump this year or next year, really? Because you know that there's gonna be a pump this year. Did you see that candle today? That thing came out of nowhere. It was a 22% candle. It came out of absolutely nowhere, dude. It was $117,000
I was a little upset
market
about
order.
that candle. Yeah.
where is that? Where like on the
Well, we had a it was like a $117,000 market order on USDC pair, and then like
oh, I see.
another like $5 million, or not 5 million.
Yeah, let me pull it up.
It was like 50,000, or I think it was $50,000 on another exchange.
Maybe it
And
pops.
they both orders went in at once, and the price wicked up 22%
Wow. Hex is
instantly. And they're in the last 1, 2, 3, 4, 5, 6, 7, 8. So the last like 8 hours, we've been basically selling off from that
that had to
22%
be on
candle.
V2, right? I don't think I'm gonna find it here.
USDC V2.
Yeah.
I mean, that's what it looked like when we found the bottom on. I'm looking at the chart now. When the bottom was formed, like in mid-December, from after big payday sell-off, and then like it was down in like the 0.3 cent range. There was like a massive wick up. They kind of got sold back down.
I see it.
Turn the chart right now.
It was on December 9th.
Yeah, and it kind of like
26%
Oh,
with
you
a
guys
wick
talking
back
about back
down.
then. My
yeah,
bad.
so like there was that
This
wick,
one looks similar to that, but except that this one actually got wicked down pretty far back down the other side. So
yeah, it kind of looks like the one that was on like January 18th. Like it's like right around the same levels. Like the price went from like the 0.7 range up to like wicked way up. But like it's like at this level where, you know, between 0.65 and like 0.8, like, you know, like that's where massive buyers think is a fair price.
Yep.
And so like, you know, we saw a big wick there, you know, there, I mean, there's other big wicks like similar in magnitude. And then, you know, right now is just like kind of another one. And, you know, like on when the prices are going down, like, you know, that same buying energy that like pushes that wick up, like that's kind of like blended in with all of that. And since like, you know, like the downward pressure kind of stopped on the 23rd, you know, like those big like one-time purchases, like, you know, it's not felt with the same selling pressure that there was on like February 13th.
Correct.
You know? And so like, you know, like when price kind of reaches the bottom, like those big wicks up kind of reveal themselves. And those can be like, you know, kind of bullish signs on the chart because, you know, like that means a big order was placed there. And, you know, like that could be eating into some of the liquidity, and that can be pushing the price up.
Sure can. All right, so we're gonna go on to this next chart, and I mean, this next chart is Hex post big payday. So far, we're at 98 days. We're currently down 53% from the first halving, but we're still up 56 and 11% against the second and third halvings, respectively. The first halving on the chart is the orange line. Hex big payday, post big payday is the pink magenta line, showing 153%. First halving is showing 330%. The halving index, third halving index is showing green. The green line is 138%, and the second halving index is blue at 98%. And right now, Hex is on sale. And I don't know about you guys, but I'm definitely ready to buy this dip. I'm literally just waiting.
Are you signed up for the dip catcher email alerts?
No, I'm going to sign up though. I didn't know you had anything like that. I really didn't.
I'm like, oh, dude, here, show my screen.
Hold on, let me pull it up. Where is this thing? Give me a second. I gotta find it. Where are you? There you go.
So, do you know PineScript?
A little bit. I mess with it in trading.
Oh yeah, on TradingView. So I like built this indicator. It's called Dip Catcher. It's really like a modified Bollinger Band. It's very inspired by Bollinger, you know, but with like specific like order placement criteria. And so what I do is I have this linked up to one of my Anvil apps and from dipcatcher.com. So if you go to Dipcatcher, so everyone who's watching, you can sign up for this.
That's great Google placement, by the way.
Yeah. So
great SEO. Great SEO.
I love the name. It just came to me one day and the domain was there.
Yeah, that's pretty cool.
But yeah, so like you can on dipcatcher.com, you can sign up for there's Bitcoin and there's Hex where you can sign up for email alerts. The Bitcoin dip alerts, the performance, like the average performance of the buy alerts is 405%. And that beats if you had just dollar cost averaged every day from when these started till now. Like these have performed, or these have outperformed a daily dollar cost average in Bitcoin. So I'm pretty proud of that. So like so far this works on Bitcoin, and just recently on TradingView, because like the TradingView data for Uniswap doesn't go back very far, and it's like kind of wonky.
It's a little weak.
So like just recently there was enough data to run this on the daily chart on the pair that's shown on TradingView, which is on HIT BTC. So it's a little different than the Uniswap price. Yeah, and so now I have it running on this one, and so like the dip catcher algorithm, like when you run it on the daily chart, it's more conservative. When you run it on like the 1 hour chart, you know, it's buying a lot. And so like a good happy medium that I like is the 6 hour one. And so the algorithm, like so I turned it on like sometime in January. So it was like up here when I turned it on. And then, so the dip catcher, like, so these yellow dots are the filled orders. So that's like the price target it gives you. Yeah. Sometimes they get hit, sometimes they don't. And so the average, like, so the algorithm had you buying in between 0.082 and 0.065. So like, you know, you average down in there, you're at like, you know, .07.
This is pretty cool because it's giving you, good entry points that are fair. Makes
Yeah,
sense.
yeah. And so like
Based on volatility, they're based on risk management, tactics really,
yeah,
because
just like following strict rules.
manage volatility when you're entering a position. Because look, I don't know about you guys, but I am trying to maximize my coin holdings. Like, I don't care how much I'm buying. I want every single coin I can get because I understand that this pays a yield. So every coin matters. So every time I'm buying, I'm literally just trying to maximize my quantity of coins. That's literally it. I don't care what the fee is. I'll pay whatever as long as I get the most coins from that DEX. That's all I care about.
Mm-hmm.
So that's my whole aim, because again,
yeah, and this definitely helps you.
Game, so
yeah, because what it at least puts you in is like it always puts you down at least one standard deviation below the average. Like so the way this works.
Explain a standard deviation before you continue, because people need to know what that means.
Okay, so like you take the average of like so every day that goes by. Let's just look at the daily chart. So every day that goes by, like just look at these individual candles. So like we're gonna look at 1 month of candles right here. And let's look at the daily chart. Oh shit.
Just double click on the margin if you want. That's quicker.
So like just look back like 30 days of, so right now it's like late February. Let's go back to late January. So like over these 30, like that 30-day period, like every day there's somebody who was the bottom of the wick. So every day, like imagine
for sure.
A single person that was they got the best price of the day. Just so like you're on a podium. There's 30 winners.
Yeah, somebody was buying that day for sure.
Yeah, and like sometimes the person pays higher. Sometimes they pay lower. But like you average out all of the bottoms of the wicks, and you just take the moving average of that. Like if you treat that as like your first rule, that you always buy below the either the 30-day or like the 30 like times.
Yeah, I get what you're doing here. You're like stacking those as an average.
Yeah, it's like so you're
as a measuring stick.
Yeah, because then if you think about it, it's like like you're competing against 30 people, and like if you're at least in the bottom half, like you're at least in like the top 50% of those, like you're doing fine. Like what more can you ask for? And so like what this algorithm does is like it uses standard deviations, which is like based on how much it moves. It's like a measure of
variation in price.
It's like the square of the variance. So it's like it's a measure of like how much it's moving. So like when you have a lot of volatility, the Bollinger Bands expand, and when you have like right here, price is moving, so that means the bands expand because the standard deviation increases. When price is moving sideways,
dude, your purple target down there is right where my target is for the low that it was possible. So which is a half a cent.
And so buying into these levels, like you're buying at the green level, like you at least know that you're in the top 50% quartile. If you buy at the blue one, you're in like the top 97% quartile. Like, and so, because like you don't know, you can never predict what the price is going to be. But if you can just be at least in like that, like, bottom like 2% of buyers.
Yeah, for
sure. I honestly think if you're in the bottom third, you're set.
Yeah,
in HEX.
I've paid over a cent for some HEX, man, but the majority of what I own is under half a cent, bro. Like straight up.
Yeah. I mean, it's so funny. Like months ago when HEX was reaching a penny for the first time, I was watching the stream on Hexo, and I literally like just aped into penny HEX, trying to make it crash a penny.
That's cool, bro. That's very cool.
Yeah, and I bought higher, and I bought
I bought over. I don't care.
I've nailed some fucking wicks. I've literally nailed some like awesome.
Like you could have bought HEX at 2 cents. You're up already. All you gotta do is sit on it.
Yeah, and also because like the staking mechanism enables you to make up, like even though like you like the more HEX you start with, the more shares you can get.
Yeah, exactly.
So, like the you can make up for buying high by staking long.
Yes.
Like you bought high, okay, just tack that on to the end of your stake ladder. You bought low, like okay, maybe keep that liquid and look for a big pump. And you can make up. You can get like 3 years of stake gains in maybe a couple week pump. And so like, you can, and then by doing that, like, I think there's never any shame in selling, because it's like people selling is the source of opportunity. Like, if no one was selling, then there would be no opportunity to buy at a low price. And so like, research, like, and this is another thing that I want to build. I want to build something that's called sell to a staker, where you're not selling into the Uniswap liquidity pool. You're selling, and in the transaction of the sale, it's automatically staking. And you can maybe even give a discount to someone. Like, you could give someone a better price if, like, say you have, you're selling that hex, but you also have hex coming out in the future. So maybe you want to, you want to hold price up. And so maybe like you're okay with giving someone a 5% discount if you can guarantee that the hex that you're selling today is being staked out for like a long time and going to be providing price support to your future stakes. So like, maybe that's something that the community could use. Would be something where, like, you can sell, and through the act of selling, you can guarantee as the seller that those coins are being staked. And so, that might be something that we need to build, is, like a sell to staker app. And maybe that's what they can integrate into STAKER.APP.
Yeah, because the Saints, I think, have that functionality, if I remember correctly. I think you kind of do that already, because you can already buy directly in the wallet.
Yeah, well, so like you can buy directly, but like you can't necessarily sell. Like, you don't know that, like, when you're selling on Uniswap, like, Staker app could be routed. I think Staker app routes through 1inch, which
I don't know exactly what the routing is. I'm not sure that you can actually control that either.
Yeah. I'm talking about like over the counter, like an over.
Yeah, I know what you mean.
That, like, locks it, that, like, where the smart, like a modified version of Uniswap that automatically stakes on the transaction. It's like swapping ETH directly for HEX shares. Like right now, you swap ETH for HEX and then you mint your HEX shares. This would be like swapping ETH for HEX shares, but only one way. Because, like, I mean, I guess you could go back the other way, but
I mean, that's the beauty, right? You have all of the options in the world with HEX. I mean, it's a crazy thing. Hold on, we got a question here from the chat. Let's see what it is. Let's see. Let's read it out loud from AB the Omnicast. Let's go, homie. Quick question: would a good strategy be to make 1 10+ year stake and 1 1-year stake, and build my ladder thereafter? The end stakes of the biggest whales between. So, and I'm sorry, and will they ratchet the shares up? Yeah, I mean, look. The T-share rate is always going to go up, right? So you have to just accept that outright and understand that that's the name of the game. Because unless you're going to come in with $1 million bones right now and put it down for for 5,555, there's not much you can do but DCA in and accrue your economic mass that way. So, the question you really have to ask yourself is, are you willing to not, like personally, I didn't have all of my HEX staked. I only had probably like 20% of it staked, or whatever the number was. And I had a big portion of it going on a short rolling basis because I wasn't sure of what to do yet. Now I know, right? And that's the whole thing. I think, AB, you want to get to a point where you understand exactly what it is you want the system to give you. Like, I know I want nothing but 555 stakes because I want that compounding to do all the work. I don't want to have to think about it. I don't. Like, I know where price is going. I don't have to worry about that because I did the math already. So to me, it's just a waiting game. Like, I already see, and let me share my chart real quick because it's relevant. I already see on this chart that HEX has already started to make the move. Bitcoin is just getting the move now in terms of time. And it's 98 days in. HEX already did it. HEX is just setting up for the next pump. So what we're about to see is when all of these AB Dip, do you have the HEX.VISION site open with the staker ladder?
Yeah, I do.
All right, let's go. Can you go back to that one so we can check that out real quick? Let me drop this real quick. If you can zoom in terms of time just for the next like 90 days, Because what I want to discuss real quick is when those stakes come out, what's going to happen to the T-share price, because that's going to be relevant to this chart I'm going to show soon, where it's just the expiring stakes. Because that's really what's going to drive the price higher, right? Because that's basically the mini halvings or the small halvings that we're going to be having in Hex over time. That's going to give us the constant price pumps. So, you know, you got to ask yourself, ultimately, what do you want from the system? Because you get to make the choice, right? That's the thing. Like, nobody can tell you what is good for you. All we can really do is tell you how it works, and you have to try to understand it as best as you can while determining what it is you actually want. So for me personally, I want to lock this thing away and see it go to wherever it goes, because I'm fully confident that I'm not going to believe the price, because I think I'm fully wrong in my analysis, because I understand that this is a financial product that's never existed in the history of the planet before. And that's very, very simple and straightforward. So that's what I'm basing everything on. And unless we're all going to die, this shit is easily worth more than Bitcoin tomorrow. And that's just a mathematical fact, because
it's easily worth more than $1 tomorrow for sure.
Oh, forget
100%.
about it.
I mean, the value of the system is infinite, but
and that's
as far as what price
thing.
appreciation we could see overnight, dude, it should be at least $1.
But this is the thing, right?
I know a toilet paper roll costs more than $1, dude. There's a lot of stuff that costs more than $1.
Bananas cost more than $1, bro. If you get about £1 in some places, you know what I'm saying. So let's talk about what Div was talking about earlier, because this brings up a good point. What happens when the institutional money comes into play?
Dude,
like, it's gonna go crazy, because they're gonna realize, yo.
Just so you know, everybody in chat, make sure you're out spreading this good word now, because there are certain good actors in the space that are preventing institutions from getting in right now.
Correct.
That are trying to help everyone else to get in to create, new wealth in the world. So get in while you can, man, and get everyone else in you can, because once it rallies, dude, it's gonna do some Bitcoin level shit. It's gonna do 100x or 200x.
Look, guys, I know I have a crazy perspective to a lot of you, but you have to understand, I've never been more serious about anything in my life, and this isn't even me pumping my own bags, man. This is just math. Seriously, you really have to sit there, Google what compounding interest is, and then Google what continuously compounding interest is versus simple compounding interest. Because if my YouTube videos aren't sufficient enough, you really need to take the time and understand that this is really the only place your money should be going anytime that you generate significant cash flow. Because at the end of the day, in the long term, this is your only retirement vehicle. Like, nothing else exists that's going to really take care of it. I have to be honest with you. Unless you're like some superstar trader that can literally nail all out the money call and put trades, you're just not going to make it. So
this person asked a good question. It's kind of related. They said, what's the intrinsic value of a T-share price going up? Besides it being rare, what other value is given to the holder? And so the T-share and HEX, it's like if you're familiar with other types of DeFi, it's like a governance token, where by holding the HEX, you get to vote on the interest rate. And you vote by committing your HEX to a time lock. And the longer that your time lock is, the more weight your vote is. And so, like the only other the HEX T shares, they produce yield. That's the only thing they do. And so like, aside from just that value, the only other like related right that you have, like the only other value that you have, is that you are getting to vote on what you think the interest rate should be. And that's it. Like, and so like, however much that benefits you, maybe not so much, but like, the T share is like a unique thing where, it's not like, it doesn't, like, the only bonus it gives you is like you get a portion of the HEX inflation.
I mean, it's a money printer, man.
Yeah.
Nothing like that
exists. Are a money printer that get rarer and rarer.
It's a money printer. Nothing
like
that.
All you need to know is like The intrinsic value of the system is it prints you money, but it's not just simple interest, it's compounded interest.
It's continuously compounding. Like there is nothing like this. Period.
So it's like
There is no competition. There literally is not.
And another thing that's like a plus and a minus is that you can't. There's no way that you could have an infinite amount of T-shares forever. Even if let's say you had a million T-shares out of 10 million, those things are going to expire before 5555 for sure. So that means that at some point you forfeit your rights to them.
Yeah.
But then you get to have all that inflation, and you get to be the first guy to spend it. So that means you get all the benefit from
that.
The benefits of being the first guy who gets to spend inflation, I guess.
That's about it.
Which we've been on and around about tonight a couple times. So I mean, this thing's a money printer, man. You're getting to rent out a money printer from Richard Hart. Just do it, and he'll give you high interest.
This thing is just phenomenal, man. Like
someone says, you guys have more to gain by influencing people to stake shorter. Since you're not, says more about integrity. And that thank you so much. That's really nice of you to say. And here's why I think it's important to share knowledge.
Yeah.
Because like in this arena, like we're entering a world where there's bearer assets. So like the people that own the assets are the ones that are going to be in control.
Yep.
And
you never want to stop.
If you're a good person, it is your responsibility to share knowledge with other good people.
That's the only reason I'm here, guys.
Because if you're not because there are a lot of good people out there, like good-hearted people that are doing nothing to gain wealth and gain power. Yep. And the people that are evil, like the people that want to cast their evil spirit upon the world, they're working overtime to gain that wealth so they can assert that leverage and they can execute their will. Yep. And so like, if you're a good person, it's one of your primary responsibilities for humanity to share knowledge to help other good people to gain wealth, so that it's the good people that have the wealth, it's the good people that have the leverage, because if not, the world will be taken over by evil. And so like, it's not so much just, like there's like clout involved, and like it feels cool to have people, like listening to what you say, but like it's more like a form of like global community service where
that's what I care about.
Yeah, like you identify people that you think have goodness in their heart, and you share knowledge with them that can help them make money. Because like I could keep this all to myself and benefit.
Yeah, I already know this shit.
Like I can only gain so much from that. Whereas you can amplify impact by having like-minded people that you can help influence and help teach so that they can make money. Then you're able to combat like the evil forces that are trying to gain the power and the wealth so they can assert their vision. Like you can counteract that without putting any additional money in that you might not have.
Right.
So,
I mean,
that's entirely it.
Knowledge is everything. Knowledge is power. Knowledge gives you the right. Well, let me rephrase. Knowledge gives you the ability to make the right choices, right? Because life is the product sum of all the choices you make multiplied by all of the important choices you make. So if you make bad important choices, it doesn't matter how good your regular choices are. You know what I mean? So in my mind, part of coming somewhat public, or whatever you want to call it, was just me really just trying to explain, what's going on, because it was really clear to me that people were just not understanding. And I want to get to this question that was had here. Let me see, where was it? It was a supply question. Where did it go? Hold on, where did it go? Jeez, where'd it go? It was early on. Hold on, let me find it, because I know I'm near it. And I just had it. Where is it? But yeah, we're really about. Here we go. Juicy Schmoliet. Shout out to you. Hilarious name. When is the accumulation phase gonna be done? And this is why I wanted you to pull up that chart where it showed all the stakes ending in the next 90 days. But long story short, it's March 15th, it's March 15th. So usually the big stakes are done. You know, they don't usually sell anything. They just restake. So the question is, you know, how much dump do we have left? And to be honest, I don't really think there's enough dump left right now that we really have much to worry about. What we have to worry about is what's going to happen between now and March 15th. And to be honest, I'm not really worried about it because the actions that I've seen from the staker class are just, especially the big staker class, are of the variety that they just continually restake for relatively short-term periods, and they just keep rolling their stakes, and they just keep printing money because they understand how the system works, and they have the ability, right, to take advantage of how the system works because they understand that right now they're not going to be able to do this ever again, because right now they can print yield like never ever in the history of time. So it's a very important thing to understand, man, because this is a very important time in history. Like, people are gonna look back at us like, wow, because we're very fucking lucky. And that's something, like, you know, I just gotta say it every stream because it's so true. We're very lucky. Like,
so here, this is the I'm trying to zone in on that max, that like big stake you're talking about. So this is the max. So like on the chart that I'm showing now, this is the maximum of the staked T shares like per day. Like, so every day bucket, there's like the biggest one. So I think the mega here, I'm going to go back to the linear axis on this just to amplify how big this, you know, how big the stake is. So like this stake, it ends on the 12th actually. So like this mega stake.
Oh, there we go. That's a good one.
You know, like, so so what I know about the scale is that you have to divide by 10,000 because this is actually like shares per heart, and so like, the heart is like whatever decimals and
100 million hearts equals 1 hex.
Yeah. So like that, like 4 decimal places you have to factor in. So this person right here has, so you move the decimal 1, 2, 3, 4. That's a 25,000 T-share stake.
Shit.
Holy shit.
And so that is that's a winning whale?
That's a whopper.
That has to be.
I don't know about the leagues, but that's a hell of a whopper. I know
Yeah.
that.
So like, you know, this person. So like, let's see if we can. You know, we can even look at that address. I bet what's his name, Silver the Antidote, probably has this on lock. But like, if we look at when did we say that was ending? It was ending on where expected end is between.
Quick interruption, guys. I don't know anything about Polkadot. Sorry, I don't know if you guys do, but I don't know dick about Polkadot. I don't look at that. Isn't it like a Chinese chain or something? I don't know. I don't know anything about Polkadot. Sorry, guys. Let's see.
Here, let's just find the ones where there are.
Check out dipcatcher.com, guys.
X stake shares is greater than, so there's the 10,000 buffer. So let's look at ones where there's 1, 2, 3, 1, 2, 3. Let's try to find the massive big stakes here. Okay, this is 461 in that period. Let's. When did we say that one? Here, let's just try to find that big one because I want to pull up the address so we can see that massive stake. Let's pull up. have that. And so how else can we filter? Okay, it's less now. So okay, so of these 57 results, where is okay, that's the start date, but we need this to go back to whenever that could have started, which would be in November of 2019, or December of 2019, December 3rd. Let's just see if we can.
Is that the day the A pool started?
Yeah, that's that day. And so we need to look at expected end. That's really what we're searching for. We're looking for the March 12th because that's when that mega stake ended. And we're going to look at there. So let's just that 12. So Mar 12. Is that it? Yeah, that's that 254. So here's the address. And let's go into GRAPHHEX.ROCKS, see what other stakes that person has. So Mega Staker has, so they have that. That's not even their biggest. Oh no, wait, that shows the hex. So that person only has those, that's their only stake. So this person is going to be entering the market with, let's see if we can figure out how much that they have earned. I don't even know how much. How would we look up how much, other than putting this into Staker app? How would we calculate what their earnings are
On a daily basis?
Yeah. Okay. So like, I don't know. So okay,
they multiply by the number of t-shirts you got per day.
Yeah. It's really 254 times. So 254.
5, I think, was a number for today.
Yeah. So they have 25, 4, 6,
5.749.
That's 5.749. You said. Yeah. So this person made 100. Like on that stake, they made 146,000 hex. So times
0.078.
Let's just say it's 0.8. So they made $1,000 today. And so they had that over. So how many days have we been since November 19th? So say like 30, 60, 90, about 90 days since then. Is my math right? So like say times, and it's been about that price times 90. And then it started back here. So the stake's been going on for like, probably 400 days. And over that time, so 400 days, the share rate went from like down here to like up here. So let's say the average over that whole time was like 2.7. So 2.7 times like another. So how many days was that? Like say 300 days at 207. So times 90 plus 200 times.
200 times 90 is 180. Or so 180,000.
2.5. So their T shares times the 90 days at 5.74 plus the 200 days at the average of 2.55. So this person in interest, not including big payday, has earned 26 million hex.
A whole lot of nothing.
Money printer, people.
And so in addition, so they started with 384 million hex. So over 384, 123, 123. So they earned a cool 6.8% on their 1 year stake. And this does not include all these.
Just in the last 90 days.
Big payday either. So like just like their basic yield was 6.8%, and from when the price. Wow. Okay. This person, their hex stake started in February. Price in February was like near the all-time lows. So they're up like 100x in terms of price performance, and they are up. They have that 6% just hex increase from the regular yield, and say they earned 40% on this from big payday. So that person has, okay, so that's their regular stake times, okay, so here, let's 38. So that's their interest that they've earned plus their big payday, which is like 0.4 times 384 1510 123. So that's their total like earnings from the stake because it includes the big payday. Let's make sure my number is right. 384 million. Yep. So they earned 180 million hex through this stake. And so they're up. So that 180 million over their principal. So their stake performance was by 384 123. So they're up like so 46%, like just their balance increased for a year stake. Like so their APY was like almost 40%. And the price went so +1. So they earned 1.46. And during this time, the price went, so it's right now, say it's about 0.008. And back in February of, 20, where's the price chart? Back in February of, so like right around when their thing started, the hex price was 0.0001. Let's just say 0.117. So 0.08 divided by 0.00017. So like that staker's ROI was 69x for the value of the hex during that year-long stake of that magnitude. Like where else can, and so say at the, so they're up 69x from like their initial investment. And so say they bought that
and that's in 1 year's time.
Yeah, they, like the stake. Oh wait, that's not it. Where's the other window? Oh yeah, here. Was this it? Wait, what? Where did the address go that we were looking at? Oh yeah, here it is. So they bought 384 million at 384,510,123 times the price was 0.00015 about. So they put in $57,000 of hex, or that's what it was worth at the start of their stake.
Yeah.
And now they're since they are getting an additional what's it called? How many million? They're getting 179 million. So in total, this person now has 384,510,000 plus that. They now have 574 million hex. And at the current price times 0.008, like their $50,000 investment is now like $4.5 million. And that's coming on the market literally in a couple weeks. And so like,
Could be the next, this guy.
Yeah. And that could be that could be massive.
Too, bro. Sell them, please.
Yeah. And so, you never know. And who knows, this may be an OA linked address. Like, who knows? I guess we could look on Etherscan and see what we can reason from it.
Yeah, no, let's not waste too much time on that.
Yeah. But that's like a Galaxy staker that is ratcheting up the share price in a big way.
Yeah, no, sure. And that's the value. And that's why we like to know the magnitude of the quantity of the shares that are expiring. It's not about one wallet. It's about the systemic reaction that we're going to get from the system, because that's what drives up the T-share price, not just one wallet. That's why I'm not a big fan of honing in on just one specific wallet address. Very limited value add there. I get it, but again, I'm looking
My
to get
buddy Wales always
long
talks
term.
about how it's a market
What's
and
that?
of market participants.
What's that?
It's a market of market participants. It ain't
Right.
about
Not
no
just
one
one
player.
market.
That's
Yeah,
what
not
you
just
always
one
say.
participant. Right. It's a whole market, not just a market of one person. So I don't,
But
you know,
it's like people just don't understand.
yeah. So let's get back to these charts and keep it pumping. So that's supposed big payday. So what I wanted to say is that, I mean, really, if you look at this chart as it is, right, which is just a moving particle through time, this is just getting ready for the next move higher, really, because that's just where it has to go because of all the inflation. And once all the inflation, meaning the selling, is done, uh, you know, liquidity in Hex just gets thinner by the day. There's always less supply in the market, so you really have to be aware and ready to act, because soon I'm not sure what the market is going to look like. Right now, we can see Hex is really on sale, right, relative to that first halving that we were witnessing, or that we witnessed in Bitcoin, in terms of time. So, you know, take advantage. Not going to be around for long. And as we can see with the T-share to Ethereum and BTC lines, the ETH line is the pink line with the blue hue. The BTC line is the orange line with the orange hue. And, you know, they're perking up as expected. And, I mean, I'm pretty sure that tomorrow's chart set is going to be even crazier because they both dumped like crazy today. And this chart is as of the 24th, not the 25th. So, yeah, be on the lookout for that. The systemic payout metrics, 62.84 million Hex paid out today, 5.749 payout per T-share, or Hex paid out per T-share. And the total T-shares are slightly lower at 10.93 million once again. There's just a little closer view from right before big payday forward, just to show the deflationary measures in the total T-shares and how they interact with the payout metrics of the system. As you guys can see here, as soon as big payday happened, T-shares went up, then they went down, and then pay went up. So no surprise there. That's all of the inflation being let out into the system, and it's just a matter of when prices catches up to that. And that's really what we're just waddling through right now. So definitely want to be buying the dips in a tactical fashion and DCAing in accordance with, you know, your risk management tolerance.
Hashtag dip catcher.
Yeah, just like dip catcher, exactly. This chart is giving you the percentage metrics of the system, and so far, if you had one T-share since inception, you're up 140,000% just in terms of Hex paid out. The daily payout index itself has increased 11,357%. The total T-shares have increased 2,180%. The payout per T-share per sum in Hex is at a total sum of 1,546 Hex. I mean, this is crazy. Literally, just here's some free money. Hex right now again is down 3,670%, and the payout per T-share index is at 521%. The T-share rate, interesting looking chart when you're tracking it live. Now, I'm curious to see what it's going to look like tomorrow. I'm guessing it's going to normalize a little bit. It probably isn't going to look like this because, again, I'm tracking it live. And we all know that the T-share rate is actually not 1.8, right? We know it's 1.6938 or whatever the number is. This is basically 1.810309. It's just multiplied by 10,000 given the math. And we have an APY of 37.03 today. Not too shabby. The stock to flow tracker. So essentially this chart is predicting a price pump, which is interesting because price is technically right on support, which happens to be right here. And this is for the T-share value. So it's kind of like running into the T-share rate and getting a rejection to some degree. That's kind of like
Wait,
what
what is that yellow line?
this is the T-share rate. It's just like the line I was looking at previously right here.
And how does it, what's causing it to go down? Because wouldn't that always be ratcheting up?
Yeah, so I track it live. I track it with respect to price at a certain point in time every day. So what
Wait, so that ain't like dollar price?
correct, yes. This is the hex. This is the T-share dollar value divided by the hex dollar value, and that's what gives you the T-share rate versus the T-share value.
Oh, okay. So like that's kind of like what's on GRAPHHEX, but it like I'm confused with that like dip debt like that at the end.
Because
So,
again, I'm tracking it live, right? GRAPHHEX is just tracking the T-share rate. They're not tracking anything in terms of price and dollar price. What I'm tracking here, this yellow line is literally the dollar value of the T-share divided by the dollar value of hex.
oh, okay. So okay.
Ratio, right?
Yeah, that's why it's 10,000. You have decimals divided by decimals, right? You got 1 point divided by 0.0000. So you're gonna get a big number. I mean,
Still trying to figure out why it dipped though.
because the value of the T-shirt did, right? And again, I'm tracking it live with respect to the dollar values, and I'm tracking it dollar value of hex.
So is that huge? So that huge spike there was probably that spike and that huge fucking 22% candle, wasn't it?
Could have been. It could be.
Huh. Crazy.
Because again,
So
I'm tracking.
okay, so what that's telling me is that super impulsive moves.
So let me give you guys the actual figures from this exact calculation, because you guys, I understand why you guys are like, "What the fuck is this?" So let me just let me just tell you. Give me a second. Let me pull it up. All right. Yeah. Okay. Give me a second. 143, 40. Yeah. Okay. So yeah. It's 10th. Yeah, it's what I've always tracked. It's literally the dollar value of 10,000 hex divided by the dollar value of T shares, right? Yeah, dollar value of T shares. So today, when I tracked the dollar value of T shares, it was $144, which was higher than the dollar value yesterday is $140, and higher than the dollar value of the day before of 135. So what did I do?
What that's telling me is that dollar price was going down while T-share rate was going up. So people were ending stakes and selling off their coins.
Pretty much.
Today we had that impulsive move and increase in price, and then it accounted for the ratcheting that had happened prior to the sell-off. So it made it this extreme gouging out and then recovery of price.
Yeah. So let me explain, because that's exactly correct. So what did I notice in the T-share data that I was pulling from GRAPHHEX? Because again, I do this manually for a reason. My analysis is very distinct for a reason, because I actually look at the numbers. My way of looking at data is very old school. I don't just throw it in some code and let it do the work. I actually look at what the data is showing, because that, especially time series data, because you don't know what a system is doing unless you're actually looking at the data. So I'm actually stupid enough to sit here and look at every single instance throughout that time series. And what I noticed is that those values change every day. Why? It's because the system is dynamic. It's going to reflect those changes daily with the ending of stakes and the starting of stakes. So what we're seeing here, right, in this specific line, is we're seeing that value detraction, right? Meaning people starting stakes and maybe not ending stakes on these days and just selling coins, right? Versus what we saw today, which was a major buy and maybe an increase in stakes and maybe not. I don't know. I really don't look at the system as much anymore because I don't have to. Like, I just know it works. Wow. Okay. Check this out, guys. The last time I looked at the duration number, it was under 5 years at like 4.96. I mean, this was like at the beginning of the stream. Right now, it's at 5.03 years. That's phenomenal. It's never been that high. Not that I know of. So this is probably the first time you guys are going to hear this. on any stream for X.
I'm
This is
getting
crazy.
that too.
Huh?
I'm getting that too. I just
5.03
broke.
years, right?
Hmm.
This is insane. This is
Yeah, there's
insane.
a lot of conviction here. People think this thing has got value, and the price hasn't really caught up yet.
I mean, it's
What's
pretty
crazy about this thing is this thing turns the minds faster than the price can react.
dude. Look,
Yeah, nuts.
I was sitting at work, and like I told you guys, it's been crazy past couple of days because of the Fed, failing and whatnot. No surprise there. And
Where do you work?
I work at a bank on Wall Street. I can't disclose any details. Work at a bulge bracket. This is as much as I can say. I work inside the belly of the beast, brother. Would you disclose where you would work? Like, no, of course not. And I let my coworker know, like, hey, gas is finally cheap. Be ready. Like gas is reset. So just so you guys, okay, so let me go over this. So like I've been telling you guys from the start, no self-respecting individual that operates in markets as a professional is giving away money to middlemen. Period. End of discussion. I don't care if you're staking or not. You're not giving away money to middlemen because there's no value in that. And again, you want to maximize your return, not the middleman's return. So again, no astute professional is going to sit there and give $1,000 away in fees unless they're a moron. Straight up facts. That's how it's done. So now that the system is done, looping all the suckers in and paying all the middlemen all their fees, the gas prices are finally going to reset lower. That's why you can end the stake and do a swap and do all that shit outside of a layer 2 network now. So if you check your gas tracker, wherever you go, I recommend the etherscan.io gas tracker site. I don't like the other one. I don't know. It just looks funky to me. I don't like it. And why would you get gas from another random site when the actual source has it already? I don't know. I just don't get it. So I don't use the other one. I just use the etherscan site, etherscan.io. And as you guys probably noticed today, gas prices have been pretty much lower across the board after this morning. After the blow off top that we've had for the past couple of days, the network has officially reset. So what's going to happen now is that people that are, bought last week are going to end up selling because they're holding bags that they can't afford to hold. So right now we're going to go through a liquidation phase. What does that mean? We're going to see prices go lower across the board. Now, I haven't looked at a chart for Bitcoin and Ethereum in a couple of days, like really giving it a good look. I just know that prices are lower because I looked a little bit earlier across the board. But again, I warned.
Yeah, the dip catcher alert went out on the Bitcoin pair. So like the dip catcher algorithm, it started signaling buy. It started signaling buy on the sell off.
Sure, it's gonna be a pretty drastic move lower because what happened is that they looped all the suckers in, right? Like the last couple of weeks, me and Axis issued out a sentiment check. A couple weeks, I went on various streams. People just didn't want to hear it. It's fine. You guys have to learn how markets work. When they loop in the retail, that's when the party's over. It's the same thing they did in 2017. It's the same thing they do at every market top. Now, I know this because this is my first time in markets. But this is what they do. This is what they did in 2006, 7, 8. 2006 and 7. Well, really just 2006. It's what they did in 2000 into 99, 2000. It's what they always do. They did it again. They're doing it in crypto. They're just doing it quicker because the cycles are faster. So instead of it happening every 7 to 10 years, it happens every 3 to 4 years in crypto. And here we are again, blowing off, right? And it's happening literally in the same fashion. Everybody and their mama come buy some crypto. You're never going to lose. What happens? Price is down. 2 days later, goodbye. You gotta respect yourself. If you're doing something that somebody else is telling you to do, you're gonna fail. Period. That's just how the system works. So this line is letting you know how I track value in real time. It's important to understand what you're looking at and what you're dealing with when it comes to money. Because if you don't, you're gonna lose your ass. Just like the people that paid 52, 58, 50, whatever thousand for Bitcoin last week, and it's at whatever price it is a day. 48,000, whatever. I don't know. But it's just a lesson you got to learn how markets work. I'm here to help you learn and understand. So please give me your questions, because I'm here to share nothing but facts. So this is another great chart. This is what I like to call the true projected value of HEX. Because what I see in this chart, and I think we're going to see in this chart, is what we saw at the beginning. And this chart is a cost of 10,000 HEX in dollar terms. And we have not only the cost of $10,000 HEX in the orange line in dollar terms with the blue hue, currently $79.80. And in the market, it's currently at $79.51. Now the magenta line is the T-shares in dollar terms at $144.47 as of yesterday. And the T-share divided by 10,000 HEX is the actual equation for the T-share rate. Now, again, I'm tracking this data in real time, so I'm not giving you a straight line. Like, you can get that from GRAPHHEX.ROCKS. You can get that from the go.hex.com site. I think they have it there. Like, there's places where you can find the actual T-share rate given by the system. What I'm tracking is a little different. It's going to allow us to potentially track price projections accurately. Sorry about that, guys.
It pumps me up.
I mean,
it's a good thing.
Because, again, what I expect to happen is the system to act in accordance with its value proposition, which is the T-share rate. And this is what we saw last year. And again, the first quarter of the year is this area right here. This is basically March 12th, if I remember correctly. Yeah, I'm pretty sure this was March 12th, which was the bottom, which was when apparently crazy stakes came out last year too. I wasn't around, so I don't know. I'm just going off what people tell me. But long story short, price found its medium and it stayed there, interestingly enough, until the system reset. Right. So now that the value proposition is reset higher by the system, my expectation is that price is going to have to reset higher, and it already started to, right? I mean, that's what we're seeing right here. We're seeing price react to this reality of undervaluation in the system, right? So the question now becomes, well, I'm tracking this in real time. We're seeing HEX price go kind of out of bounds with respect to the T-share value. What exactly is going to happen, right? And right now we're looking at the market basically trading at the lows. It's still trading at the dollar equivalent value of 10,000 HEX at $79.51 still, which is approximately 30 cents lower relative to this quantity of 10,000 HEX. So, you know, what I expect to happen is I'm basically expecting the market to stop here, because from a valuation perspective, it doesn't make any sense for the market to continue to trade lower at this point in time. That doesn't mean that it can't continue to trade lower. It's just my expectation. But, you know, hopefully I'm wrong, because I'm not going to be mad if I am. So, you know, that's just a realistic point of view, man. I mean, again, I got to tell you guys, and I don't know if anybody else has seen this, but I've never seen an asset where people want it to go down in value. Never, ever have I seen that. I don't know if you guys have. It's crazy. Now let's talk about this chart, because this chart, this is the kicker, right, Dip Catcher. This is basically what we try to look at in so many different ways. And the reason I like this one is because I've always been into, like, you know, I'm a math nerd like you. We have, you know, different interests with respect to math. I think light is cool, but I think seismic waves are cooler, and how curves move, and how you know, cycles operate. I really dig the number pi. Like, I'm really all about cycles. So what I see here is how the interest rate is going to cycle through time and pay us out over time in a fashion that is going to be increasing consistently. And the reason for that is because the expiring shares are what reprices the system higher, right? So that to me is something that's pretty straightforward. That's how the end stake function works. Once a stake is ended, it just automatically reprices the share system higher. So every time I look at this chart, what I'm seeing is just the ripple, right, in inflation through time. That's really what this is, because it's the magnitude of the quantity of shares that are expiring relative to everything in the system. So this is a very significant and important chart because it really details, right, what could happen in the future and how it's going to affect the system. Like, look at the years 29 and 2030. This is insane. Like, the inflation is going to be bananas. Just
Oh man, that's gonna be some good times, dude.
I
I
mean,
long for those times.
you gotta have stakes ending after that point in time. You got to.
Oh yeah, dude. You
You
got
got
to.
to. It's like it's not even an option. It's like the system doesn't allow you to have that option, if you understand it anyway. Excuse my voice. But it's just an amazing thing, right? Because we can literally track this in real time. Like, there's no other system where you can do that. There isn't. Like, even in the bond market, like, yeah, you can track QSIPs and stuff, but I mean, do you know who actually holds it? No, it's a black market. It's an opaque market. The book is really still OTC for the majority of the products that you can trade. So, you know, it's just not a hex. Again, like, hex is just ridiculous. And here we're looking at the correlation all time between Bitcoin and hex. And hex is the x-axis and Bitcoin is the y-axis. And as you can see, hex is significantly to the right side of the zero axis, meaning it is constantly positive, relative to Bitcoin, which is pretty evenly spread on the opposite side of the zero axis on its own axis, being the y-axis, which kind of means that it's not as good of a constant performer as hex, really, to be honest, because it's basically showing the volatility is kind of equivalent to some degree to the downside relative to the upside. I mean, it gives me an idea to print an interesting chart. So I'm going to do that, but I'm not going to discuss it any further. You guys are definitely going to like how that looks because I kind of think I have an idea already just looking at this chart, and I'm kind of upset I didn't think of it sooner, but we'll keep it moving. Ethereum versus all-time hex. I mean, a positive slope as always. For obvious reasons, we're on the same financial network as the one that they provide to the decentralized finance space. But again, notice how the hex returns stick to the positive side of the x-axis, meaning to the right side of the zero. And the Ethereum returns are more clustered around the zero because it's a slow mover, but it's kind of evenly spread out. And again, it's not as bad as Bitcoin, and it still is more positive than negative because it is positively correlated to hex, which is the measuring standard, which by I go, because I go by products that have actual value propositions. And again, I mean, I think we can talk about this for a little bit. The most confusing thing for me at the beginning was how hex was on the Ethereum network. It didn't make sense because I understood hex, but I didn't understand the Ethereum network, so it made me learn about the Ethereum network, interestingly enough, because I didn't care about Ethereum at all. I mean, I really still don't, but I get it, right? Like, it's a fee trap. Cool. But I'm not really with it. Hex is really like the top dog to me. And that's only because, you know, I've been around, you know, I know what time it is. I know where the value is at. Again, I'm not making these videos for my health. I mean, I hope many people benefit from them because the value, you know, the information that we're providing is just, you know, it's free. What else can you say? And things that are free in crypto are usually worth thousands of dollars. So take it for what it's worth, man.
Dude, that's so funny, dude.
Because it's true.
Here's your airdrops. They don't come with tokens.
Because it's true. Because it's true. I mean, it's so crazy. But
It's
whatever.
pretty funny for a lot of people that got airdrops. The amount they earned from airdrops was greater than the amount that they had even like put into hex.
Oh, hell yeah.
Like it
Yeah.
really covered everyone's like.
Hey, I got that 1 inch airdrop. I had no idea that was coming. I got lucky.
Yeah,
I had no idea that was coming. So that's that's a sizable amount of dollars that everybody got out of nowhere if they traded on 1 inch. So, you know, that's how it works.
some of these things are so hard to explain to people outside of crypto. They're like, wait,
Yeah.
you got free money because you used
An exchange. Yep. That simple. Yeah. I mean, it makes no sense, but that's how it works, man. All right. So let's get into what a market is. Market is where two or more parties can meet to exchange goods and services. Straightforward, simple enough. Now, why do I write two or more parties? Because in a trading pit, when you're physically trading, you can trade, right, with multiple people at the same time. Multiple people can trade at the same time. When you're physically trading, it's a little different than when you're electronically trading. So that's why we can say two or more parties versus the electronic trade, even though multiple trades are happening simultaneously, instantaneously at the same time in electronic trading. It's still a two-party trade. So very rarely is there a tri-party trade. I mean, there's a tri-party repo, but we're not going to get into that because that gets a little confusing. But that's an instance in where there are three parties to a transaction. So yes, there can be two or more parties to a transaction. So that's why I wrote it out that way. So we'll keep it moving. Market transactions can involve goods, services, information, currency, or any combination of these, right? And when we look at crypto is really the embodiment of kind of this one line, right? Because any crypto can embed all of these items in one, right? And many cryptos do embed 2 out of 3, right? So many cryptos are any combination of these. So by default, every crypto is a market to some degree. So now markets are physical and electronic. It's very important to understand the difference because they operate differently. And here are a few examples. The black market, as we all know, can operate both physically and electronically. The auction market is a physical market. There are digital variations of it, but it's really not digital, right? It's really just some person on the other side doing the work for you, and you're just not there physically. So it's still really an auction market. In an auction market, it's literally somebody running the auction, calling out the bids, calling out whoever is bidding on that bid, and calling that person a winner on that bid. And then they ultimately call the winner on that auction, right? That's how auction markets work. So you're technically starting at a low price and you're working all the way up. So whatever the ultimate buy price is, that's how an auction market works. If there is no bid, then there is no market there. And that's the downside of an auction market. If nobody wants to buy that item, then they're just not going to buy it, and then you just didn't sell it. A black market typically consists of items that people want to buy that they cannot obtain legally, at a store or whatever. So that's just what a black market is. And prices in black markets depend on the location. They're really price efficient, actually. They embed production, they embed cost of transportation, they embed all the obvious things you should think that that should be embedded in the product cost. So it's very straightforward. It's not hard to figure out. Financial markets, they do operate in a physical and electronic format as well. Now you have so many different types of markets in the physical realm. You have commodities markets that stretch from food to precious metals to meat to agriculture of food variety, sugar. I mean, forget about it. There's even a market for weather. I mean, they'll sell water now. Like, it's ridiculous what they're doing. So there's all kinds of physical markets, right? And the water market is more on the electronic side. Well, we can get into that in the future. I don't really want to touch that now. Financial markets, we all know them electronically, and they just are what they are. We're used to them being equity markets. We're now dealing with crypto markets, FX markets, futures markets, all electronic. Option markets are electronic, and all these markets used to be physical, right? Every market started out physically, and what we're seeing now is just the vaporization of markets into nothingness. So like now, even the New York Stock Exchange, the American Stock Exchange, like all these exchanges are now.
Hey, I'm gonna have to hop off right now.
Oh, okay, no problem.
But yeah, man, thanks for having me. This is a lot of fun. We covered a ton of awesome stuff, and thank you everyone who's watching, asking the great questions. Yeah, thank you guys so much. This is great. Love to
Good talking. Thanks for stopping up.
Yeah.
Well,
Dip.com. Check them out.
Yeah. Thank you all. Yeah. Dip.com. Check it out.
of course. Thank you.
Yeah. See y'all.
See you, man. Peace. Thanks for coming. So yeah, and in markets we have two types of participants. We got short-term, long-term. Short-term participants are, traders for the most part. Long-term participants are either traders that made a bad trade, which has turned into an investment, or just a person that's buying long-term, and that's just it. Let me see. Oh, so somebody asked if it's safe to connect a wallet to 1inch. Hexinator, yes, it is safe to add a wallet to 1inch. I've used or I've used 1inch numerous times, but I use MetaMask. That's the only wallet I own. I don't own any other wallets. So that's all I got on that. I don't know if you have any other input there, Axis.
I've never used 1inch, but I know that it's highly recommended for
Yeah,
limit orders in particular.
Yeah, they're pretty good. I've used Matcha. I've used 1inch. I've used ETH.HEX. I'm trying to think if I've used any others. I can't remember any others that I've used off the top, but those are the main ones which I primarily use. And in my show notes, I actually put both links in there. And what I do personally is I keep all links open and I just select whichever one gives me the best rate. I mean, that's, I think, the smartest thing to do, because again, you want to maximize, the quantity of coins you can stake, because bigger pays better and longer pays better. So that's what it's all about. You know what I mean? So be sure you do that, maximize your dollar allocation, because you want to dump the trash and pick up the gold and the diamonds as quickly as possible. And that's what we're really doing here with Hex. So that's just that. So yeah, so this is the market, right? And what we're seeing in Hex now is that the people that aren't long-term participants in Hex are just basically saying they're done holding the price up, which is fine, because we don't want them in the market, right? I mean, we want people that understand Hex in the market. We want quality players. We don't want scrubs. So we want to be, in line with people that understand what the mission is. They want to get rich. Now, there's nothing wrong with selling, of course, as we talked about earlier, because everybody's going to sell some at some point. So that's not what it's about. What it's about is if you're trying to build wealth, there's a certain way of going about doing it. And that's all I talk about. I don't talk about anything else. So that's why I really preach longer pays better. You can trade if you want, but trade for cash flow. Don't trade as having that as your primary investment vehicle. It's not going to lead to success. Not long term, because the thing about it is like over time, unless you're very, very risk averse, and what I mean by that is you really respect risk, like you cut your position short when you're really at a point where you need to. You're like very disciplined. Like you're just gonna chop your money up, man, and it's just the way it works. Being human is hard, and being a human trader is even harder. That's why trading algorithms are so popular. It removes that emotional component from the human element out of the trading element, which is what usually gets a trader. And that's why Richard designed Hex the way he did, because he wants it to be volatile. He wants swing traders involved, and we all make money from that. So it's okay. People got to do what they're going to do, and there's nothing we can do about that. So that's fine. I'm going to get through this presentation, guys, and then I'm going to answer your questions after. I just want to start changing the format real quick, so that I'm doing the charts first, and we're getting through the meat first, and we can BS after. I kind of intended to do that this time, but kind of got away from us because there's just so much cool stuff to talk about. It's kind of hard to stay disciplined. And that's the main reason why these streams go for so long, unfortunately. I mean, we're all like grown men here talking like little girls. I mean, what are you going to do? I mean, this is an exciting point in time for anybody that understands Hex. It really is. So let me keep on going here. What is liquidity? This is a very important slide. I really want you guys to understand this, because people are very confused with respect to liquidity. They don't understand how it works, and that's okay. but try to understand it because it's very important. A market's ability to allow an entity to execute an order in a timely fashion, or how easy you convert an asset to cash. So let's talk about this real quick. Real estate, is it liquid? Is it not liquid? It is not liquid. It takes a long time to convert real estate to cash. So that is an illiquid asset. A stock, is that liquid or is that not liquid? That is liquid. Why? Because you can convert a stock to cash within 3 days max. That's T plus 3 settlement. So you sell your damn stock, you get your cash in 3 days, and that's that. That's how stocks work. Futures markets are pretty much almost same day instantaneous settlement. They're cash market to market at the end of the day every day. So those assets are highly liquid. FX is basically cash, so that's liquid. Let me think here. What other assets? Precious metals of the physical variety. They're not that liquid. You have to find a seller if you're looking to buy, and you have to find a buyer if you're looking to sell. And if you're willing to sell to a centralized exchange, i.e. a bullion dealer, you're going to take whatever they give you based on the grade of your gold. So you might not get the full market price, market value. So you have to be aware of that. It just depends. Depends what gold you got. So also same with silver, same with platinum. Like all these golds people get, or all these precious metals people get by retail, they're not pure all of the time. So that plays a factor in terms of the valuation that you will receive from a dealer that pays you out for those precious metals. Now we can talk about even household assets like a Rolex, an expensive watch, expensive valuable items that you can actually trade in for cash at, a place that'll give you a loan for them, like a pawn shop or whatever have you. Like they're out there, they exist. There's high class places, there's low class places, there's all kind of financing out there available for people. So all of these things, right? They're assets, and they all have a level of liquidity, believe it or not. That old drawer, that old chest in your, garage, in your basement, all that stuff has liquidity. You open up a yard sale, guess what? Somebody's gonna pull up and they're gonna pay you a dollar amount for it. That's liquidity, believe it or not. Everything is liquidity to some degree or another. I really wanted to talk about that with you guys, so you guys have a solid understanding of what liquidity is. Liquidity is really the ability to convert an asset into cash, and vice versa, a cash into asset, right? Because we all know the cash that we know today is trash. So how liquid is a market going into it? That's also important to understand, because you don't want to be that guy that did that trade today. That's just my personal opinion. I'm not a fan of leaving footprints everywhere. I don't know. It's just my nature. Go figure. I don't recommend anybody do that. It's not a cool thing to do. You don't want everybody to know you're in the playground stomping around. So that's just a bit of advice from me to you guys. The big players don't do it. I recommend you don't do it either. There's nothing cool about it. You push a price against yourself, you end up paying more for less. There's just nothing interesting about doing that at all. So yeah, that's just what I wanted to say about that. More liquidity equals less impact on price in an adverse fashion. So let's consider a market that's highly liquid. What that means is no matter who buys or sells, that price is not going anywhere, because you can easily convert dollars to cash, you can easily convert dollars to an asset, and you can convert that asset to dollars. So what that means is that's a highly, highly liquid market. Now, the main market that comes to mind, Bitcoin is one. That's a highly liquid market. It takes a little while, like 10 minutes, but that's pretty instant. And that's one of the reasons why it's so popular among institutions, by the way. The liquidity factor in Bitcoin is very popular, because they can take their, dollars, which they leave at a bank, which they have no custody over really. It's being custodied by some institution which does not provide any good service at all. Trust me, I work at a bank. I know this well. And when they buy Bitcoin, they just own it and they don't have to deal with anybody. They just do whatever they do, and that's just that. So, that's counterparty risk outside of what I even have listed here. So more liquidity equals less impact on price in an adverse fashion, right? So price doesn't move anywhere; it just stays right there. It's like a gumball, right? It's like taking a gumball, throwing it against the wall, and it just sticks. Whatever. And the high risk here, when there's more liquidity, is to holders of whatever that asset is, and there's low risk to sellers and buyers, right? Because now I only put sellers because sellers are the people looking to get out, and they're not going to push price against themselves when they're getting out of a low risk market, of a highly liquid market. Sorry, low risk sellers or low risk. The low risk is to sellers because they're selling out in a highly liquid market, so the price isn't going to move anywhere. If you're buying, price isn't going to move anywhere, which doesn't work in your favor, and you end up becoming a holder, which is a high risk to you, because price could always move lower, right? But it can't always necessarily move higher. And that's the problem with more liquid markets. Like, it's a double-edged sword, right? And it's a double-edged sword both ways, and I'm going to talk about that when it comes to less liquidity. Less liquidity equals more impact on price in a potentially adverse fashion. Low risk to holders, i.e. stakers in this instance. High risk to sellers because they can, move the price against them in a pretty nasty fashion, like the person did the day that bought. And when they bought, however much they bought, I mean, that thing flew up. I don't know what, 22% it was, Axis? Yeah, I think it was 22%. Yeah, I'm pretty sure it was 22%.
It was 21. It was like 21.2% or something.
Yeah, it was something like that. That's cool, bro. So, that's just a good example of what happens when you go all in on a low liquidity market. So that is great for us because we're holding, we're staking, and it's a high risk to a seller because if a seller sells, what could ultimately happen is what happened to the person that bought today in size. That market could dump against them in a very nasty way. And, they could not be aware of that. That's entirely possible. Just because somebody has money doesn't mean they understand markets. A lot of people make money in a lot of different ways. So this is why it's important to understand all of these simplicities. They will put you ahead of the game. Trust me. Market liquidity is a function of transaction cost plus buying and selling level. Now, what does that mean? Look at the dips in the hex chart, right? I mean, let me pull this thing up real quick just because it's relevant. Give me a second, guys. Because again, this is just...
Yeah, I think that buy order was like $117,000, and it pushed the price 20-ish%. So at these prices, if you're buying large quantities, you're more than likely already know not to do one big market order. But if you don't, it doesn't take a lot of money to really move the price against you, so you better buy into the selling.
Right, and that's the thing. People don't really and that's why I'm letting folks know. Like, some people just don't understand that just because a person has money doesn't mean they actually understand what they're doing.
That's true. And so if you don't have a lot of money, same thing applies. You can probably prevent some slippage even on like 10 G's.
Yeah, very much so. I mean, look at this. There's only 1 million hex sitting on Uniswap V1 versus 6 ETH. Right? I mean, that's
That's
not
a V1. V2 will have more liquidity in it.
No, that's what I'm saying. This is V1, but both are tradable. I've traded on both.
You can trade on that one. Yes, you can.
Yeah. That's why I'm pointing it out, because it's important to note. It's very important to note because you can trade on both. So it's important to note that. Give me a second, guys. This is just pulling up the the ugly website. I rarely go on here, but um, there's a volume, there's a total liquidity, there's a transactions over the past 24 hours. So, you know, it's still somewhat active. Obviously not that active, but the point I'm trying to highlight is this thing only goes up. So, you know, be wary of that. Liquidity matters, right? That's what we were talking about. Now, I say liquidity is a function of transaction cost plus buying and selling level. Now, what did we have over the, like, I don't remember how long fees were expensive. What was it, like a month maybe?
I don't know, man. They've been expensive for a couple months now.
Couple months now? I really don't remember because I've been doing transactions here and there. But
Ever since ETH started to make heavy movement, which is basically when we broke 750, not 800, it just moved right into the thousands, and
really? It's been that
prices
long?
got kind of nutty.
Damn, I don't feel like it's been that long, but okay.
Yeah, no, we went from like compressed price action where we were going up like $100 levels, and then once we broke through the 750 level, it was just like
yeah, I know.
800, 850, 900, 950, 1,000, like right away.
Right. It did go straight up. Yeah, that's true.
And then everyone was like on to ETH then at that point, and
It's game
so it's
over.
probably been 2 months of high gas fees. But
Yeah, probably 2 months. Yeah, you're probably right. I was thinking about that a couple months. Yeah. So as you guys can see, not a lot happened during these couple months, right? I mean, market liquidity is a function of transaction cost plus buying level. And what we're seeing here is that there's interest at buying at this level. There's interest to some degree because price does not break it, no matter what. And we've been seeing this lately with the price action in the short term, right? So that's just something I wanted to highlight, so people can understand, because liquidity, right? Like it's always lowest at these points. It's always lowest at these opposite ends. It's always highest in the middle because it's easiest to see where things are going. So the risk of impermanent loss is very slow, right? So liquidity is always going to be lowest at these extreme points because people are afraid of taking on that impermanent risk because they don't really know what's going to happen.
Yeah.
Right. So they have to be very wary, and liquidity, like this is what causes bottoms and tops, is low level liquidity. Literally.
Yeah, because there's no orders there to take your bid or your ask.
The market has to go the other way. It has no
Yeah.
option.
Yeah.
And this is why on big payday, I sat there and watched it go from 2 cents to 2.05 or whatever it was, or 2.5, 2.5 tenths of a cent, whatever it was. And I knew automatically that was a bottom because that signifies to me low liquidity point, time to buy. And that's what I did. Literally, that's how I call and pick top. But like, I don't even look at charts. I only look at them, and that's so far that I understand what price is doing. I don't use them to actually make trading decisions. Trading decisions come from price action. Right now, this is a very advanced point of view, but that's the proper way to do it. That guarantees that you're buying the bottom and you're selling the top every time. Very hard to do, but if you're capable of having that level of patience, you can do it every time. But it's very difficult to do. I'm not saying it's easy, so don't sit here and quote me or anything like that, because that's not what I'm saying. So again, slippage is a function of low liquidity, and this is what happens when you sell on a V1 in size. Right? Literally, that's what happens when you sell or buy on a V1 in size, because you can't, because there's no liquidity there. And market liquidity is a function of transaction cost plus buying and selling level, right? And here's the thing. Transaction cost on V1 is usually low, but there's a cost to doing business on that chain or whatever it's called, on that protocol, because the market liquidity itself, the natural market liquidity, is just low there because it's just not, the people just are not interacting with that protocol. So this introduces the reality of slippage, which is a function of low liquidity, right? And low liquidity equals more impact on price, which is an adverse reaction to those that are looking to buy or sell, really, if they're trying to maintain price at an even keel, right? Because that's what it's about. It's about not getting ran over or letting yourself get ran over. So that's why I wanted to point this out to you guys so you guys can see this. This is important information. Understand that this here means low liquidity every time, right? Like this is what we're seeing here. And this is something that's probably foreign to a lot of you, but the long story short is when price reverses abruptly, that means the move is more than likely over. So, you know, you guys will see that from time to time if you're staring at price, and it just happens to be around a low liquidity point like now. Like that buy order we saw today, that came out of nowhere. Nobody was expecting that. I mean, I randomly tweeted gas is cheap, and then 4 minutes later, this person just obliterated the market. Like they just went, wow, it was crazy. Now this ties into what we were talking about Saturday axis, just being cash flow positive. What are assets? What are cash flows? How are they evaluated financially? And this kind of ties into, you know, what we were talking about earlier and how HEX has an infinite valuation. And that's just based on the fact that you can kind of determine what your pay rate is going to be from the system. Like it's not on anybody but you. And the controlling of expenses, as I highlight here, are key, right? But the system allows you to basically choose your expense, because I, for one, never opted to pay high gas fees. I never do, because I understand what the system's doing. And this is why people were like losing money and not getting the transactions done, because they weren't understanding. This is a mathematical function. This is not here to just accept your orders because you want to answer it. If this is a high traffic network situation, you got to pay the cost. If not, you're not going to get transacted. You don't matter. That's a fair voting system, because you're voting with your wallet size. And that's the name of the game. We're here to make money. So if you don't come with economic mass, you're going to get left behind. And that's unfortunately the nature of the business. But the good thing about it is you don't have to trade in and out. So, you know, that's really on you on how you make or lose your money. So that's the beauty behind HEX. It kind of eliminates the need to do all of that nonsense.
You're also not relying on counterparties to be performed for your cash flow.
Correct. I mean, you know, you really have to understand there's zero reason to come into crypto if you're just going to do the same thing you did in legacy finance. You just, I don't get it, but whatever. So asset is a valuable item that is owned, not leased or rented, but owned. And there's a reason why I'm going over this multiple times. This is very important information. And the thing to understand is that, you know, assets are viewed as an investment that yields a positive cash flow for a reason. You know, a bat is not an investment. A brand new book is not an investment. You know, it's not an asset. Sorry. A car is not an asset unless it's like a Ferrari, right? Like a 1 of 50 or something like that. Like you got to know what an asset is. An asset is something that yields a positive cash flow, and that either has to be during the life of you holding that asset or at the end of that point in time, or at the end of you holding that asset. So that's like something important to understand, because you can't pretend to buy a Beanie Baby and expect it to have value in the future, unless there's some market that I don't know about that exists where that allows you to like have Beanie Baby futures or something. Like, I don't know, whatever. But
it's like Pokemon cards. Like they've had a really good
like,
run the last year.
I never got into that.
It's like you can never predict when nostalgia is going to hit, because that's like a human, unknown human aspect.
Yeah, like what's the name of that candy that people still love? Sea salt caramel or whatever. That's one that people still love, and that thing is from like the 1900s or something.
Man, that's some good shit right there.
Yeah, exactly. See what I mean? See what I mean? Like it's hard for people to not love that. So
it's like the old saying goes: if it ain't broke, don't fix it. In the case of
that's a fact.
CDs at banks, well, it wasn't broke, so we just kind of ported it over and made it more profitable.
Right. Thanks for playing, guys. We'll be right over here enjoying the riches.
Legacy Finance. We'll be right over here making mad gains. See,
you guys enjoy the show.
Yeah, no shit.
Enjoy the show.
The
So
irony
yeah,
here is that you're like out here like literally every day you go into work, you got at least somebody on the other hand. You're like, yo, check this
don't
out. I got this sweet new financial product. It's called.
take stealing the customers one at a time. It's a beautiful thing, man. It's a beautiful thing. It's crazy. What are you
That'd
gonna
be
do?
so sick, man, to be doing that.
Ah, man,
Just
imagine.
one more, just maybe one more year, we see the dollar price point, and it's moving on to the Northwoods.
Northwoods is right. I mean, look, once this inflation lets out, there's really no telling how high this can go.
Oh God,
You know, like people have to understand that it's undeterminable because when you look at how this asset can be viewed, it literally has an infinite valuation. Like literally.
the system can produce money, and if we pulled up Dip Catcher's chart from earlier, you
All
could
right.
see, you could see what a whale would need as far as how many T-shares for how many coins the guy wants
That hold
to get
on.
a decent return, and he could basically get the amount of coins he needs to play the 90 to 120 days time frame and make a decent amount of money. If it was like home office or just a small family or just an individual with like a couple or 3 and 4 million,
Right, right.
some ETH whale. Like it could be anybody really, but I mean the opportunities there. I don't know why more people haven't jumped in. They just must not just simply not understand how easy it is to print trustless interest.
Well, for one, I think they don't actually know it exists because you got to remember, X is very gate kept. So, that doesn't help things. But this chart is the chart we're talking about, and it lets you know how many T shares you need per 100,000 hex in order to just maintain pace with inflation. So if you got 200 million hex, um, you need X amount of T shares during the life of your stake to maintain that level of inflation. But once that standard gets surpassed and you need 400, then you got to stake more. So that's the catch 22 there. And that's the thing about T-shares, right? And then this chart kind of tells you over time, this is the value proposition. It gets harder to earn interest out of the system, even though the system pays out, right? Because the system, again, is balancing that payout metric with the fact that it has to tip the scales over time. So it's very important to understand that there's a reason this becomes valuable. It becomes valuable because it pays out more. So it's a function of the compounding effect that, in fact, so it's very important to understand that because this system actually works inverse to what we're used to seeing. It doesn't work off of a yield curve. The yield curve is what prices the product. So that's why people say you need T-shares. It's very important to understand that this is literally the value proposition. This is the value of T-shares always going up. So you have to respect the value of T-shirts. This is why, like, I had no intentions of buying any more Hex until really next month, but this dip is too good of an opportunity to pass up. So I'm probably not going to sleep tonight until I buy some Hex. But that's just the seriousness of it because I have nothing better to do, literally. Like, what is more important than my future? Not getting up to work on time tomorrow. It's not that serious to me. It's not. That's just going to be there. If they fire me, they're just going to put somebody else there to figure it out. So it literally doesn't matter, right? Like, you got to outweigh priorities like that because that's real life, right? And again, choices you make today affect your life long term in a way that you couldn't even imagine. So it's very important to really weigh the decisions that you make. Do I really need to sleep right now, or do I really need to say that, stay up and wait for this gas to drop because I'm trying to make this trade, which is gonna allow me to accrue or acquire as many hex as possible. Because you gotta be in it to win it. Otherwise, why are you even playing the game? I don't know. People just do the craziest things. I mean, it's just a weird thing. I don't know. So did you know that when you own an asset that is extremely valuable, you have a lot of valuable assets. Think old family money, Rockefellers, etc. Uh, you do not need to sell them. You can literally live off of credit lines. And a credit line is essentially a fraction of your net worth. And if you're a very rich person, you're not going to need a credit line even at 25% of your net worth, because that's a lot of fucking money and you don't need all that money. So you're more likely not going to be able to get that, because the idea is that you can survive off of the bare minimum. You know, think $1 million if you're a billionaire, or more, you know, whatever the number is for those rich people. The point is a fraction of the number. And that's the point. And they have calculations behind. Like, I open these type of accounts all day. So they have a calculation behind it. It's a collateralized loan. It's backed by something, right? It's not like you're just getting money for nothing. But the key thing to understand here is that, number one, this already exists for Bitcoin. Number two, it's going to exist for HEX because it actually has a value proposition. Now, because it doesn't exist now doesn't mean it's not going to exist. Because trust me when I tell you, it will. Period. Why? Because it's a damn money printer. Find me another one, and then I'll say that that's the one, but it's not. This is the one. So this is what you have to understand. And the main line in this slide is that this is how the rich get richer and can buy more and more assets. They never actually sell the stuff that they own. It's very important to understand this. Very, very important. Cash flows, I'm not going to go into this slide too detailed because I'll let you guys read it if you want.
Yeah, I'm starting to run out of juice anyway, so let's get to these last charts up here. And
point is this chart, this slide, this kind of flat cash flow method. It determines value of an investment based on future cash flows. The present value is determined by using a discount rate. The discount rate is equal to the risk rate of or point of failure for an investment. So the higher that number, the riskier the investment. The lower that number, the greater the return on that investment. So if the risk is zero, basically the returns are infinite. Now, I showed you guys the chart of HEX literally 2 minutes ago. And guess what? The payout per T-share kind of enforces that, oddly enough. Interesting chart, is it not? I mean, it's one hell of a chart. One hell of a chart.
You got to explain this because it's pretty cool. What's going on here in this chart?
This is the payout per T-share in dollar terms. And all I did was I took the payout per T-share and multiply it by the closing price of each day. So it's literally the payout per T-share in HEX multiplied by the closing price in HEX for that day. And that's this line. So this is
what it's saying is we're almost near all-time highs right now for payout per T-share.
Yeah, I mean, this is basically
telling you're getting almost the highest interest per T-share as you've ever would have gotten.
Yeah, and it's going to keep floating higher.
And it's going to keep going up. So that's why we're always, you ask us how you want to stake. Well, we're like, you know, if you can, stake longer, because you're trying to save these T-shares into the time, so that as time progresses, everyone else has had to forfeit their T-shares, but you're still holding yours.
Correct, because you're going to be
your returns are much greater.
It's important to understand that the system pays out kind of like a bucket, kind of like a histogram. The longer you're in that bucket and the more people that leave, the more interest that you actually end up receiving. So it's important to stay in the system as long as possible, because the payout increases regardless. And the longer you're in, the more you're entitled to, because you're in the system longer. So your T-shares are going to generate more value over time because you're just in there longer. So the earlier you're in there, the more you're going to be making relative to anybody else. Nobody's going to be able to keep up by default unless they come in with the economic master match. So that's a differentiator. Very important.
Yeah, that, and then also, like, if you're going to stake for 5 years and your buddy's going to stake for 5 years, but every year you're going to end your stake, you're going to do one every year for 5 years, and your buddy's going to go 1 5-year stake. The single year stakes are not going to be able to even come near competing with the returns of the 5-year stake because of the compounding effect of how it works mathematically.
Not at all, because the stakes pay out 20% more every year by default, and I think the longer you go out, I think the max you can get is like an extra 10%. I don't remember the number. I think it is an extra 10%. But it's something like that. But it doesn't surpass that number. I don't think you can get more than a 30 max bonus or something like that.
It's nutty. It's pretty crazy.
Yeah, it is pretty crazy, because when you look at this chart, it really lights the room on fire, because what this chart is saying is that the dollar value of HEX divided by the payout per t-shirt in dollar terms for HEX is not even worth 100%, right? And we can see that because right now the price of HEX is 0.0079 cents, and I just showed you guys that it's paying out 4.5 cents. So that's basically you're basically getting underpaid by 7 times almost. Crazy. And in dollar, and when you divide them in dollar terms, that's the decimal value. So when you look at this in a price to earnings basis, which is exactly what this is really showing you, and you compare it to what the stock market pays or whatever, what it costs you to buy earnings in the stock market, what this is showing you is that it costs you 5.51 times the earnings to pay for it. So if the earnings are $1, you're paying $5.51. This is what this is saying. Whereas here, I mean, it's kind of hard to see it because of all the decimals. But if you multiply this by, let's say, 100, right? What you're doing is you're moving over the decimals 1, 2 spaces, and all of a sudden it's now 13 cents. Or I'm sorry, not 13 cents. 0.13 times, right? So that's a 100-time jump, basically. Now, I'm talking about the multiple, not the price. Two distinct things. The important thing to understand is that, you know, this isn't even at parity. The lowest point in time was 5.51. Not even at parity. 5.51, all-time low, World War I. Pretty crazy thing. So,
talk about a revolution.
Yeah, something like that. I mean, guys, this is free money all day, every day. And I don't really know how many other ways to highlight it, but I'm going to keep finding them. And I'm
No
going to keep
kidding.
showing them to you.
Hey, dude, you got to go on and do that correlation chart that you're thinking about.
Oh, yeah,
You said you were thinking about something cool for that.
Yeah, I'm going to do that. That's
I'm
probably
sure you got a couple other tricks up your sleeve.
Oh, they're working. They're working. You know, they're always working. But yeah, this is phenomenal, guys. You got to understand. You're looking at history here. I mean,
you're a part of it. Most of the 50 people watching right now are probably a part of it.
Yeah, for the most part, for sure. I expected so. I
If you're
mean,
not, you can easily get a part of it. Just take some ETH or some USDC, swap it for HEX, and start staking today.
Yeah, make it happen. I mean, I don't know if you have what do you call it? A ref link to show, but I have one. If any non-hexagons are watching and they don't have the Staker app, they can go to income.watch. You can download the site there or the app there, and you can start tracking your stakes there if you don't have a way to track them. It's a great application. It includes a chart. It's going to ultimately include a smart wallet, so you can actually buy and sell your HEX right there, stake and end your stakes right there, and a whole bunch of other cool stuff that I'm not even privy to because, to be honest, I'm not watching it. I'm just waiting for them to do their work. I'm not in any rush. I know when Steph and Firebun are done with it, is going to be a great product. Shout out to them. They do a lot of great work for the community. I hope to be able to contribute like they do one day. I mean, they've been just dropping bombs, man, since inception. It's pretty crazy. Those guys have, they just, I mean, HEX.VISION alone is a crazy site. STAKER.APP is crazy. HEX.LIVE is crazy. I mean, it's guys, we're crypto is just reached $1 trillion mark. We've got a long way to go. A long way to go. There's literally no rush.
Yep. This 2020 was the year that crypto went institutional, and it became like mainstream. But 2017 was when it became a reality that it was the future.
Oh, yeah.
This last year was pretty cool though.
I mean, I'm curious to see what's going to happen this year. I think it's going to be very interesting because people are really.
I think it's going to be a lot of mind games on the way to 150K per BTC.
Yeah. Oh, yeah. A whole lot of them. I mean, just look at how people got liquidated like crazy last week.
Yeah, people getting dumped on, dude.
Yeah, I mean, and yo,
I'm looking at these charts right now, and I'm finally starting to feel good about prices. Like Bitcoin's down like 15K almost, and ETH's down like $600, and
it's a beautiful thing.
Chainlink Wick down to 1250. I'm just so happy right now. Like y'all are probably sad, but I'm.
Yeah, I mean, hey,
actually, Hexicans are happy. Hexicans are happy, bro. We're up. We're green. We're like in the same tier as USD Tether and USDC.
Yeah, most Hexicans are happy because they know what time it is. But you know, some people are playing in external.
I know I am. I'm fucking sitting here, fucking printing money.
And I'm salivating, bro. Literally, literally salivating. Like, it's just crazy. I'm just strolling through the chat to see if there's any questions we might need to answer.
Thank you a lot, Marco. Wales is fucking badass, and I appreciate you too, man. You do good work, and I'll support this cause any way I can, and I'm sure he feels the same.
Oh yeah, I'm just out here to show the knowledge, man. That's all. Someone's constructing time machine.
We've been streaming for like 5.5 hours now, but I'm about to wind down for sure.
Yeah,
I bet Wales can probably go another hour or two though.
Stop throwing me under the bus.
I'm not throwing you under. I'm lifting you up, bro. I'm like, here. You can use me as a podium. I'm good.
Yeah, I mean, I love talking about this stuff, but man, it's just a lot. It's a lot because
it is. We cover so much, and I mean, it's always nice to have guests on because they always have something different to add. Yeah, it's always there. Then everyone has this really unique perspective. I love that part of this thing.
Exactly. Like
that way. You know, DivCatcher is really smart, and he builds a lot of cool tools. So it's
exactly like I never.
It's really nice having him on tonight too. So
I never looked at T-shares like he laid it out with that
blueprint.
With that to maintain the pace with inflation. Like I never looked at. I never even thought of that because to me, why would I even think about that? But it's a good thing to consider because you just don't know.
Dude, I honestly think you should take a look at that. Maybe not that programming software, but I mean, he's obviously got an idea of how to use that HEX.VISION data. You could probably apply it somewhere.
Yeah, I saw exactly what he was doing. It was actually pretty clear cut. I just hadn't sat down and messed with it yet. But he's using JSON.
Oh, you didn't have time between fixing the Federal Reserve's wire system and saving the world?
Yeah, right. Saving the world. That's a good one. Not at all. Not at all. No time. So let me see. Gruber's asked, he's got over 500 T-shares. Congrats. Once my stakes end and I restake, how do my shares decrease or increase? I want to restake some or most. So your T-shares will decrease. They will not increase. They never increase, in fact. And that's the value proposition inherent in HEX. And the reason is because when you end your stakes, what happens is that the system takes a factor of whatever bonuses you get, and they factor that into the division. And the division comes when they actually reprice the T-shares at the end stake function. So what happens is they take whatever that additional piece is, that multiple, that percentage, and they add it to the one, right? Because they're taking those T shares that you have currently, those 500 T shares, and they're going to take those 500 T shares, and based on however long you stake them, anytime those T shares expire or they end stake, better yet, there's going to be a little scaling that happens to that. And that scaling is going to normalize down. It's going to basically reduce down the quantity of T shares you're able to obtain for the same dollar value based on the compounding that you just did. Because that's the whole point of the system. The whole point of the system is to limit the ability to just keep extracting more than others without paying for that time. And that's the whole thing. So that's how T-shares work, really. As far as the end state goes and what's going to happen with your T-shares after they end. I hope that answers your question. Oh, my bad. I see Access. Damn, you answered it. My bad, bro. It's late. All right, let me keep going.
It's all good. We're on top of this shit. We got answers coming in from everywhere right now.
It's coming out from everywhere right now. Let's see.
You've been going for a while, dude. You need a nap. You need to rest some baby ass.
Oh, it's been a rough one. Let me see. Just intrinsic value of a T-shirt price going up. Well, we already showed that. So the more thing I asked was the intrinsic value of a T-shirt price going up. Besides it being rare, what other value is it given to the holder? I think we discussed that already when we showed that break-even chart. Because that break-even chart really lets you know if your T-share game isn't strong, you're gonna be falling behind the system in terms of what it pays out. And
100.
yeah, it's crazy. Just
It's true, dude. That's a really yeah, I'm glad we went over that one extensively because that's a very unique chart. I haven't seen that one.
It's very crazy. I mean, wow, right? Just wow.
Here's your cheat sheet for anyone who just tuned in. This is your cheat sheet for how many T-shares you need per 100,000 hex to be above average, basically.
To be
above the median.
Be above. Oh, is it the median?
Or I don't know how you say you're getting paid by the liquid holders basically if you're above that pink line. So if you had
that's just the actual measure of inflation compounded over time. So that's an actual
what's the link to that? Hex.cash?
Yeah, Hex.cash. I'm gonna put it in the show notes. /pound break even. I'm gonna put it in the show notes.
A cool little thing. If you're trying to figure out how many T-shares you should get, you can go check that. It'll tell you if you have 100,000 hex or 1,000,000 hex, how many you should have. It's just a function of right now that 1.72 T-shares per 100,000 hex. So if you're not getting that, you got to stake for longer, so you're getting that. Okay.
Right, for sure. AB writes, we touched on this earlier. Yeah, we're not trying to influence people to stay short at all. Definitely not. We're here to just spread the knowledge so everybody gets a piece of the pie because there's a whole lot of it to go around, luckily. And we're all fortunate enough to be involved in Hex at the early stages, man, because this is really better than Bitcoin. And I know nobody likes to hear it, but it's just the fact of the matter. And I was around for Bitcoin early days, so you're just hearing the facts. And a guy that was around and mined early Bitcoin BTC blocks, I didn't do that. He did it. So he fucking knows what he's talking about. And if he designed this coin and he says it's better than Bitcoin, well, guess what? It is. And guess what? I've showed you guys mathematically that it is. So, there's a lot of different ways to slice a pie. So, take a good look. Don't just take our word for it. It's there. Just look at it. It's very, very obvious. Compare and contrast. There's a lot of products out there in the financial space, and there's a lot of projects in the crypto space that are trying to catch up to Hex. There's a reason it's gate kept. Don't forget that. It's not because of Richard Hart. It's not. That's just the excuse that they use. That's complete bullshit. 100%. So ignore all the haters. This thing is going to keep fucking zooming. 2021, motherfuckers is going to get paid because that's how the system works. And a discussion. So that's just what it is. I mean, hey, you don't got to take my word for it. Look at the chart on the screen. Whatever. Again, it's all math, folks. This has nothing to do with me. Yeah, we're not about sharing shit here. We're just trying to share the knowledge, man, and share the wealth. And
Like honestly, I think with the perspective that I'm coming from, and maybe Wales, you feel the same, is that I missed out on Bitcoin in 2009, 10, 11, 12, 13, 14, 15, 16, and I got in 17.
Mhm.
And then I was in the game for the whole time since 2017, since the beginning, January, February, and I've never found, I guess until I found a video of Richard and going up against Eric Swall, I think it was, debating this new coin that he was building,
Mhm.
and the way that he couldn't give a good rebuttal, I just was like, Richard knew what he was talking about. You could tell that he had conviction in this idea, and then I looked into it. I was like, well, dude, everything seems to make sense.
Mhm.
So
Mhm.
took a shot, and I think that the reason why I'm here is because I don't want to be looking back thinking I could have got a bunch of more people in on life changing information,
Right.
and all it would have took was for me to turn on a podcast and like start talking to some people and maybe talk to a few friends from work or talk to some friends I grew up with.
Right.
It's like that's literally those people are so receptive to this. Like you'll find that non-crypto people
Open minded
like
as fuck.
will just get the information if you just explain it in a simple way.
Yep.
You
No
talk
fair.
about CDs that a bank that pay 40% interest and you set the term limit. That starts to raise their interest right away.
ASAP.
A CD you'd get at the bank that's giving out like 38% interest right now.
Correct.
No middlemen. There's no one involved, just you.
Hmm.
That's
Beautiful
pretty
thing.
powerful. And you get to set the term limit. That's like, wow.
It's a beautiful thing, man.
So this thing's gonna eat the world alive, my opinion. It doesn't have any competition, and
I mean,
for something else to come along, the impact and the weight that this network will carry at that point will
be
be big
different.
enough that it'll hold weight. It'd be like saying if Ethereum became a minority smart contract platform and Cardano and like 3 or 4 other coins popped up that did it better, and Ethereum was like a top 12 coin or something.
Hmm.
Like, I just don't see that happening for Hex because Hex is just getting going, and it's got enough of an advantage that it should be able to easily get to $1 or $10 before anybody can even come close.
All right.
Just because it's already providing yields for people
Yeah.
that are insane. Like that's the whole thing that I keep coming back to is it's providing income streams for people. Like you can look at in the chart and you can see that there is a constant sell pressure right now because so many people have made so much goddamn money on this coin
Yeah.
that they don't need all the hundreds of millions of coins. They're like, here, let me give everyone else a shot at this because it's insane, man, what this thing can do.
It really is,
So
dude. It's crazy. I mean, this is just powerful stuff. And to just touch on the OA, the OA again is a product owner basically. I mean, I don't know about you guys, but I don't see McDonald's putting their burgers in the trash and then asking you to buy them. So they're not gonna really make much money doing that. So they're there to support the price. They're there to support the staker. They're even there to really support anybody that owns a coin because again, they're not out there dumping it on your head like some other coins. So that's the answer to that question. um, this is a good way of looking at it. We are the new Federal Reserve. Makes me think of that Somali pirate meme and shit.
mhm.
Like, yeah, we're the ones doing it. All right. Crazy how there could be a hedge fund whale board is fucking on. Yeah, I don't really, like, I don't really care if there's any whales in it right now. Like, it really doesn't matter if there's any whales in it right now or not. It works. The people that matter are outside of crypto. Like, people have to just realize that. The people in crypto are irrelevant, entirely irrelevant. They're not going to be the ones that bring economic mass and make prices go up in crypto. So you guys got to get like that out of your head. Completely irrelevant. Like people outside of crypto are the people that matter, not
Yeah,
people.
we're at a unique crossroads here where we're in the middle of a Bitcoin bull run where Ethereum is also benefiting greatly.
Yep.
And so because of the network effect of those two networks doing so well and so much
Yep.
institutional attention and just retail attention, that if Hex can even take 5% of that energy, that would be enough to take us way over $1 this year.
Crazy, dude. Crazy. I mean, yo, all the inflation coming out of the system. Like, once all the people are done selling, what's left? Everybody's buying all those coins that are being sold. Like, they're being bought, and then they're just not laying out there in the street. Like, they're being bought up by somebody.
Oh, dude, the buying is insane.
I mean, the buying is nonstop. That's the thing. Like, when you look at a short-term chart,
At any of these prices below penny, the thing is being bought. It's just that there's such a supply redistribution going on that we're selling down. But other than that, like it's like almost like a seesaw. It goes down 20%, or it goes down like 10%, up 10%, down constantly. It's brutal, dude. The chart looks like literally like it's a bipolar chick or something.
Exactly. That's crazy, dude. Appreciate the love, people. Whereas only airdrops. That's funny. Shout out to Marco, brother. Thank you for joining the stream. Thank you everybody for joining the stream. We're gonna end up wrapping it up right here. I hope you guys took something from the site, or from the stream. We'll be doing this again soon. Not sure when, but we'll be doing them again soon.
Yeah, just keep an eye on Will's Twitter. I'm sure he'll post something day of or day before. So
yeah, just be on the lookout. My Twitter is at Wales Only with the number 1 at the end, and HEX.LIVE.
Twitter is at HEX.LIVE.
Yeah, just like
Word.
it sounds. And thank you guys for joining me as always. I hope you guys had a good school session, and now school is out. Have a good rest of your day, guys.
Thanks.